Yo, what's up, everybody? How's everybody doing?
What is
Can you all
good?
hear me? Can you all see me?
I don't. Has EV just crashed?
No, why?
My screen on EV is frozen.
Well, I think that's more you than anything else.
Can you
You
see
look
me and
fine.
hear me?
Yeah, I can see you. Can you hear me,
I
mate?
can. I can hear you and see you perfectly.
Okay. Well, then I think tis not a problem. Do you think? Tis not a problem.
How weird! What a great start.
What an amazing start to the day. All right,
Oh
how is
yes.
everybody doing? It is April 1st. It is April Fool's Day. Let's see how many fools the market can make of us. Don't believe
Oh, by
anything
the
that you hear on the news today. If Trump tweets anything,
way, yeah.
skepticism across the board. I'm going to be a skeptic across everything that is said today. Screw it, it's April Fool's Day. We're not falling for any of it whatsoever.
It is the official ancient first. So it is Happy New Year to all of those out there that are superstitious when it comes to the real New Year's Day being April 1st. Hence why, April 1st is called April Fools due to the fact that New Year's was actually changed to January the 1st from April 1st. So those who thought it was still April 1st was a fool.
Okay, thank you for giving us a little bit of history there.
You're welcome.
But because it's April 1st and you're giving me this information on April 1st, I'm going to call BS and say I'm not believing any of that.
I'm not BSing you, but yeah, I can understand why you think that that's a prank.
Yeah, I mean,
Right, I'm gonna refresh. I'm gonna refresh my page because I literally can't see
yeah.
you. Unfortunately, it's probably it's probably a good thing I can't see you because but we need a screen.
What an asshole.
Kidding. Right, I'll be back in 2 seconds.
No problem, dude. No problem. It's just, yeah. Remy's telling you to refresh, mate. All right, and then they were just us. All right, first and foremost, I'm going to say hello to everybody in chat. We'll just take a very quick little gander at who's in and who's already liked, who's already subscribed. We've got Sela saying, first to comment, well, congratulations to you. Happy new month, traders. New month for all. Welcome in live. We've got Louis saying good morning to the team. We've got Eugene saying good morning as well. Eugene saying the web terminal is not working. It says the server is not available. Can you check this? We have not had an issue with, or I have not had an issue with that this morning. Nope.
Yeah, I've
No issues. No issues on my side. Just make sure
neither.
that on your side, Eugene, all of your stuff is as it should be. On my side, it is working perfectly. We've got we've got Henry in. Good morning. We have Ernest. Good morning. We've got LJ Docklock. Yo yo yo. What's up?
Good block.
Henry saying go to bed. Scribble saying good morning. And Azrael Trade saying good morning to all. All right. Good morning to everybody that is in already. All right. Let's have a little quick gander. I'm going to share a screen.
Can you see my ugly mug on my back?
I could see your ugly mug the whole time, mate.
Okay, fair, fair. Well, I can see that fantastic face of yours. So
Oh,
I'm
don't be
back.
that guy. Don't be that guy. When I insult you, you be nice to me. That just takes all
Well,
of
I
the
kind of
fun
got to
out of
make up for it,
insulting
given the
you.
fact that before I refreshed, I was kind of, I was kind of that guy. So I thought, better be nice to him. There's got to be balance. There's got to be yin and
Oh,
yang.
okay. Good cop, bad cop. All right, get it.
Yeah.
Understood. All right, so let's have a little quick gander at what news we're going to have today. We've already had quite a fair few yellow folder news that came out across Euro and CHF. As of today, we do have the Euro unemployment rate, yellow folder news, that's going to be in at 9 GMT. We do have ADP non-farm employment change. We have core retail sales month on month, as well as retail sales month on month for the US. That's going to be at 12:15 and 12:30 GMT respectively. So probably going to have a little bit of movement here. But I think there's also the potential for a Trump tweet. The tangerine tweet terrorist, known as Trump. Whenever he tweets something, it blows up everything. He should be sending out some information today, methinks. And then around 2 GMT, we have ISM manufacturing PMI as well as prices. Prices being a yellow folder. Now, if you are trading high stakes, you have a 4-minute window in which you're not allowed to open up new trades. However, if you have the hypergrowth, you have the pro growth, or the bootcamp, you can trade to your heart's content. But do trade responsibly. You know, let's not go too crazy. But yeah, that is today's news so far. Mate, are we in a trade already? I want you to be in a trade already. Come on. And the goal today is to have...
Yeah, fair. No, I'm not in a trade yet. GU looks quite nice, and I feel like I've missed my opportunity on NASDAQ, unless we can pull back now for some selling opportunity.
Okay. What are you looking for on pound?
Preferably a sell, but if you move up onto the 15, there's some nice buying opportunities, but I don't know if I want to see a move lower for buys.
Okay, so let me just clean up my chart here. I did not clean up my chart at all. So we have this trend that got broken yesterday. Here. Got a very, very, very deep retest. It's a person. Look at that. Anyway. Broke it yet again this morning, and then very, very nice retest already to try and push up. So I kind of see what you mean in terms of a potential push up higher. We do have a 15-minute base, if I can just zoom in a little bit.
Yeah, which we've actually tapped into as well.
We just tapped into it, and it also aligns with the highs of yesterday. So you basically had a break of the highs, a retest now of yesterday's highs. Then a potential run-up. However, quite... Oh, misclick. There we go. Quite a attempt to try and push price lower. Let's look at the 5 again. Just remove that.
And if you look at the 5 as well, that high, which has come actually, there's a consolidation above the 32,824 level, which was a high put in from the 30th of March. And we've taken that as well and consolidated on that high after then dropping. Before then dropping.
Yeah, no, I see that.
Yeah, I'm looking at it and I'm umming and ahhing like, you know, isn't it? Does it want to buy? Does it want to sell? Is it going to sell off due to the fact that we've had that high get taken, and now on the 5-minute we can see that we've consolidated, broken structure to the downside, pulled back into the structure point and continuing slowly? Or is it going to respect the 15-minute where we've had that beautiful base, we've had that break of that trend line to the downside, we've also got that bullish momentum? So I don't know.
Yeah, no, I'll see. As of right now, we're still respecting this 50 EMA. We do have the reaction off of the base. It was a strong one, but we did not have the nice follow through as yet. So there is still that potential for it. However, we can potentially still just absolutely start picking up from here. I mean, what does the 100 and the 200 EMA? It is expanding on the 100 and 200 on the 5, which is not bad. Maybe a little bit deeper of a test maybe to this point down here. We'll see. We'll see if this candle right now closes bullishly. So we've had the wick basically off of this segment over here. If this closes bullishly, it's a higher low. So there's a low, this low over here. So it is definitely a higher low. It could potentially, but then again, it could also just kind of like chop, you know, just kind of like be sideways.
Literally that. Yeah. It seems to be very choppy at the moment. What's worrying me is that we've got news out at 1:15 and 1:30 and 3 p.m. UK time.
Yeah.
So it's a little bit sort of like I'm in an hour over that because there's some quite high impact news as well. Truth be told, I kind of wanted to be trading before today. I wanted like Monday and Tuesday to have some nice trade opportunities, but we didn't seem to get that, which is a real shame because now like Wednesday, Thursday, Friday. Well, obviously I don't trade Fridays, but Friday's NFP day for those who don't know already, and then Wednesday, Thursday are just high impact news days. So I don't know whether or not I'm going to get my opportunities to trade, but we'll see. I think GU is just going to be chopping around and just super consolidative now, probably until later on, just prior to New York.
Yeah. We'll see. We'll see what it wants to start doing today. I mean, it was a decent attempt to try and push up a little bit, which is pretty good. So, yeah. Anyway, I see there is some chatting going on. Cosmic saying, won an account in YouTube giveaway a month ago, contacted support 10 times, still no reward. All they say is we're working on it. Really, if you can't process an account for a month, you should be ashamed, Fivers. That's kind of rich, considering the fact that you won an account, mate. Like, it cost you nothing.
And free.
given all of the stuff that we've spoken about, all of the external issues that we've had, we've only ever asked for you to be patient. I think you're the one that needs to be ashamed, mate. Like, you're getting something for free, and you just need to chill, just relax. That's. And I see you've dropped even more. Life support is getting worse day by day. They don't even know the basic rules. I contacted them, been weeks, talked to support. Best they do is, sir, please wait for 24 hours to 48, and then same again, process after 48. Yeah, I mean, just wait. That's all it is. Just wait.
Dude, you're literally getting a response. What more do you want? You know, or do you want them to cook you a breakfast and say we're sorry? Like, come on, man.
Yeah, let's just have patience. Overall, just have patience. Because otherwise, what we'll do is we'll just stop the giveaways completely. Just stop them. If you're going to complain about it, then we'll just stop it. How about we do that?
You're a top tier firm and can't solve issues for a month. What type of joke is this, dude? The joke seems to be internal with you, brother. You know, as you said, you know, we're a top tier firm. We've got 0 issues. All the issues that we are dealing with at the moment are actually external that have affected every firm pretty much. And we seem to be continuing to, resolve at the fastest pace possible. And we are still top tier, even when it comes to issue resolves. So, Cosmic, brother, shut up. Simple.
No, I mean, it's
we're
simple.
We're not support. We're not support. So, simplest thing is, dude, nasty comments like that, you're gonna get a nasty response. Shut up.
I can wait. Yeah, like Stefan is saying, I can wait a month for a free account. Yeah, like
literally.
Here's the thing. Your name is in a database. Like, all of the winners, that information has been forwarded, and you're going to get your account. But if you're that impatient, maybe I should talk to them and have them revoke your account specifically.
I'll tell you what.
Just to be that guy. Oh, and by the way, sorry, Will. We've had people try and scam the system. By the way, sending proof that they won an account, but it was edited information, because I can go and look at all of the emails. Yes, yes, really. That have tried to dupe the system, saying no, they want an account. That same thing as Cosmic is doing now, also sending emails and whatnot, saying I've been waiting a week, I've been waiting a month, blah 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 blah, that kind of like stuff, and then they show the evidence, like a screen grab with doctored information, forgetting that I was the one that ran that competition. I have all of the emails saved. I have all of the evidence. So all I have to do is just literally go and see, oh, okay, that name, go and check it. Oh, no, did not win an account.
Yeah, it's so funny, man. Like I was saying, there's people that have been waiting for years to win on accounts. Some people have been so unlucky, and then you get people who, look, Cosmic, potentially you have won an account. You are one of the lucky people that, have won one of these accounts for free.
Yeah, dude, just chill, just relax, all right?
Oh,
and
man.
to spam and then be like, oh, because I'm not receiving my free item, I am now going to make a boo-ha about it and throw all of my toys out of the cot. Dude, just relax. That's all I'm just going to say. Anyway, back to the good old fun hand stuff. You'll see that we have a new layout here at the top. Yeah, Ron Crypto, maybe I may just go and re-roll his. Anyway, you'll see that we have a new layout at the top, and this layout is specifically there for the Discord week, Discord month. So the whole Discord month, this month, the month of April, is the Discord celebration month. If you haven't already, get yourself into the Discord. They are having some pretty freaking awesome events that they're going to be having. So they're going to do exclusive community competitions. They're going to do weekly activities that has challenges where you can win prizes. Then they have the 10-year self-reflection raffle. So get yourself in there as well in order to win some prizes as well. They have live Q&A panels with the Fiverr staff. So it's specific like segments that you can literally go and ask whatever question you've ever dreamed of, and they'll probably give you as good of an answer as you'll ever receive. And then also they have the performance coaching team, which is Richard Wells. There's going to be a collaboration with him as well this whole month. So in order to get into the Discord, you had to have previously purchased an account, which means that you get lifetime access, or you can go now, if you haven't already, purchase yourself an account. Top left corner of the hub, you'll have a Discord button, and you can literally just click there and get into Discord access. We have over 30,000 people in the Discord. We have all kinds of cool rooms where people are having discussions between themselves. You have probably the best moderators on earth for a Discord stream as well, or Discord server as well. Mondays through to Fridays, we have Discord sessions with Coffee with Traders is what we call it, where 3 days a week we have Victor, Monday, Tuesday, Wednesday. Thursday and Friday we have Richard Wells that has a call, and then on Fridays we have LJ and Akram, who is known as Void, for those of you who don't know, having a call on Friday where you can win hub credits, you can learn new strategies, you can just have all kinds of information, just fun, talking, being a part of the community, all of that available to you if you've purchased an account before. And the size of the account doesn't matter. You can get literally the cheapest account. If you've purchased it once, you have lifetime access. So there we go.
Yeah. Azrael's saying, William, did you take any trades this week? No, brother, I haven't taken any trades this week. It feels very boring. I know we're only Wednesday. We still got another 2 days yet of trading for myself. But no, unfortunately, I haven't seen any opportunities, taken any trades this week whatsoever. There's been a couple of opportunities that have presented themselves, but they've just not been as nice or as opportunistic as I would have liked to have seen. So we'll see. It's the new month now as well, and I have got some good news. I have officially finished last month break even. So we finished our losing streak of 2 months. So we had a 2-month losing streak where I lost about 4%, which really sucked. But nonetheless, it is what it is. Last month we finished at break even. And the reason I say break even, because we did actually finish up. I finished up about $413, $96 commission paid. to the trading tax man, and then profit overall was $317 up for the month. Now I know that sounds awful, and say, "Well, how are you proud of that?" I've had some decent losses. 200, 600, average around $200 to $500 in losing. The rest are all. In fact, I've had 1, 2, 3, 4, 5, 6. I had 7 losses this month. All of them around just under or slightly over a 0.5%. And the rest have been winners. The rest have been like break-even winners or some nice little winners around one-to-ones. I actually watched a podcast of someone saying if you have had your best trading month in the first 3 months of January, he said there's a good chance you're not going to be profitable because the price action has been garbage. Now, I think that was, I feel like he was just almost venting because he hadn't had much of a profitable couple of months. But nonetheless, kind of agree with him. I've had some break even January, February. So even though it's not good profit last month, it's still break even. It's just out of the woods. So hopefully now April we can start smashing out some profits and some money.
Yeah, no, let's do that. So Cosmic. So you're saying I'm reacting like a clown in front of hundreds of people. Maybe I am acting like a clown. However, the fact that you're coming on here and acting as if you are entitled is kind of annoying. So I didn't say I was gonna revoke your account. I said maybe I should. Obviously, I can't do that. Like, I have zero powers to do that. So I was being facetious. Now, the idea is just that if you think I'm acting like a clown, that's fine. All I'm saying is have patience. And if you don't have patience to wait for a free account, what kind of patience are you going to have as a trader when things don't go your way? And I've said this every single stream for people to have patience. Because everybody is so quick to jump on us and shit on us from such a height that it's kind of weird. And the more we tell you that some of the stuff we have no control over, or if I tell you that it's an outside issue, you just don't believe me. So you're going to believe in any way what you want to believe. So go ahead, do what you want to do. I'm just going to keep saying the same thing. Have patience. Be patient. You will get your account. You just need to wait. That's all. We've established so many times for the last few weeks that there's backlog issues. What more do you want? Must I come physically to your house and hand you your thing and say, here you go, here's your item, congratulations? You want that? No, just like everybody, there's like nobody gets preferential treatment. We're all under the same cloche here. We're all on the same boat. If there is a delay in something, it's a delay for everybody, ourselves included. And all asking is just patience. That's all.
Literally that. Dude, have you seen NAS? I know that you trade NAS and you like the NAS. Are you looking at trading that at all today? Like right now?
We've had a bit of a double top, like almost an M.
Yeah, it's the only issue is that I'm seeing is that we've tapped into this little zone here, and we've wicked into it.
Yeah. As of right now, I'm just gonna wait for it because we were very, very bullish yesterday, and Tokyo session started out a little bit flat. We had a nice little flat section from about 2 o'clock this morning to about 4 o'clock, where there was very little that was happening. And then we got like a little bit of movement pushing price up higher and flattened out again at the top, and then had a volumetric reaction pushing lower. So I'm kind of like just going to sit on my hands and wait a little bit. The London session hasn't been the best recently. We've gotten a lot of our directional movements in the New York session. So
yeah, I've been noticing that, which is really frustrating because I can't trade the New York session. So I'm kind of hoping now that once I'm home, because guys, I got good news. I'm home end of next week, so not this week. Not so next week will be the last session, last time that I'll be trading and live streaming in Hong Kong. So commencing on the 13th, I'll be back in the UK. I don't know if I'm going to be back in my home setup. I think I'm in England for a bit, and then I'll be slowly dwindling on down to Wales.
Nice. I just saw this comment over here. Azrael Trades asking, Richard, what about your last month? So last month was actually really good for me. I am up for the month alone, net profit 4.32%.
Dude, that's sick. That's super good, man.
Yeah, so I'll bring it up here. So 5K account. I'll just bring my screen up. So for this month was $221.77 with $5.42 in commissions for a total of $216.35. So a 5K account, every $50 is 1%. You'll see here that for today, I'm going to be risking 0.5% with my 4 take profit points. I'm going to wait for something to line up, and then I will drag my trade in the way that I want to have it, and then I'll take a trade. But for last month, 4.32% up for the month, so not bad. And then I have a few other accounts as well. One of them has slightly less than 4% up. There was a day that I did not trade with the copier over onto that one. And there's another account that I have that is roughly the same, roughly around 4% as well, up for the month.
Yeah, that's sick. Yeah, big congratulations, man. That's awesome.
Yeah, so not a bad month. Not a bad month. Runner is asking, is financial juice okay for sudden news from blondes? From blondes.
You know, I was literally just reading that, and I was like, what?
Yeah, I think financial juice is pretty good, especially if you consider how quick they are with releasing their information. Whereas Forex Factory is used more for, like, let's say,
forecasting the news.
Yeah, but I mean, you still have that with financial juice, but like I meant like for the Fiverr's trading rule, the red folder trading rule. That's why we use Forex Factory. Forex Factory is fine, but financial juice I feel like has more information. It's a little bit faster with its release of its data, but overall, it's good.
Yeah.
So sudden news from blondes, yes, it's good.
Yeah. For news releases, like sudden news, like breaking news stuff that's just recently come out. Forex Factory is okay. Financial juice is the best in my opinion. When it comes to actually like looking at the news outlook for the day, for the week, for the month, whatever that may be, trying to predict and forecast something, then you cannot go wrong with Forex Factory in my opinion. It's just aesthetically pleasing. It's a bit nicer. Dude, EUGU. Bullish.
Mate, this move was because of where is the? There it is. Was because of this Iranian. The Strait of Hormuz will not open, so that news that came out. So that was 42 minutes ago. If you go and retrace back, you'll see it's roughly around that time that we had here. So. If EU and GU is now suddenly bullish, what is the DXY doing? It should be dropping, yes. And if it's dropping, then there is a potential for us to see gold. Where's metals? Gold should be picking up.
It's say gold. It's not picking. It's within a range still though. That's the issue with gold.
Okay, so we reached the 47 and we reached the 4732, that high wick over here on Friday the 20th. So we've already swept that. So if we're going to continue pushing up, I'm just going to go to the hourly on gold. If we're going to continue pushing up from where we are right now, we have a small little area of consolidation over here. Actually, we do have a base right there that has already been reacted off once. So there is this area that is 4861 to 4900-ish. Then we have this area of consolidation right over here, which is just above that point. That is at 4970 to 5044. And then from there on, we're going to start looking at trying to get back to all-time highs. We do have swing points over here, which is like a little bit of a higher point of interest as well. Yeah. So if we do break through 5044, we'll go up to 5222 potentially. There is some price action over here that's a little bit wonky. Maybe this. Yeah, this area is also pretty good. So these are the potential areas to try and push up. So this one is consolidation. This is a base. This is a breakpoint. Where's breakpoint? Breakpoint. And this one up here is also a breakpoint. Where's breakpoint? Yeah. So breakpoints to me is just supply, demand, resistance, support. It's acted as both. So it was a point where the trend was broken, or a trend continued, or came back to pushed lower. So it's a high interest area. So you can call them points of interest, you can call them support, resistance, doesn't matter. You can add whatever. I just call them breakpoints because that's usually where the price breaks either the downward trend or the upward trend and then reverses, or it breaks through it, retests, and keeps breaking through that point, creating an area of interest. So if price carries on picking up, that is what I'm looking for. So this channel, if I go down to the 5 minute, the channel that we had drawn, I'm just going to extend it a little bit. There we go. We have broken above this morning, pushed back in, came back to the 75 percentile portion of the channel, broke up again, retested it, and it seems as though it wants to carry on pushing up. If there is a short-term area of interest, so maybe this, come on, this section over here, and potentially the highs of, actually, let me take the whole segment. Let's do this. For us to potentially come and test. So 4784 to 4800 should we continue bullishly on gold.
I think we can, but I think we need to see like a nice break first.
Yeah. So this one no longer, this one. So all of these areas here, I'm just going to clean it up just so that if we do look for another area of interest, we do have the highs here that has a little bit of a consolidation. So that segment, if we do come back to it, yeah, if we do come back to this area, there is a potential chance for a reaction. So breakpoint. Do you have any hourly bases? We had one base that got reacted off right here already. Oh, and this breakpoint happens to be a base as well. So I'm just going to call it a base then. So we'll do that. So yeah, if we do start breaking lower, we need to break back into this channel. If we want to get like a nice deep retracement, probably around this area, because that's around the 50 EMA, as well as this base, which is also a breakpoint because we had multiple reactions in that area. So if we are to have a pushback, probably down to here to try and pick up, to try and push higher, if we do get a bit of a pullback. Otherwise, it's going to be all bullish.
Yeah.
Bullish movement, bearish candle.
Skrill saying maybe a retest at them highs. He's saying, I hate how it's easy to see though. What's your opinion on that? What's your thoughts on having something that almost feels easy?
I mean, I kind of get what he's saying. Like, it feels like it's a red herring. It feels like it should be harder. Like, why is it so easy to see it? This is not normally how it goes. Like, I don't always see exactly the potential, like, move building up. So maybe it puts you into a false sense of security when you see something very easily or, like, very quickly. What I would say, however, is this, that there comes a point in your trading journey where you are a lot quicker to the draw, like very quickly. You'll see something and you'll know, this is exactly what I'm looking for. Now, obviously, it's all to be scrutinized because it's just speculation, because you don't quite know whether or not it's going to have the reaction that you anticipate it to have. However, you start picking up the patterns a lot faster. You start figuring out, hey, okay, this is definitely something that I've seen before, and you're much quicker to pick up on that. So I don't think it's a negative thing, but I can see how it can be perceived in a more negative way. That you're kind of like, oh, this is a false sense of security kind of like thing. What's your thoughts, mate?
Yeah. Dude, I completely agree. I know what you mean, but the same. It's such a complicated one because it depends where you are in your stage of trading. If I'm a complete beginner trader and I've learned something on the internet and I'm looking at it, I'm like, oh yeah, that's so obvious, it's right there. Then usually it'll be under false pretense. I'll look at it and I'll be like, yeah, okay, this is hindsight now. This is probably too good to be true. That. I think there's an institutional trader there that actually said, there's a lot more profanity in it, so I'm not going to go saying exactly what he said, but it was basically along the lines of if the entry is easy, the markets are about to make you their bitch, basically. And it kind of annoyed me listening to that, because I kind of thought to myself, trading is easy. But it's easy because it was hard to get to that point. It took me a lot of research and testing and confidence and psychological work to actually be able to execute with ease. And now I'll look at the markets and I'll be like, oh yeah, I like that. That's a nice little trade setup. I'll think about it a little bit and then I'll enter and it'll either hit TP or stop loss. Simple. But that wouldn't be easy to any other person. It's only easy to me because that's my strategy and that's what I've tested and spent a long time doing. So when it comes to like hating something that's easy, as long as you've tested it and you've got data backing it up, don't ever criticize yourself for being easy. Don't ever doubt yourself for it being easy. Usually those who tell you that if it's easy, you're doing it wrong. Usually that's because they're either unprofitable or they've not spent enough time in the markets, or maybe they've not got their own strategy. I think that would be my final answer. Trading to me is easy, but if a beginner came up to me and told me trading was easy, then I'd be like, oh, okay. It's probably because, you're probably going to lose some money soon,
I know what you're saying, like, but like
it's one of those difficult ones.
Yeah, there's a side of me that's just like, oh man, if only it was that simple. If only there was that correlation of if someone said, oh, this is easy, and then it equated to them losing an account versus saying it's easy and them actually finding it freaking easy. Like it's so difficult for me to be like, which one has it better? I just think that in
Hmm.
terms of you can complicate things as much as you want for yourself. You're in charge of how complicated you can make a strategy. Trading itself is complicated. It's a complicated thing. I mean, just listening to LJ and try and pick up on some of the stuff that he's talking about, you realize that it's very in
Right.
depth. There's a lot of information that is not forward facing. You kind of have to
Yeah.
delve deeper behind certain concepts. So trading is a very
Man, I've been
difficult
in the
and very complicated thing. But how difficult and how complicated your strategy is, that's completely in your hands. Like how
yeah,
complicated you can make that. So yeah, to me, I don't know. I don't know
100%.
how I feel about
It,
that.
it's Yeah, so trading in my experience, it hits in waves and it starts off really hard and then it gets really easy. And then I think a lot of people start realizing, and that's what I love about this comment, because I think a lot of people start realizing that trading is easy and they hear people saying how hard trading is. But because it's now easy and they've got a strategy and they've got confidence in their strategy, they're like, this is easy. It shouldn't be easy. I now need to make it complicated. And they self complicate. So they end up trying to make their strategy complicated and in depth and confusing. And it doesn't need to be. I've been in the markets like around 8 years now. And I listen to LJ and it still baffles my brain. I'm still
Yeah.
like, me and Rich, sorry, me and LJ did like a bit of a solo session the other week, and I was tired coming out of that session. I was mentally bloody exhausted. But LJ was just chatting. LJ was just like, oh, yada yada yada, this that and the other. To him, it's easy. To him, that is easy. Now, if he listened to some people and was like, oh, trading must be hard, he'd go and try and find a way to overcomplicate it by making it confusing and then potentially, limit himself. But to him, that is easy. But to me, that is hard. And I think that's where people go wrong is understanding, there's confidence in your data. And it's actually a brag to have a simplistic strategy. Me now, I love to call trading easy because not only does it really trigger some people, like some people, I've told you guys that I've had not arguments, but I've had debates on the rugby field when people have said to me, "Well, you're a trader, aren't you? Oh, this and the other, it's a scam, yada yada yada." And I'm, nah, it's not a scam. It's yeah, it starts off difficult, but it's pretty easy when you get to know it. And they have been so triggered. They're like, "Oh, well, it's not easy, is it? Like, it's not easy at all because like I've lost like 3 grand in trading." And I'm like, yeah, that's why you find it hard and I find it easy, is because you've probably given up and just, done the stereotypical route, instead of trying to learn the process. And I think being able to understand that it is going to be difficult, but eventually it will be easy. And once you hit that stage of being easy, slow down and be proud of the fact that you've made a difficult thing easy. Same goes with driving an F1 car. An F1 car is a very difficult thing to drive, of course. However, Lewis Hamilton is going to find driving that F1 car significantly easier to I am. I'm going to find it so much more difficult to drive that car. Go jump in an aeroplane. I'm going to find flying an aeroplane almost impossible. I'm sure I could try and work it out eventually, pressing a few little buttons, just mashing the dashboard and see what I can make happen. But that's no different to traders in the beginning of their journey. Like traders just mash buttons and hope something happens. No different to if I jumped in an airplane, mashed some buttons and hoped for takeoff. I may take off, but eventually I'm going to crash because I have no idea what I'm actually doing. A pilot would look at me and go, well, it's easy. You click that button, you click that button, you click that button, and then you flick that, and then you do 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 that. Simple. And I'm just going to look at him like he's speaking Japanese to me. But nonetheless, to him, that's simplicity because he's had years of experience doing it.
Yeah, and that's the difference. That's why I
Mm.
said earlier, you're gonna look at the charts and you're gonna feel that false sense where you're like, am I improving, or am I just seeing stuff that isn't there? And
Yeah,
it's
have confidence
play with
in
your
yourself.
yeah, it's gonna play with you a little bit, but like building that confidence is gonna come from when you've marked it out prior to it happening, and then just saying this is what I think is going to happen, instead of being like, okay, so I think we're going to move down to here because I'm seeing this pattern is forming up. It doesn't mean because it doesn't reach this point that you were wrong and that you're like, you don't know what you're doing. It's just there is a degree of success on any pattern that you're recognizing in the market. The idea is to see how often you can recognize that pattern before it's completely played out, kind of. That's how you build that confidence. And it's the confidence to stick to your plan. It's the confidence to follow your back-tested data and that kind of like stuff. That confidence is tested every single day. Because if you're going to take a trade and it's going to lose, your confidence is going to get hit. That's why we say make it process-orientated rather than results-orientated. Because if it's results-orientated, you're going to base your confidence and your ability to trade and say, every time I lose, I'm a horrible trader. Every time I win, I'm the best trader on earth. But that feeling, that good feeling of I've won a trade, it doesn't last as long as the negative side of you losing a trade if you are process orientated, because then that negative feeling is expanded upon constantly, where the positive one just kind of like chips away at that negative feeling. Whereas if you're process orientated,
Do you know why as well?
If you're process orientated, then the idea is just that you're removing that point for you to say my happiness and my ability to trade and my confidence is based on outcome. Then it just takes that out. Anyway, you were saying.
Yeah, do you know why that is as well? The human
Explain.
brain is actually programmed to actually acknowledge negative emotions, negative things, negative impacts. So back when I was learning how to fight, my coach would say to me, he was like, "Will, we're not programmed to be punched in the face." And I was like, I found it funny, and he goes, "Ha ha ha ha," but seriously. And I was like, "What do you mean?" He was like, we are designed to run away from like being punched in the face. We like boxers have to train themselves to stand there and open their eyes and look at a fist coming full force to their face and be completely okay with it. Our brain is completely wired to do the opposite of that. We don't want to be punched in the face. So when we've got to program our brain to accept that. Same goes with the markets. We've got to program our brain to do something it doesn't want to do. And there's a very in-depth psychological reason due to evolution than why we are like that. And it's so it doesn't happen again. And if something happens to us and it's a negative emotion, we remember the negative for longer than we remember the positive, because the positive hasn't negatively affected us, obviously being a positive. Whereas a negative emotion has affected us to the point where we don't want it to happen again. So the brain is like, we must put this into the filing cabinet to make sure that this never happens again. And that's where trauma comes from. So trauma actually comes from the idea that, if something happens to you, your brain has like stamped it into your memory and into your acknowledgement. So if something's remotely similar to that happens again, your brain is going to be like, whoa, we've been here before. Hang on a minute, scroll through the filing cabinet. Here it is, losing money. Or here it is, if we take fair value gap buys, we lose money, or if we put, I don't know, if we go to the sea, we end up drowning because maybe they've fallen in at a young age and they nearly drowned, or they panicked and they got trauma from it. So whenever they go to the sea now, their brain is saying, this is dangerous, when actually they've gone to a swimming pool several times before and they've had a great time. They've gone to a water park, they've had a great time. It's not so much of the fact that, the good times they don't remember as much as the bad times. So when they go to that sea, they're like, oh, this is what gave us trauma last. Whereas what we've got to do is trying to understand that the same happens in the market. We hit stop loss. We give ourselves massive negative sort of affirmations, basically saying we can't trade, we're crap traders, we've got to stay away from this, we can't do this again, we got to quit, we got to stay as far away from this opportunity as possible. No different to how a boxer gets in the ring, gets punched in the face and goes, I really didn't like this, I'm never getting back in the ring again, I don't ever want to be punched in the face again. We've got to rewire our brain to say, I love being punched in the face. I want to punch them back. I love taking a stop loss because it gives me opportunity to come back at the markets and take money from them next time. We've got
Yeah.
to try and sort of rewire our brain, and that is why psychology is so important. Is acknowledging that we are actually coded to stay the F away from trading. Biologically programmed not to trade. So and that's why trading is such a difficult thing. You've got to rewire your brain to be okay with something that we're biologically programmed not to do.
Yeah, I don't think trading is a natural. I don't think it's a natural thing. Dude, we just had some sudden volatility in the indices. I'm
Yeah,
not
no,
really
I
seeing it
just
much on the forex pairs, like EU and GU is pulling back a little bit, but like Nasdaq had like this sudden candle. The US 30, same thing, but I'm not seeing it on the Wix either. So the volatility thing is not a problem. We'll probably see it on S&P as well. So the indices itself had
yeah,
like a bit of a, hey, you know.
not really seen anything on financial juice either.
No, that's why I tried to go through the news section here
Yeah, I go
on
into
Forex
trading.
Factory. Not yet. Yeah, just maybe go and check why there was a potential. Hello, like 5 minutes ago, 5 to 7 minutes ago. Oh, oil. Let's have a little look at oil as well.
Yeah, I've not got anything on tradingeconomics.com either.
I mean, oil was above 100 for a while. Yesterday, we reached a peak of 103 and a low point of 96. So that's quite the range. We broke through this morning. Well, we were consolidating the whole way from.
Whoa, hang on.
Yeah.
Am I reading this right? The US leaving NATO is beyond reconsideration, Trump tells the Telegraph.
I mean, like I'm
It
saying,
is April 1st. Guys, it is April 1st. Bear that in mind.
look, Trump had a little bit of a hissy fit yesterday.
No, I don't believe that.
Yeah. He had a bit of a hissy fit yesterday, talking about how you remember the countries that would normally get their oil and whatnot from the Strait of Hormuz, that kind of like stuff. They're going to be on their own, or they can do what everybody else is doing and just buy from the US because they have a lot of oil. So he's the guy that turned around and said, "Hey, listen, I'm going to start a war. I want all of the NATO countries to join in." The NATO countries said no because
It's not
they
our
didn't
war.
attack you. You attacked them. And NATO specifically says that any attack on one NATO country is an attack on all NATO countries. There wasn't an attack on a NATO country. The person that started all of this crap was Trump. So they just basically said, "Listen, this is not according to our charter. This is you started this on your own."
The
So
thing is,
what I'm
NATO's
just seeing from
defense.
what I'm seeing from this is just he is throwing all of his toys out of the cot, and he's like, "Well, in that case, if you're not going to join us, being an asshole to the rest of the world, well, I'll just not be part of your group no more."
It's like
Okay.
it's like schoolyard, isn't it? It's almost like friends in the
Yeah.
school, like back in school, where it's like, well, you don't want to hang out, or you want to hang out with that kid, but we don't like that kid, so therefore you don't get to be part of our gang no more. It's like, grow up, man. Like, come
Yeah.
on, what are you doing? You're running a country and trying to run. What's going on? Literally, if anyone knows anything about NATO, we all know that it was created as a defense, as an allied defense conglomerate, not as the ultimate schoolyard bully. It's
Yeah, that is true. But I mean, the schoolyard bully is now, basically all of his friends, all of this bully's friends have been like, "Dude, you're being a bit of an asshole. We don't want to
Yeah,
spend the weekend at your lake house with your parents for your birthday. You can do it on your own because you're just not being nice to everybody, and that's kind of like what it is. So the bully is
do you know
now
what
like feeling
do you know
sorry
what
for
would be
himself.
Yeah, literally that. Literally, and what happens? What happens when you trigger a narcissist? When you trigger a narcissist, they bite. And they'll attack their own. So again,
Yep.
going back to psychology, when you look at narcissism, you try and tell a narcissist that he's done something wrong or done something bad, instead of like self-acknowledgement, instead of reflecting on what he's actually done, or like, instead of even attacking the person that he's potentially attacking, he'll actually attack the person who's told them, look, you're doing something wrong here. It's almost textbook narcissism, which is a little bit worrying given that running a country. But Joe, would be absolutely hilarious if someone could like make an animation of the Trump NATO situation and pretend like animate them as schoolyard kids. I think that would be absolutely hilarious.
Yo,
LJ,
Yo, what's up,
good,
LJ?
you just try and call Trump a narcissist? Dude, this man, Mother Teresa, Nobel Peace Prize. Come on.
Saint.
What are we talking about?
Saint
I tell
Trump,
you what,
guys.
for the sake of the fact that Trump may be watching this, I doubt he is, but no, Trump, you are not a narcissist. You deserve this Nobel Peace Prize.
Yeah, of course.
Dude, don't
Have you
feed
not
into his
seen
ego.
just how much he shares with all his friends? They're all making money in the market.
Yeah.
Dude,
Yeah, well,
he's
I'm just maybe I'm the narcissist. Maybe
he's
I'm
feeding
just
them
salty
the info.
that he hasn't given me any insider trading. Maybe it's just I'm feeling like he's just not sharing.
You're just sour because you ain't in the group, mate. That's
I'm not in
sour.
his inner circle.
Yeah, his inner circle. ICT.
You didn't get the invite to the
Inner circle
WhatsApp group that
Trump.
was Inner Circle Trump. The
Inner
group that was
circle
leaking
trumping.
all the what do they have when they were leaking all the defense information? Just over WhatsApp or whatever. Yeah, didn't get an invite. Damn.
Yeah.
Yeah, exactly.
Right, I'll talk to him. I'll see. I'll see if we can
I know.
Yeah.
LJ, would you? Because you clearly are in this inner circle. So can you please yeah, philanthropist at his finest. Yeah, literally. Trump.
I mean, we don't understand it because we're not multimillionaires. We just don't understand it. Just you gotta be in that mindset of a multimillionaire to understand the chess moves he's making.
You got to buy a membership to the Trump golf course first. Pay your membership fees, and that's how you get entry. Right? That's the entry for the Discord and the WhatsApp group and whatever. Right? That's how you do it.
Could you send me the link, please? With your LJ, don't worry. Of course, with your referral code. Yeah, I know you got.
Yeah, I was about to say, make sure that you get that commission, mate. We
Yeah, of course. There's going to be an under the table there. Don't worry.
yeah. Hello, Dirk.
Hello, boys. How is it?
What is good, Dirk? How you doing, brother?
Oh, I'm doing
I love that.
fantastic. Looking
Hello,
forward
boys.
to get a little bit of off time over Eastern.
Yeah.
Yes.
Very nice.
Yeah, very nice. Very well deserved, I would say. So,
Well, thank you. Good sir.
Yes. So thank you for Dirk for bringing that up. So next week Monday is Easter Monday. So next week Monday's stream will be shortened quite a bit. But what I think we can do is on the day, because it's going to be bank holidays and it might be a little bit quiet, how about we just have some fun and banter on Monday? We bring it down to 2 hours. We talk a little bit about the market, our expectations for the rest of the week. And then from there on, we just do some fun stuff. So if you guys would like to join that, just kind of like write down in the chat W for no, not W. Let's call it EM, Easter Monday, if you want to join that.
W.
EM. Yeah.
Oh, E.
West side.
E.
Yeah. EW. EM. Yeah.
Oh, it's the other way. I need to go that way because the camera's the other way. EM.
Yeah. EM. Yeah. EM equals squared. All right, guys, stop dropping your gang signs. So next week Monday, shortened stream, but still going to be a fun one. The rest of the week, as of next week, is going to be normal trading, normal streaming. There we go, EM. There we go.
Yeah.
We will see. We will see what kind of fun shenanigans we can come up with on that day. All right. Nice. LJ and Dirk, are we going to love and leave you guys? I see you guys are raring to go. You're like ready to talk about all of this interesting things that's going to happen. And why are we throwing gang signs?
We have a bit to cover,
to discuss. Yeah. We're throwing gang signs at Aberdorf Linkler because next week Monday is Easter Monday, which is EM, and we're all going to be there for that day, my friend. All right, cool. I'm going to love and leave you guys. I'll see you guys in about 2 hours or so. Yeah?
Yeah.
Perfect.
Nice. Please do so.
Nice.
Take a well-deserved break and see you again then, boys.
Indeed. Since that, I'm going to drop off, so see you in a couple of hours. Dirk, I'll move over onto your screen. So I can leave. And yeah, I'll see you in a couple of hours, guys. So peace.
Perfect.
Take care. All right. Oh, he's back already. That was fast.
See you guys. Cheers. Thank you, Rich and Will. Thank you very much.
Thanks, LJ. How are you doing?
Good. Give me 1 sec. Sorry. Just had to clear my throat.
It's contagious. Give me 1 sec. Oh, Jesus.
Good. Things are good. I missed the pump last night. Unfortunately, we were talking about it on stream yesterday, sort of saying this is probably the bottom, and we were talking a bit about it on Monday. I went to bed just before the headlines and closed out my some of my trades I was long on. I've been up since like 8 a.m. my time. So it's like 3 a.m.
Fair enough, yeah.
Yeah, so I've been up, what's that, 16, 17 hours, and I was working the whole day as well. So I was pretty tired. I actually just missed it, unfortunately, but looks like I think potentially we've nailed the 4 to 6 week period.
I think we did actually. I actually yesterday evening, before the pump started, I scooped up some Nvidia for what was it? I think just shy below 170, so that was quite good in timing. I've been buying them actually all the way down. And now again, after you mentioned, actually, historically speaking, they are quite cheap now, the tech stocks. However, I was a little bit surprised, honestly speaking, to see this pump, because like if you look at the narrative of the whole thing, it's a bit on thin ice. No, it's like Donald Trump saying like, oh, another 2-3 weeks, moving on already mentally, and Iran saying like, no, there's no negotiations, nothing. So I wonder really on Friday if we might see like risk on assets trending lower again. For now, I'm going to take what we have here. I'm still in my gold trade, which is still moving very much into the right direction. But I'm really thinking about maybe not today, tomorrow or Friday, closing that one out, because I don't want to be so much exposed over a long weekend.
I would say sit on it, to be honest. I think you're in good stead. Look, go to 4,900. Consider it from there, right? That the blue line, that's your 50, is it?
It's the 8 weeks moving average, that one.
8 weeks. Yeah. Oh, yeah, it would be. Yeah. I'd say running up to there and that underside of that sort of top range. Once we tap into there, then consider. I think we do have that further run. Now, it does seem a bit fragile, but that's the same thing like what we were talking about as well, how, Trump is going to get his Trump win. So it's not a full, like we're all done and over, but it's Trump's win in his own spin, right? Like we were saying, he can come out and say, war's done, guys. That's it. We did it. We won. We're amazing. I'm awesome. Everyone's awesome. USA, make America great again. Like that's his spiel. So I think it's exactly that. Where yes, we'll still have this stuff ongoing. I think Iran is pretty. They obviously know just how much leverage they have now. Like it's just highlighted how big it is, and they're going to further play on that. And I think from the US position, it essentially is over. over, right? Because Iran is not going to let go of that. So from now, it's just a negotiation type, mediation type standpoint until they get some kind of relative understanding or agreement, whether it does become some kind of toll situation for Iran. The US eventually maybe talks to them saying, hey, look, if you throw out the nuclear situation, we'll agree to do some trade deals with other people in the area, bring you guys back into the economy. We won't put the sanctions back on, and it'll be kind of this win-win, a bit of a mutual thing. Still a bit of, friction between each other, but like I was saying, kind of like a mediation, like two people against each other in court, and you go, we both don't quite like it, but it does work for both of us. That's kind of what it seems to be. And I mean, it goes back to like this stuff they brought up when we were seeing that, spot vol beta, we weren't seeing pricing for further downside. Market is very keen. And I think that also comes back to the tech piece where they are so cheap. Yes, we do have some of the helium type problems, like we were talking with the chip fab type aspects. And only now, I screenshotted this because we're only just now starting to see sort of financial outlets really talking about that and getting into it. It's like, all right, guys, you're a bit late to the party. But I think, again, it's one of those reverse indicators. Once you start seeing this stuff on financial outlets, that kind of thing, it's normally like the top.
Yeah.
Right. Outside of, say,
Priced
Bloomberg. Yeah, Bloomberg Live, like they're often talking about sort of real-time stuff. But once you get that bleed over to the other outfits, sort of more generic outfits, consumer type outfits, then, yeah, we're priced in. That's kind of the bottom. I don't see how we see any further escalation really from here. Like this is a significant de-escalation. So I think we've seen, and everyone has known, potential troops on the ground, that kind of thing. We're at that peak fear point, peak risk point, and that tends to be where markets bottom. Even though we're not fully out of the situation yet, we've reached the peak extreme of potentials. It gets priced in, now you have to start pricing it out going forward.
True, yeah.
So.
Comment from Pooley888, markets are closed Friday. Yeah, absolutely correct. So US is not going to be trading.
I think the US is open.
It's open. Are you sure on Good Friday?
I'm not sure if data's still coming through. It's not a bank holiday though for the US. Pretty much everywhere else is. I was confused about this as well because I thought it was, but I haven't seen that. I don't know unless that's.
I think they are closed. I'm pretty sure.
I think Monday they are. I'm not sure about the Friday.
Let me see quickly. Good Friday, the Nasdaq and NICE are closed, according to Fidelity at least.
Okay. All right.
But anyway, even if they are open, it's going to be super low liquidity.
Yeah, I mean, we'll have NFP. Like NFP is still coming through, that kind of thing. So I guess we got the data. So it'll probably be quiet day overall. And we just have the data, brief sort of blip and then quiet probably. So outside of Trump potentially tweeting something into the Friday, but I don't think so. Like we were saying, he's sort of gotten bored. I think that's pretty like on the mark right now. Sorry, just let me fix my camera.
By the way, did you? There was like a news piece by a German magazine called Der Spiegel, and they published that supposedly Pete Hegseth was trying to do insider trading before the Iran war started. So he was trying to buy.
I'm not surprised.
It's like I had to think again about this. Oh my God, like 30 years ago, that would have been like a reason to fire him or to resign, and now it's like, who cares? We do whatever we want. Try to stop us.
Yeah,
horrible. Yeah.
Because he was one of the people sort of putting out bad publications, bad negative sentiment, and hence the market was reading into some of that as though this is not actually progressing. And so maybe that's exactly why he was doing. I honestly wouldn't be surprised.
At this point, nothing surprised me anymore. Yeah. Other than that, I've been pretty lazy trading wise this week. I was, as I think we spoke on Monday about this, I was looking to pick up the euro, but it didn't really quite come down to what I wanted. I wanted to see it down all the way to 114.50 in order to pick some up. So I kind of missed out on the push higher now again.
What is this on? Because we did hit 114.50.
This when did we hit 114.50?
You on a futures?
No, I'm on. This is from the CFD contract from Tickmill. Or the futures we might have hit, yeah, but this one I'm trading spot.
Oh yeah, we did. We hit 114.50.
Okay. Yeah. See, then I missed out on that one. I didn't have a limit order there anyway. I
think you sure that's a CFD?
That is CFD.
I'm pretty sure that's what the futures price is. Because we definitely hit 114.50. I remember on Monday when you were talking about this, I was like, we're already at some of the levels you were talking about.
Just need to turn off my phone.
That's all right. I thought it was just...
Yeah, you're right. We had this on Tuesday. But what is it really 150? Oh, yeah, there. Yeah. Monday evening.
We hit it, sort of tapped into it twice,
I completely missed that one. I actually had
That's what I thought. I thought you were just reading it, wrong from the thing or something.
No, my Renko chart didn't pick that one up because it is based on also Tickmill. Oh, that's weird. Well, anyway, missed that one. Would have been the perfect entry, of course. I actually set up a trading view alarm for that. I don't know why it didn't trigger. But anyway, this is how it is sometimes. Would have been a beautiful trade, of course, in hindsight now. But I'm not angry because, like I said on Monday, for me this week is a bit like I rather want to stay on the sidelines. Of course, still in that gold trade, which is more than enough in terms of exposure. But the combination of geopolitics plus Easter coming up, I don't think it's the best time to be trading, with exceptions, of course. So actually, we're going to see the dump maybe tomorrow night then already.
I mean, the thing is, we've had such a push up. I think we're already starting to see that today, even not like a dump, but like a bit of pullback. Same thing with euro dollar above 116.10. Aussie dollar back up to 69.50. Nasdaq hit 24k just earlier. 133 on the pound, and dollar yen 158.30, and we're sort of bouncing. So, but either way, this pick up through here, and we're talking about that on Nasdaq as well, for any dip into that highlighted area that we had, and then the push higher, and we've hit that very nicely. So. Trades yesterday, all I took was Aussie dollar.
Of course, Aussie dollar.
Through, of course, through Asia, and then another trade into basically just before New York. But I missed this big run, unfortunately. So then I went to bed.
But fair enough. Both good trades and they're still in terms of reaching the take profits now. Especially the second one.
They were very solid, so I wasn't complaining at all. But it was after we came out of that channel, came back, retested the channel, right back up. Not quite a new high, but we had the push back into there, and then we had the crossover of the moving averages here. Started building up, saw this candle, took the shot. So, that turned out pretty good. I'm not quite sure where I'd want to trade from now because I missed these tops because I was still just coming home. I would have liked to short these tops, but we've already moved like a decent amount through here, another 20 pips. So I'd probably like to see some kind of basing, like a further push or something through here. But I mean, we could see a dip back into that area first and then higher. So right now I'm kind of sitting on my hands waiting. It's same deal to euro. This was also the sort of target area we're looking for. Mark the X, which is the underside of that trend line that held us up through there. And we did come up and test that top. Couldn't close above on the candle close. Ran right down. So into London, we've spiked right through it. We've come up to these sort of general tops through here, slightly lower high. And so hence I'd like to wait for a pullback. First of all, see where we are. And we do have ADP tonight, don't we? Yeah, ADP and retail sales.
Was Powell talking yesterday? When was that scheduled?
Monday.
What did he say anyway? I've really been missing out this week a little bit. I've been so busy with stuff.
Yeah. No, it's fair. He pretty much signaled they were probably more likely to be neutral on rates. So some of that sort of potential hike premier came back out, and he was pretty much saying like, yeah, because like what would be the point? Even if we do that, it doesn't really affect the economy till like a year or so beyond.
Exactly. Yeah.
And how's that going to help the situation? Which is good. Like we were talking about, the way that we end this business cycle and everything crashes is if all four central banks sort of move towards hiking. Bank of England, Bank of Japan, ECB are potentially there, which again I still think is wrong. Bank of Japan definitely isn't, fortunately, and the Fed aren't, which are the two important ones overall. So yeah, it's good, and especially with this now, I think we'll start to reverse that premium. I think, though, now we go from Bank of England potentially hiking, ECB potentially hiking back to neutral. And if this all flows out pretty well and we do get supply gradually coming back, Strait of Hormuz situation does sort of reopen, or they come to some mediation agreement to get flows going, there are some damages and there still will be risk premium slightly in terms of the Strait and probably for shipping rates and insurance going forward, because now everyone's going to have those eyes on that as a potential risk point, right?
Yeah.
The main thing, it's particularly with what's it called, the Al Mandeb portion near Yemen with the Houthis. Close that and the Red Sea, etc. So that was essentially the main next concern. Like, if we had that fully closed, now we've got a problem. And so obviously they started attacking Israel over the weekend and stuff as well. So I think from the US position, they're going, there's not really a clean win here. It's probably best to back out and sort of wrap it up.
Cut your losses and get out, especially with the midterms coming up.
Yeah.
But I don't see like how he wants to come out. I mean, he's probably clearly hoping, we move on and then people just start forgetting about it. However, I mean, what surprises me a little bit from Trump's side is stating something like, well, actually, we don't need the Strait of Hormuz, doesn't affect us if it stays closed. It's like the ultimate, screw you word. I don't care. We started this, but we're not taking responsibility for it.
And it is true. I mean, they have, like we were saying at the beginning of this, like they could fight this for like 3 years and be fine, like fully self-sufficient. I saw, I think it was Goldman. Is it Goldman? I think it was Goldman that put out a thing on, it was yesterday or the day before, on China potentially doing better through this than the US. And I was just like, what? I read this. I was like, dude, who wrote this? This doesn't make any sense, right? Like, no. So, yeah, I think we're towards the end. I think you can relatively call this the bottom overall. I'll jump into levels I will potentially look to short from. I did see a couple of the questions Scribbles was asking as well, so I'll just run through some of the stuff quickly. Do you have to sign up for the giveaway or just be in the stream? I'm not sure. What giveaway is this? I might have missed this.
I was about to ask, like, what giveaway are we talking about here?
Yeah, was Rich talking about it before? Because I know we had the TikTok and sort of Instagram giveaway on Monday that was announced, like the winners. Yeah. I don't know if there's a new one. I'm sorry. I'll send Rich a message right now and ask, because I'm not sure.
Nothing on YouTube saying something about a raffle, and the only one I also remember was the TikTok thing. But not sure. But we'll find out, of course, for you guys.
Yeah, and no worries, Scribbles. Not spam. Sorry, I did see your message before. I was just trying to run through everything. Anastasia has gone on to other things. She has too much work going on, too much time. There's not enough hours in the day, unfortunately. But yeah, she does use volume profiles, that kind of stuff. Very useful. If you guys want to learn more about that, I mean, the guys in the futures stream now will be doing a bunch of that stuff, right? So with the new futures offering from the Fivers, if you guys are interested in that and like how to use that and like TPO profiles and all that kind of thing, definitely jump over there. Potentially, if I jump back into futures again, I can start sharing some of that stuff with you guys. Futures are actually the first thing I ever traded back in the day when I started. So
it's funny. It's like the journey most traders have, because like the first kind of contact usually is like with stocks or something, when you learn about indices, when you learn about futures. So that's what a lot of people trade. And in my early days back then, people always said, like the Forex guys are like the cream of a cream, they know everything, which is, of course, we know nowadays is bullshit. No, it's not true.
Kind of like, I mean, FX is normally like the canary in the coal mine of the market, and with macro, and like you always, in order to get macro right, you have to get the dollar right.
That's true.
So it starts with FX, and it does tend to move quicker than other markets.
I might want to jump also into futures trading again with like an evaluation account, because like trading, for example, the Nasdaq with the account structure on the Fivers we have at the moment is a little bit difficult sometimes because the leverage is much smaller. And especially if you have like very narrow stops, but you need a larger position size for those. The account is blocking you actively from this because you run out of margin very quickly. So for that, and plus the fact that besides euro dollar, something like SQ and NQ, they are like the most liquid markets in the world. You are, of course, like competing against the best traders in the world there probably, but you can be pretty sure that you get like very good execution, plus probably the commission model, as far as I know, for the Fivers is also going to be very attractive. It is on Forex, $4 for one lot. I hardly get that anywhere else, honestly speaking. So I assume they have something nice from the futures as well. Has that already started, actually? Or?
Yeah, it has. I think there's like a waiting list though for some of the signups.
Yeah, because I joined a waiting list for that like a couple of months ago. I remember.
So it's like a gradual door opening for people to come in, make sure everything works completely fine, no problems before it's like fully opened up. Just so there's any teething issues or anything worked out. But yeah, so if you guys are interested, you can find it in your hub. Just go to obviously you'll have the sort of safety section and the features section. Jump on the waiting list. I'm also on there right now. So very good. I'd be keen to do some features stuff.
Yeah, but we definitely should do that and cover that as well. That's kind of nice, like both of us starting, at square one with the futures. Building up our world domination plans.
Yeah. Well, you've already achieved that apparently with gold. I was just looking at your because we were, the level I was talking about was this 4660, which we have hit, and then we broke through it, and it's become the support through here, right? And then we've got that underside trend line that we snapped through. We had a slight push through it and then collapse after again, and equal to those highs. So I can see what you're saying as far as potentially taking some profit off the table.
Yeah, no need to close the whole position. Can also like partially close it, and but I mean my stop is anyway deep in profit territory also already. But
it is very deep.
The only thing would be some kind of weird black swan event over the weekend, and when we have a massive gap to the downside, like 10% or something like this. But even with 10%, I don't think I would be actually sitting on losses there anyway. So it's one, of those things that I still to this day sometimes struggle with, to have the discipline, to let your winners run. To cut your losses short, I'm good at that, sometimes too early, but let your winners run, and how often do you look at this? Maybe you guys out there have the same issue, Very often I close a position, I'm of course happy, and then like 2, 3, 4 days later, I look at the chart and think like, okay, I didn't capitalize enough on that trade, I should have let it run. But that's, always the difficult part of trading. It's not opening the position and finding the trade. It's about the discipline of sticking to your game plan. Riding it out. Because it feels good, not like cashing in on a trade that's a profit.
It does. I think we've talked about this before. Like that's still probably the main thing that I do is taking profit too early. When I'm smashing certain trades, but I'm like, sort of part because you've actually hit it really good. You're like, oh, this. It almost sometimes as well feels like too good, where you're like, no, I should just take it, get out. But at the same time, I always give the plus minus benefit of sometimes as well. There has been a random headline that comes out, and because I did take it, that's actually saved me a proportion. So I think. For me, I always find it kind of nets out roughly, especially in this current time with Trump.
That's a valid point, really.
Yeah, so outside of a Trump situation, it'd be different. I'd go back to going no, I'm in this, smashed it, let it run. Right? It's the same thing with the gold thing I took. You held us through. I took profit up here. After that initial pump. But yeah, this because these are sort of these key levels. I mean, we spoke about this after we had the massive drop from the all-time highs, and then we did get that little pickup and this consolidation in through that area before picking up a little and then dropping off. And where these X's were back then were sort of the key areas I was looking for. So you can see we've topped at that level, and then same with through here, we traded sort of back and forth, and it was a bit of both support and resistance cascade through there. So I can see why you take some off the table there. Probably not a bad idea because you might get something like that. But it depends if you're willing to potentially re-enter.
No, I'm just going to to take some of the chips off the table. Take 25% of the profit or whatever. Just that I'm in this zone of, hey, this feels good. That was a good trade, and whatever happens after this happens. Let it run. And progressively, I'm going to take my stop loss. It's not a stop loss anymore. My stop to more into positive territory until it gets stopped out for the remaining 75 to 50%. But let's see. Still some way to go. We still have today. We still have tomorrow. Another one I'm looking at right now, because I think we nailed that one quite nicely, is dollar yen. Remember we Monday, talking about potentially shorting it at 160, which has run its course quite nicely, I must say.
Yeah, I was going to say as well. So, that 160, and if I can actually get this to the other one's overlaying it. But there's been a number of these markets here where, trend lines sometimes good, sometimes rubbish. But I always like that sort of slant when you have that momentum. It's been tapped into a few times, break underside, sort of oscillate the underside of it a bit above, or else tap directly to it and then come off. And we've seen that the same thing with euro dollar up through here, as both a target level and an oscillation point. Same with gold, sort of coming up through here as well. They've actually worked out quite nice, and we're seeing that across the board, which I always like when you're seeing that, all the way through. So, gold again, and that 159.98 through there. Essentially, it becomes somewhat of it's not the best head and shoulders, but kind of like dirt. right? If you call that like
maybe we have to ask Victor about it if it's a quasi.
Yeah, sort of quasi. But either way, we did have the pause point right there before we had that news headline which broke us through. Very limited price action or trading. If you look at like a time series analysis type thing, time trading up there came right down. Again, got capped by 160 and now right the way off. So yeah, very good. Nailed it. That was also, again, like we've talked through this period, that 160 really has been the key for me in the whole situation overall. So I did see some of you guys' comments as well with like GU and Usman as well was asking about what levels I'd potentially short from on EU. We'll jump to that shortly. If you wouldn't mind, I'll just jump up. Going to grab an energy drink, need some caffeine.
Sure.
And
no
then
worries.
If you want to
going to switch over to my screen very quickly. Dollar yen, as we said earlier, we were talking about this Monday, came really nice off this make it or break it level between 160 to 162. So that's potentially not for this week anymore, but a trade I would actually take again, honestly speaking. So when we maybe see something like, where's the path tool here? This one. If we potentially see something like, maybe we're going to further dip down and then try to retake this level up here. So definitely a trade I would be watching again. Stop loss needs to be somewhere around 160, 150 to 162. And then, of course, if we break those levels to the upside, we need to get out of that trade. But that highly depends also on what we are going to see from the 10-year treasury. It has been coming down a little bit, which makes, of course, the carry trade, so where you try to exploit the interest rate difference between US interest rates, the yield were at around about 4.3%, and Japanese yields where we are at 2.3%. So if you buy dollar yen, you kind of get more interest for your dollars than ideally you pay for your yen. That's the whole idea. Now, I read something this morning, probably have to ask LJ about it as well when he comes back, that there's one analyst who has like a very good reputation in forecasting what treasuries are doing, and he's kind of expecting the US yields to climb over 6% in 2027. And I have to see if it just was a headline because somebody wanted to be famous for 10 minutes or if there's any substance. I mean, that would potentially mean if we see something like this, that we are probably going to an extended time of stock selling off, because as a fund manager, you, of course, would probably opt for the risk-free 6% rather than the risky 8% you get an average in return when you invest into the S&P 500. Let's have a quick look at the NASDAQ, which is like on a technical level a little bit difficult. So it was important that we went back up over this structure here, so that we are trying to recapture the territory which are marked with the yellow trend line, horizontal line here. That's really important because otherwise it slowly would start looking like a bearish structure. Nothing I would trade on, honestly speaking, because as LJ also, I'm of the opinion that we have a good chance that we saw the bottom already. But if you just look at from the technical eye, that kind of starts looking like a bearish structure. So we want to have an eye on that. I was just telling, I don't know if you saw that piece maybe as well. There was one analyst with quite a good track record, actually, who forecasts that in 2027, we are going to see 10-year US yields above 6.3%. I don't know if you stumbled upon that. I'm trying to find that piece. It was like one of the things that popped up on my mobile phone, and then I clicked it away and cannot find it anymore now again.
I didn't see it, but I know that was obviously a bunch of the speculation recently with the situation going on, and also part of why like gold selling off through this whole period is obviously if rates go up that much more, you have to readjust for the carry of that. I can't see that happening, really, unless there's some kind of problem with them refinancing the debt rollover that we have coming through this year. But like, I don't see that at all.
No, especially with Kevin Walsh now, as the Trump prodigy taking over from Jerome Powell in a month from now. It is already soon in May, April 1st today. I should prank you, man.
April 1st, yeah. I did think about that earlier. I was like, I got to think of a prank, and then I just couldn't think of anything. It was too late. I was like,
Exactly. I also cannot see that. I could see it more in the Eurozone because our inflation, which came out, especially in Germany, is at 2.7%. So there would be a reason to think about interest rate hikes. I hope, of course, they're not going to do that. Especially because I'm selfish and I need to refinance some mortgage next year. So for some of my real estate stuff. So of course I hope interest rates are not going higher than they are already at the moment. But yeah, I was just saying, like from a technical point, I'm looking here at the Nasdaq right now. If you wouldn't tell me now this is the Nasdaq, and I would zoom out a little bit and you would ask me, what is the structure? It tends to look a little bit more bearish, honestly speaking, just, from a technical standpoint. And so kind of interesting if it continues, if you see something like, pulling back to the bull market or maybe bear market support band now and then getting a push lower. But I can only see that scenario really if we have the conflict in Iran really ongoing and we see something like especially oil establishing itself well over $120 or $150. That for sure would be like the scenario. But I really don't think it cannot be that Trump and his friends are going to let this happen. Because not only like for the benefit of a country or the whole world, for the benefit of their own pockets, primarily.
Yeah. Exactly. I can't see it happening. Like, if you looked at that chart naked, it looks nasty. And there are potentials, and that would come through some of the stuff with the helium type situation and cooling wafers, that kind of thing, which then crimps the whole AI chip manufacturing trade. It goes into MRI machines. It goes into cars, automotive. It goes into phones. It goes into like everything that this starts affecting. And AI, funnily enough, will be the last one affected because the data centers, like I brought up the chart the other day, they can recycle about 95% of the helium because it's just newer tech, right? So it does give them a much longer leadway, but I mean, that's like 150, 160 days. So I can't imagine this still being a problem throughout there. Obviously, AI and data center related stuff is the majority of GDP and growth right now. So I think they'd be very incentivized, obviously, to fix that up. Potentially, if they didn't, it would be such a dangerous play, but you might have some weird skew where they try and get enough themselves from nat gas and try and leave China out to dry or something. Like, I don't think that would play though. I think that's extremely risky, and they're not gonna try play chicken with that. So there will be some lead-on effects with input prices will still be higher. I think when oil does come down, we won't go lower than sort of 80. There's going to be some, obviously there's supply delay and gluts and all this kind of stuff. And the strait will still be a potential risk. And also if we do get this situation where it's going to be a sort of premier to pass through the strait, that Iran now puts on. And eventually I think people just be like, yeah, look, tell us what it is and we'll pay you $1 million a ship or something. Just let us through. Right?
Would actually be smart if Iran does that, no?
I think that's the angle. And I think the US will sort of agree to it.
But other than that, I also read about plans of building like very long oil pipelines, to circumvent the need of going through the
I'm sure that will happen eventually.
It's kind of a low-hanging fruit, probably.
Yeah. Oh, definitely. It's the same with the East-West pipeline that we did manage to pump a bunch through with the Gulf countries that did reintroduce another 5, 6, 7 million barrels a day from the 20 million a day that was sort of missing. So hence those things did alleviate stuff. They'll probably, like we talked about, there'll be more infrastructure put in to eliminate the strait as a risk. But near term, right, that stuff takes time to build and to plan. And Qatar has had some damages, that kind of thing. They got to rebuild. So near term, that premium will still be in. I'd say 80 to 90 is probably pretty realistic for us to flex around there. Maybe some short-term dips to about 77. I wouldn't say much lower than that. And I think they'll just be extended for some time. So that will have a slight input towards like inflation, producer costs, all that kind of stuff. But again, I think it'll be viewed as one of those sort of mostly one-off hits that will kind of get absorbed. It just means central banks might be a little bit longer on the sort of hold time frame. So if we were looking at even when Kevin Walsh comes in, an earlier rate hike, it's probably more, rather than like the 2 or potentially 3 we're almost pricing in, it might just be 1 towards the end of the year, like October, November, December, like somewhere in that range. I forget when their
I'm very sure Trump is like going to build up immense pressure on the Fed and especially Kevin Walsh, to massively lower interest rates. It's going to be interesting to see, if they are going to bend to that pressure, or because that basically would mean like the end of the Fed being an independent structure. Quite interesting. We have a question here. Due to this crisis, the AI bubble, or not a question, somebody is saying, the AI bubble will burst faster. What do you guys think? As the more the power energy, the faster they go broke. I don't at all agree with this, because I don't think there's an AI bubble. There's a bubble for sure when we look at like the companies in the second row that are not Anthropic or that are not Microsoft or Apple or Meta and or OpenAI, that kind of build upon the structure that is already there from OpenAI or Anthropic especially. There is going to be a lot of bubble bursting because things develop faster and their products become obsolete. But I honestly speaking don't know why people are always talking about an AI bubble. If we see like the demand and the money, the trillions of dollars that flow, for example, into data centers, that could be totally slowed down a little bit if we get something like an energy crisis. We don't really have an energy crisis, by the way, especially not in the USA, because the USA is not dependent on Iran's oil. They have more than enough oil they produce themselves. Plus now they have Venezuela, that they can tap into as well, which is, by the way, the sitting on the largest oil reserves, natural oil reserves in the world. So they are not dependent on the Middle East as well. Plus, and we already see that as well, if there's like a potential energy crisis or something coming, that also normally will result in things becoming more effective. And I saw also a headline, for example, I think it was from Google, if I'm not mistaken, that they managed to use RAM more effective, like by a factor of 6. So let's say you needed like 100 gig of RAM for something, suddenly you only need like 20 gigs. And
this is,
So there are always things to circumvent that, It's dangerous to think AI bubble is bursting. I can understand that, probably because a lot of people that have not been using AI or that see the media headlines of, AI is basically replacing anybody in their jobs, which is sadly true, but it is what it is and we have to adapt to it. I can only talk for myself, obviously, and especially the new models, especially Opus 4.6 from Anthropic, has made me and my work so much more effective. I can do things, run backtests, run correlation analysis, with just a click of my mouse now. Before that, I had to painstakingly sit down and write all the code myself, which can sometimes take weeks. Now I have an idea, and half hour later, I have a solid code already to testing this idea. So the pipeline of me having an idea until having the decision, is this working or is this idea not working, is like by a factor of 1,000 faster now, for me personally.
Yeah. I think that was another thing that Jerome Powell also said about the AI thing on Monday as well. He was like, himself and everyone at the Fed, he's doing, it's reducing his workload by like 10x.
Yeah.
Like he can do stuff so much faster. So I think people have to look at the GDP thing. I think people just employ people because you still need that dynamic element. And I think AI is more complementary to humans, where humans are like the checkpoint. Because at the same time, if you run full AI, we're not getting to AGI, this stuff, which it seems at the rate it's accelerating, it seems like, oh, we'll be there. But all the AI companies themselves have come out and said, we're at a bottleneck. We can't quite get there. There's a lot, like it's that when you hit the diminishing returns on like a exponent curve and you're in those final, each incremental like 0.1% when you're at 99 takes the entire time of like the prior 99% to keep going up to those final points. It's diminishing returns. So I think that's definitely what we'll have. And I think there will be impact, obviously, because people can streamline stuff. And if you've got certain really top quality players and they can all of a sudden increase their productivity by 10x or 5x or whatever it might be, yes, they can take up the positions of some other employable people and they can do all of it wrapped together. But I don't think it'll be this elimination scenario like people are talking about where it's like 20-30% unemployment or something. Maybe we end up with like a new normal of 6, 7, 8% unemployment, right? And that kind of fluxes the new norm until that also then rolls over and we figure out how to re-implement these people, or potentially that goes back to, obviously we've got the whole world has problems with like housing and trades, like trade skill management, like people to actually build stuff, which is part of why the costs are so high, which then stops things being built. Even if people do have the money and want to build it, there's not enough tradespeople. So we just get a new filtering into some of those older portions of the economy that are still needed. And it does enhance other things for like, we're building rockets, trying to go into space, building all this other stuff. And it just going from the white collar stuff, there's just a new shift to more blue collar and you get basically a rebalance. And I think then it eventually also normalizes. So it seems to me that's probably more the way things go. And just like you were saying with the energy thing, like with this, like, yeah, the US right now has like 3 years, if they did nothing, of full energy stocks. Backlogged. And that's oil, nat gas, like everything. And the countries are now going towards renewables, very obvious. I talked about South Australia here, which is now 75%. So it's the largest renewable energies per like a state or a country or an area. It's taken over like Norway or whatever, that it was about 70. And they're on track for 100% by 2028 or so. So everyone's going that way. And you'll see the UAE, the Gulf countries as well, investing a huge amount in that. Obviously, solar for them, no-brainer. That then solar complements things like the desalination plants that they need, which are very expensive. The only way to really make them work is with solar at the end of the day, right? Long term. Obviously, they've got a heap of oil, so they can substitute that and natural gas and stuff. But yeah, so I wouldn't say we've got there will be, the main power constraint will actually be power grids with like old technology, not the availability of energy. It's how do we actually transmit that from the raw energy to something usable.
Exactly. And how do we save it also? This is like the big issues. One of the big issues, by the way, here in Germany, that like, for example, from solar and wind, we produce enough energy, but we don't have a grid that can balance it out, or that can send it where it's needed, That's a huge problem here in Germany. Plus, if anybody comes up with a good way to actually save energy for later usage, there would be something too. Right now, it's usually done by, you are pumping water up somewhere, and when you need it, you let it run down through turbines again to get the energy. But you lose I think 40 or 50 or 60% of the energy you put into that. So that obviously
it's all kinetic.
Exactly, it's kinetic energy, and but let's not forget also, this is this innovation circle is what keeps the world turning by the end of the day. Look at what we are doing here. We are live streaming around the world. LJ is sitting in Australia. I'm sitting in Germany. We're doing this live. Something like this was you needed a satellite for that, just like 25 years to do something like this, and it would probably have run up to you paying 5 or 10K for an hour of streaming. Now we are doing this, with our laptop.
More than that, probably.
I remember when I was
download a little bit on dial-up back then, a couple megabytes, and you're like, oh, here's your bill for $250. You downloaded 50 megabytes of something.
I remember in 1999, I think it was, at the bank back then that I was working, we were doing a stock market day for clients, and then there was this idea. There was this famous German journalist, who would always on TV comment. So there was the idea, hey, we can patch live into him being on the New York Stock Exchange and telling something to our client. And the bill just for 5 minutes was 10,000 euro or 10,000 mark back then. So, we put that idea obviously in the trash can. But why am I saying this? We are seeing this as well. The scary part, and I completely understand that at the moment, is that through AI, this cycle seems to become very much faster. So from idea to hitting the market, it's often a couple of weeks now only. And it seems to be accelerating. So it kind of feels scary, what's coming next. And yeah, I see the danger, of course, that a lot of jobs are going to become obsolete. Maybe our job is going to become obsolete because we cannot compete with AI traders anymore. Maybe they are,
I think we
arbitrage us as a way. I don't know. I'm just thinking out loud right now. I don't see that coming as well, not in the near future, but who knows? But there will always be something else to do. I'm very sure about that. And if not, well, then the time is ripe, for something like a universal basic income. And I especially Americans obviously hate this idea, but I'm quite fond, and I'm a capitalist. I'm quite fond. Of course, there are a lot of problems that need to be solved. If everybody has an income, universal, you don't need to work anymore. So for certain jobs, there needs to be, of course, an incentive to still work. But why not? I mean, that's the dream of everybody. My basic stuff is taken care of. I always will have food on the table, and now I can do whatever I want. And for a lot of people, maybe that's slacking around for a while. For other people, it's no, I want to take up painting now, or finally I have the time, to full time get into my charts and my trading stuff and so on.
But that's original capitalism, though, right? The same deal. I'd say capitalist, yeah, sure. But that was the original democratic capitalist system where it does have social implementation into it. So it's social capitalist, right? And then we went to this Six Sigma, very brutal, raw, capitalist everything type thing, where CEOs or founders used to earn 15, 20x.
Yeah.
The lowest workers, which, fair, you started, you took all the risk, all that kind of stuff. Now it's hundreds or thousands or more multiples of lowest earners. And that's from that Six Sigma type.
Trickle down economy, I think said, called it, no?
Yeah. Go back, what was I forget the economist's names. Because we had Adam Smith and then what's he that changed it? God, I forget. If I remember it, I'll bring it up. But yeah, I agree. I don't think that's a bad idea. It potentially actually opens up capitalism if you view that as a way that people now have the optionality, the potential to go out and create new things. That's the whole point of it. It allows tinkering. It doesn't constrict. It allows that openness. And obviously with that openness, if you've got think about how you're going to eat food next week and pay your rent, you're going to be pretty constricted. You can't really spend time on that expansion of ideas and
was it
technology or tinkering and all that kind of stuff. It comes back to tinkering. It allows tinkering, and people do random stuff that seems ridiculous, and then we find something that's really cool. Like every single invention has come out from people just doing some random stuff because they're like, oh, this is kind of cool, and they're like, oh wow, I stumbled onto something else. Yeah, there you go. Yeah, thank you. Yeah.
Which is the natural course of thing. I mean, we probably all have it. You stand under the shower and you're not thinking about a problem, but suddenly you get an idea, or you get inspired to do something or find a solution to your problem. And wasn't that Henry Ford back then who also said, like, with the increase of manufacturing efficiency, he can see a future where people only have to work something like 20 hours a week or something. Yeah. Of course, that has been like turned upside down, because the thinking is now, well, you're so effective now, I can fire all of your colleagues. You are going to do all the work, and I'm going to actually pay you less for that. That's, of course, the absurd part about it. But I think eventually it will come around. Or we have a dystopian future, where we have large corporation ruling the whole world, and we are, eating, what was that called? Soil and Green in that movie.
Yeah. Well, see where we go. I have hope. I think humans do pretty well. It's always going to be a bit of up and down, and it seems wild, but I got to say we've got this far. I think we got a pretty good shot. So
that's the thing we tend to forget about. Like, our way of life and our standard of life nowadays is like higher than in the Middle Ages kings and queens would have had, and so
even on like the lowest income, like back to the 60s or 70s, like you're doing better now. There was a point where no hot showers.
Imagine.
When was it? Like, it was the late 80s or whatever, we decided to put roller wheels on like luggage. There's heaps of like random stuff like that where it's like, dude, that's so obvious, but how did it take
anybody have an idea before?
Yeah, like electricity and all this other stuff. No one put wheels on their luggage, like
Oh my god. Somebody asked about gold, I think, earlier.
I was going to say some of the other questions in general, and we haven't quite ran over, or at least not since I jumped back, pound and euro.
Yeah,
I will scope that out in the background for my sort of tops whilst we talk about some other stuff. Also, did you change your name again? This is definitely Void. This is definitely accurate.
Or Mohawk.
Yeah, he's a guy that has like a YouTube channel and makes some good F1 content.
Oh, okay.
Yeah, and it's quite funny, and it's got a bunch of sort of memes and ha-has.
Share that channel with me later, as a
definitely
addict. Definitely something for me. I don't know what to do now with like 2 races not taking place. The time until the next one is going to be so long.
I know, and they're looking at changing some of the regs that aren't quite working. There'll be other teams that will take what data they have and try and catch up to Mercedes. So
to satisfy.
It could also be very interesting coming into the next races that all of a sudden the board is thrown out and it's much closer. So hopefully, because that'd be quite cool. We'll see how it goes.
Exactly.
Not good for me betting on some of F1 because it makes it more random, unpredictable. But yeah, I've been placing side bets on F1 for the past while because it's just been the same consistency.
Yeah.
And you can just stack it. There's 26 races, right? And even if you're getting like a 30% return compounded over 26 races over the year.
It's nice, yeah.
It's been quite good. Been very happy with it. So
yeah, I quite like the new Formula One anyway. But I see obviously the problems, like we saw in the last race with the Behrman crash. That the
Yeah, I think that's a danger type thing. It's
a danger, but you can address that, but other than that, it's like super entertaining. We've never seen for a long time so many takeovers in races. So super like it. But okay, let's get back to the charts, obviously, because by the end of the day, that's what we are talking about. So on gold, just for today, if you are looking to kind of scalp gold a little bit, day trade gold a little bit, what I see here is actually quite a good setup, in my opinion, because we see the longer term chart with an upwards trajectory. We have the upwards trajectory on the 1 minute chart as well. So if I were to day trade this, for example, today, for me, the obvious thing would be here to try to, whenever we go to the -2 or even -3 sigma, to get into a long position with a goal of getting out of it when we reach the 0 sigma again. That would be my go-to strategy today. And especially the -2 sigma aligns very well with the 200 moving average at the moment. So you have your layer of confluence there. But that being said, I can potentially see also that we are, first of all, going flat now until New York later comes in. And you need to, nonetheless, of course, have your stop loss, please, always in place for stuff like this, especially if you're trading on the 1 minute charts, because we're talking about here, if you would enter right now here, that's like entering at 7:04 to get out at, 7:40 to be fair. That's quite a lot of, I'm on a 5 minute chart here, no wonder. It's like, what is that on a 1 minute chart? $40. So on the 5 minute chart, let's quickly go to the 1 minute chart. Yeah, but it kind of looks the same on the 1 minute chart. So whenever, we touch the lower sigma bands here, I would trade into the direction of the overall trend, which in my opinion is, at least since yesterday evening, upwards. So there you go. This is my thinking on gold. For euro dollar, as I said, I missed, really, it's like, why didn't I get into this trade in euro dollar? My God, I would have really entered at the lowest point, and this is like, but okay, anyway, it is what it is. GU, you want to say a couple of words about GU?
Yeah, give me 1 second. I'm just mapping something else out. Okay, let's go over. I haven't looked at GU yet, but as far as euro dollar first that we were talking about before, so ideally that would have been my sell point, which basically missed through there. So this comes into this cluster here. I know we got a heap of rubbish on the chart at this point now with old trades. I have to go through and clear it, but
LJ created
sometimes
the chart.
yeah, sometimes I keep them because it's good for us to go back to sometimes, and then eventually I'll scrap it all. But either way, you guys can see through here, basically, let's hide it for a moment. These highs where we've got the candle closes, there's a bunch of wicks through here. So this ideally just above that 116, the round number, a slight pushover, which we've got a bunch of these wicks and just a couple candle closes. You can see clearly through there, that's sort of the time series range sort of top through that period. So I would have preferred to short through here. Now I'll see if we're starting to pull back up. We've broken through this initial point, which we did get capped out. On the hourly, we didn't close above. This is on the this is the 1 hour. Actually, we did close above through that, in fact. So came down, pushed through up. If this pushes back up towards 116.10, I'll see how we react around there. If we can't push it, then I'll potentially look for that short. That's probably going to be back into this drive candle through here earlier on. This was end of Asia. So 1600, that's about 4 p.m. my time. So end of Asia, that's what I'd be looking for. And then potentially a move continuation higher. So ideally, I'd look for another push to at least 116, just a touch above, right? 116.05. We did have that slight, we've touched on it, and 02, but I'd like a little bit of extra coverage overall. Because I think we could then also see the top half of this at like extension overall. So let me check the pivot points. This is the pivot point through there.
Do you think like above that the air gets thinner for euro dollar? Because I could see us like, that's why I like your idea, actually, like moving first down again into, something like 115-ish, so to say, before maybe, if we see like a continuation of risk on, that is, of course, before trying to go back to 120.
Yeah, I agree. So I think potentially if we do get that move lower and we do actually hold this area, so you can see below these wicks, this is a hourly, like I was saying before. If we get a touch just above the wick on this prior hour's candle, so that's about 115.82. So say we came to about 115.85 or so, then I would see a push up towards these highs at about 116.30, plus minus like 5 pips. Right, so it might be 116.35. On my other personal stuff, I've got like that as another key level. There's some other indicators, that kind of thing. So ideally, I'd wait for another move to here, short that, then buy up from there. Or else, if we don't get the move up there, I'd look to buy from about 115.85, looking for 116.30 overall. The pound is pretty similar. It's still pushing higher overall. It's got a bit more strength at the moment, a bit to go. It also didn't run quite as hard as the euro. Obviously, the euro is the majority, like the major currency affected by the current situation. So no surprise the pound didn't run quite as hard. But again, I'd be looking at basically where this 200 moving average is. And if we go back through here, this is kind of the midpoint of this area. And even through here, if you look at things from like a time series, like how much time we actually spent trading, oscillating this kind of point, we go like that. You've got the tops through here at about 133.47 just there, where we got tapped, and this wick here at 133.31. So I'd be looking about the 200 moving average and this high up here. So call it 133.20 to 133.50, right? Where you can see we've spent a long time trading through there. We've had plus minus wicks, falls, tops, bottoms. Like it's a lot of chop through there, but this is generally, yes, we have this range, but this is where the most of the time we've traded has spent. And you have the wick point there, the 200 moving average. So I'd probably expect this not to push beyond there. I'd say we'd get a slight fall from there, come down, and then up like that. So very similar to the euro. If we get that push higher, slightly lower high from that wick, push back down, then push up. Right? And so the push down would be somewhere about 132.60 to 70, depending. And that's at that wick high just here as well, or candle high. Then I'd see us moving up towards 134.80 or so, ultimately, 70 to 80. That would be my preferred trade. So again, either a short from there to here, or just wait for that long through there. Now, at the same time, this is all headline conditional.
Yeah.
We can still get some flux, but we've had good news. As it tends to go, we have good news, then following bad news. So that does still follow that form factor of a slight, continuation of the good energy, good vibes right now, and potentially some slight negative headline. We get that dip. I think, though, we've still got the bottoms in generally. Like we've seen peak fear, peak risk, pricing in of that potential forward risk, like we're looking at with this. This one, like people just aren't quite pricing for further downside, which I did highlight when we first looked at that as a potential that we are under pricing risk, but it seems more that yes, people are wanting to see the upside and a confidence in a de-escalation or resolution.
I remember on Monday we were talking about the S&P VIX as well, where I simply showed this chart on Monday and said, like, of course, Monday we were on this level up here. Hold on a second. We were up here. And I basically asked, if you zoom out for the VIX until, what is it, June 2016. So we're looking at 10 years of volatility data here. In a scenario where the VIX was over 30... Huh?
I was just going to say, this incorporates a lot of Trump, right, as well. This is
exactly.
all Trump, right? This is all Trump, for the majority of
this. Get worse than...
Plus COVID.
Yeah, plus COVID, exactly.
Yeah.
So
we majority of it.
Looking at Trump, we're looking at COVID. When it comes to uncertainty, probably cannot get worse, than the data we are looking at here. And I said on Monday, if I show you this chart, what would be your go-to strategy, if you have to trade something? And of course, most people said, well, I would bet on the VIX going down again from elevated levels. And this is exactly, especially, of course, yesterday. With a nice move we saw in the evening what's happened. Now 24.7 is still an elevated level. Normally you're looking at something like below 20, which is like the pocket zone of where we usually trade around, where markets function normally, where we have like day by day or week by week or month by month gains in the stock market. But this is why I don't like, reading all these fear, uncertainty, and doubt headlines we see out there from mainstream media, because they are just feeding into what people want to hear. People like to read about crisis and everything bursting and bubbles and we're all going to die tomorrow and everything is bad, and and this is why I heavily actually invested, despite my plan not investing until autumn, into stocks again. Partly, of course, because you, LJ, showed me that nice graphic about that in reality tech stocks are historically speaking quite cheap at the moment. And on the contrary, stocks like Walmart, are the expensive stocks because we had this sector rotation. But you gotta be there when something like this happens. When you see elevated levels like this, they are going to come down eventually again. And the VIX goes down if stock prices rise. It goes up when stock prices fall because downside volatility is more sudden and more severe normally than upside volatility. You rarely see the stock market jumping up by 10% within 2 days or something like this. And that's true for any asset.
We did have this. Sorry to interrupt.
No worries.
We did have this earlier. I was meant to. This was ages ago. Ebridolf. I was meant to bring it up. So are we investing profits long term aside? So yeah, definitely. Just like Dirk is talking about right now, picking up Nvidia. Bitcoin on the lows. Some of these other players and that sort of thing. Into longer term portfolios, stock portfolios, that kind of thing.
Yeah, don't. You always need some cash on the side.
Yeah, sorry, man. Like I was meant to bring it up earlier, and we started talking about other stuff. That kind of sorry, but
But hey, you see, LJ doesn't forget. So, you always need some cash on the side. So never be invested like 100%. You always need some cash for situations like this to be able, to put more chips on the table, really. And a good way, not in long-term investing, but if we put that analogy to trading again. So my go-about strategy for example, for my option trades is like every month, if it was a positive month, that is, of course, which not always is the case, obviously, I take half of my profits out. And put them into a cash reserve. The other half I leave in because I want to compound. If I, let's say, trade with 500K, I want my trading account to be at 550 or 600K or 700K if it was a very good year the next year. So I earn more interest, so more revenue on my trades that go well. I hope that makes sense. And I think that's the only way, you can ensure, first of all, that you maybe can live off your trading profits, but at the same time that you can grow your account. And really, it's fundamental. It's one of the mistakes I made actually in the beginning, that I forgot about having something like a 5% cash reserve, specifically for situations like this, that I can jump into chances, that I don't need to liquidate other things that still have like a potential long-term revenue for me. So it's I have a cash reserve really, and it doesn't matter, I have it proportional to what you are trading with, what you're investing. If it's 10K, then have 500 euro. If it's 100K, then have 5,000. If it's 1 million, have 50 or 100,000.
Yeah. And sometimes you might even go to like 20%.
Yeah, absolutely. Which is what I slowly did last year. I cashed out of Bitcoin, I cashed out of stocks, and was sitting at times at 60% actually.
And that goes into a deeper thing about taxes and that kind of stuff. The same thing you guys would know about all sorts of the big guy hedge fund traders and all the famous traders in general, whether it's I don't know, Jim Simmons, Druckenmiller, Ray Dalio, all this kind of stuff. They didn't just take advantage of trading and do really well in trading. There's the other portions of like tax advantages and structuring things properly and all kinds of stuff like that. So once you figure out the whole game with that, then that's how you sort of shuffle the pieces on the board. I did have corn just here. This was the other thing I was looking at. So obviously, corn that goes into the urea fertilizer, which goes into cattle, food prices, all this other kind of stuff. Also, as far as oil, the next best thing is going to be ethanol, which typically ends up coming from corn, right? And we saw this starting to fall off as well, which was very interesting. I was looking at like a corn versus Brent like spread, and we saw the divergence there. I mentioned it yesterday. You weren't here yesterday, but we were getting some of that similar type factor, but obviously corn dropping, a good bit more. And then we've fallen out of that zone, retapped and now come off. Whereas Brent still has that slight premium, similar sort of tops, that declining tops through there, but not quite the same overall dip, which comes back to how we were talking about that, Brent will have that sustained premium for some time because of the now supply and production issues that we've seen. But this is now one of my going forward, that and dollar yen, obviously towards that 160. It seems we're well away from that. But that and corn are basically my two favorite markets to watch right now, as far as
interesting with corn there, I must say that that actually tells you a lot, about what the markets are expecting. Not a shortage of fertilizer, as it seems, On the contrary, I haven't looked at corn, I think, never before, honestly speaking. Same like like soybeans and orange juice and all that commodity stuff. Not on my radar at all, but that's really interesting.
I mean, it's one of those assets that you don't really look at, and even big institutions, trading institutions, outfits, they don't really trade it, but they still have those trading lines open for these certain times that when something does happen, you can go and trade stuff like corn or natural gas, like all these like sort of a bit more. I mean, natural gas is obviously traded a bunch, but some of these more obscure assets that are there and they're interesting to look at, but you don't you don't really look at them daily. It's very, very selective.
One of the last exchanges, by the way, in the world, I think it's mainly traded on the Chicago, Mercantile Exchange, where you still have an actual trading pit. It's not computerized, where you have like people screaming around. That were the times. I was one of those guys in my early days as well here in Germany.
Now there's just like 3 people on the floor. Just going around in circles. But
interesting, really. This is why I like streaming with you so much, because you bring up things like this that are like totally off my radar. So you force me to take out my glasses sometimes, and look actually around me. Because this at glance is telling me really, like my first intuition at least is like, well, everybody's talking about fertilizer shortage, but we don't see that in the price expectation, as it seems. I don't know how other commodities look. So if you look at wheat or something, for example, if it looks the same, actually can try to bring that one up. How's wheat?
Cash contract, we can go. I mean, it's definitely come off. It's a bit more elevated. It still hasn't. It's sort of trading a bit more like oil, I would say.
But if you zoom out to 2022, look at the levels we were there on wheat.
Yeah, that was with the Ukraine situation, because Ukraine has 20% of all calories for the world, in fact, with wheat, which is pretty big. Fortunately, Russia decided not to disrupt food supplies for the world. They're like, all right, we won't touch grain.
Yeah, we only want to get rid of Nazis.
Yeah, that would be that'd be a bit bad. It's the same thing where like similar deal with that, where we were talking about the current situation, and there was a whole sort of back and forth with Trump and Iran talking about desalinization plants and hitting that kind of stuff. I'm like, there's no way we're actually doing that. That's a war crime.
And it's
funny enough, you're not hitting right. That's fully that. There's no. You have to call that a war crime. Right? That's
like 1.5 a week. Exactly. This is what Iran was threatening. No, we're going to attack power plants and desalinization. Is that how you pronounce it?
Yeah, desalinization.
And back then, the USA was like, "Oh, you cannot do that! My God, a crime against humanity." And now they are like wording it exactly like Iran did. It's
the same. Yeah,
so insane. I really cannot wrap my hand around it. It's like the Muppet Show is ruling the world, really.
Yeah, and that's where I was like, okay, I think this is peak. Like that's the bridge too far that we're not going to. That's peak rhetoric, that kind of thing. Sandy was saying, like you said this a couple of times. So please, gold spread is too high. Please fix the gold spread, that kind of thing. I'm pretty sure, like, I'm looking at my own terminal right now. The gold spread per, like, dollar per ounce on gold right now is 0.5 of a dollar. If that is too big for you, what time frame are you trading?
Yeah.
Trading like a tick chart or something, like 15 seconds. You know, like what? What do we mean?
Aiming at like 10 cents, per ounce and take profit. Okay, I can understand that, but come on.
You got to if half a dollar is too big for spread, you need to probably reassess how you're trading, because even if we go to the 1 minute, like this has moved, like just this past 30 seconds, like what, $2.5-3, right? Constantly. So if 0.5 of a dollar per ounce is too much, you need to probably reassess how you're trading. Probably zoom out from the 1 minute, because okay, say you entered down here at let's call it 16. So you didn't get quite the bottom, but you saw on this candle. Actually, let's go up to 17. So once you saw this sort of break of these prior candles, or on the 1 minute you're scalping, let's go to 17. Jumped out here, you didn't quite get the top of the wick. Let's go. You went just before these tops. That's 26, 27 ish. So you've basically got $10 movement on gold, and you paid 0.5 of a dollar in spread.
That's 0.01% at the current levels, by the way, the spread. No, you go through the spread 2 times. Yeah. So let's say like you paid 0.02% in spread plus commission. It's very low, guys. Really, even if you trade on the 1 minute chart, that is really, really low.
Very low. So even for that, go trade anywhere else and see what the spreads are. you know what I mean? Like, this is extremely low. So,
it's not only spreads, also it's also execution. It's like, if you have a delay of like 5 seconds, then we don't need to talk about spread or something like this. We had a good question earlier from Stack79. Do you think for a funded, you probably mean, account, it's a good idea to risk 0.5% at first, and when you get like 3 or 5%, starting to risk 1%? Or do you think it's better to start with risk 1%? It's completely up to you. I can see.
One
yeah, sure. Take your time. I can see your reasoning there because it kind of feeds into what I like to do personally, by the way, as well. You kind of have like a little bit of a pocket already on the side that if you risk 1%, that you're not immediately with a whole account in loss. So yeah, absolutely a valid strategy. For me personally, 1% of risk on most trades is a little bit too much. So I like to go with 0.25%. The trade that the gold trade, for example, is one of the very, very few ones. If I look at my last, let's say like 200 or 500 trades, where I actually risked 1%, or let me quickly check. No, it's 2% actually I risk on that trade. But it's what you're doing here basically is like you're trying to create a scenario that you might feel comfortable in. And if you are like me, as I said, I'm a guy like this as well, more comfortable with my trading decisions when I have a little bit of money, little bit of wins already on the side, like 3 or 4%, and then start risking more. That's totally legit. However, I would not go above 1% like per se, because even if you have a strategy and you're right like 60% of the time with your trading, there will eventually come a phase where you have like 3, 5, or maybe even 10 trades in a row that are losses. And that's, if you take like 1% or maybe even more, quite difficult on a psychological level, honestly speaking. Welcome back.
Thank you.
I was, by the way, the chart I have up here is PayPal, because
PayPal.
I remember a couple of, I think it was like earlier this year. I know we were talking about it.
Yeah, we were. It had that pump.
Yeah.
And then it's I haven't checked it since, but it came off because there was potential like buyout or something, right?
Yeah. It hasn't really moved that much, We're still.
Was it Square or Block or whatever it's called? Old mate that started Twitter originally, his payment company. I think it was.
Dorsey, you mean?
Jack Dorsey. Yeah. Is that Square or is it called Block now? I don't know. I can't remember.
Don't ask me.
But that was when we were at. I'm gonna zoom out.
By the way, just to wrap things up, that's a good thing Abradorf Linker is saying here. If you reach like a certain percentage of loss, for example, 1%, or I think for most accounts on the Fivers, it's like this 3% rule of daily loss limit, force yourself to stop trading, because there's a high likelihood that you're going to do something like revenge trading after this. You lost like 1% or 2%, and now you are desperate, to gain it back for the day, so you have, a balanced sheet by the end of the day. Don't do that. That's like one of my, especially for crypto trading, I have a loss limit of 4% per day that I impose on myself. And I sometimes reach that, by the way, as well. Strategies that I utilize for leverage. But, if I reach those 4%, I know exactly if I would continue trading, there's a high chance that the losses keep adding up, just because I'm in a totally different mental space than I would be, on a neutral day or on a positive day. So definitely something, thanks for pointing that out, Abradorf Linkler. Very, very true, and something you definitely should do, yeah.
Yeah, and on this, like you were saying, Doug, I heard what you're saying. So risking 0.5% at first, and then when you get to 3 to 4%, start like profit, I guess, start risking 1%. I wouldn't say risk 1%, but what you can do is do it as a percentage of your total capital. So therefore, the dollar amount that you're risking does go up. So as you're making profit, you will start also making more profit. And then the same way, if you're in drawdown from that base level of 100, you'll be risking less, right, per dollar as you go down, right? So it's just, if you keep it purely as a percentage, but I wouldn't say go up to 1%. I'd say keep 5.5% or 0.6 or 0.7, whatever it is, all the way up and all the way down. So the same thing, if you go down to 95, your 0.5 is not going to be the same as when you're at 100K, right? Say if you're hypothetically on a 100K high stakes, maybe you're on a 10K, whatever the corresponding thing is. So 0.5 on 100K will be $500 risk. If you go down to 95K, it'll be 400. Right? So and then as that keeps going down, it will reduce, which then if you do have edge, that edge will over time produce, show itself, and you will start building up. And the same deal on the upside, that will also express itself on the upside where you can start compounding quicker overall. So that's sort of how I do it. And normally that as well, it helps when you are in a bit of a drawdown that you don't keep just chunking down in a drawdown. It should slightly slow that curve going down, which if you do have edge over time, that will start to pick up, right? So that's kind of the way how I do it. So I would put it at like 0.5% of available risk capital. And you might even not do that off the full 10%. You do it off like your daily amount. So hence, instead of 0.5, it might be 0.25 because you got 5% daily, right? I tend to have a setting about 0.4, and I'll go up to 0.8, 1, and then 1.2. But that's always when I have like very confident trades, like I've got like a very hard level, I've taken the time, and then I'll layer into it. And then I do also have some accounts that will be literally just 0.2, and others like a personal accounts or something where you have a bit more freedom and that kind of thing, where I might do 1% or 1.5% or 2%, right? Yeah.
Also, don't underestimate. Losing like 1% on a 10K account feels different than losing 1% on a $1 million account. And like on a psychological level, if you think about it, oh wow, I just lost 10K on my account, it's different than thinking, oh, I lost $100. It really is going to have a toll on your decision making. So you gotta be able to really think in percentages and not in absolute money, in my opinion.
I agree. Yeah, I've never had that. For me, it's always been percentages.
I did in the beginning. Yeah.
But yeah, I definitely hear a lot of people like they think about the dollar terms, like, and then obviously translating that to what it could do for you for your life, or like I could have bought this or done that, or I could have paid my rent up or fixed my car or gone on a holiday or done this or that or whatever it might be. But yeah, I definitely, the more you can stick to percentage gains and thinking, both on the upside and the downside, you will do better, because that is where your edge will just inevitably express itself, right, over time. And that's the thing. Like we said before, you're here to trade for a long time, not for a short time. And if you can do that and do that into a routine, you're guaranteed over time to just grow and grow and grow and grow and grow.
Yeah,
there's a lot of people that play the hot and fast, pay out, dump. You can do that. I mean, it depends on your personality. But if you're looking to make this a career, obviously that's the way you should do it. And at the end of the day, that is what fivers themselves are looking for. Those sort of stable, longer-term traders that are reliable and can go to market and just compound.
That's the thing. I think really this is like...
You win, they win.
If I had to go back in time and approach young Dirk and give him like one tip, like what to do in trading or what not to underestimate, it would be compounding. Don't underestimate like the effect, compounding can have over a longer period of time. So I'm talking about here a year or 2 or 5 or 10 years on your account balance. It's insane, really, because you earn interest on interest on interest, or like trading wise, of course. I'm not talking about real interest here.
Exactly. So this is like when I first started trading back in university, this was like I was writing everything down in like a logbook type thing, and I'll hold it up to the camera. You see, I first opened an account with just like $200. Sorry, this might be backwards on the screen, but you guys can see. But how I was recording profit was in percentage. So right from the get. Sorry if that's not very legible to read, but
And you are the prodigy of trading, really. You did it all correct right from the beginning. It amazes me. It really does amazing me that you skipped all of these hard learning steps sometimes.
These were all my back in the day, and I keep this beside my thing now to look back, and I just, there's pages and pages of this. It just keeps going on. I've got, the asset, like it was Aussie dollar, New Zealand dollar, Euro dollar. There's some gold in there. I'd record, the holding costs, end of week, end of month, end capital, all that kind of stuff. So yeah, if you can do percentages, that's definitely the way to build. And
are you still doing that, like in a manual way that you?
Not so much these days, because I have too many accounts, too many pieces going on. The logistics of sitting there and writing it down would take too much time. So instead, these days, I just put it to like my FX book or something, or else just download. You press Alt E, I think is the command on MetaTrader. You can download the PDF of your trading, that kind of thing. Plus, my broker stuff has like their own internal breakdown analysis type thing. So yeah, I actually prefer doing that. I think it's like a good exercise.
Yeah.
Rather than sending it to like a trading journal. I've always preferred doing stuff manually. It's the same thing in when I was at school doing math.
Yeah.
We had like a computer program, and it was called ICE, which when you're at high school and you're in a program called ICE is questionable. Overall, there was a lot of jokes. But either way, the point was it was like information communication something. It was basically you did everything on laptops. But we come to math, and I'm like, dude, I'm not doing this on a computer. I just pull out my textbook and be writing stuff down. You learn so much better. You take it in, all that kind of stuff. So yeah, I definitely will go. I go back and review it all and sort of put things in numbers as like a net thing, but I'm not writing down every single individual trade because it will just take me way too long. So it's more of a summary analysis rather than
because, my question, of course, stems from something I experienced myself. Nowadays, I have like everything unified. I have this like dashboard where all my accounts are connected to, where I can see what's going on. I have like integrated buttons to trade there, so I don't need to, have like a dozen MetaTrader instances open at the same time. But when it comes to journaling, I have a printout. And I actually physically print that out every evening to look over it again if it was a day I was trading. But it still feels different than taking your time, opening your journal and taking down all the trades like manually, or my thoughts even. Must not be trades, but like my thoughts about the market and so on. Because otherwise, I often tend to forget like ideas and hypotheses that I was thinking about the prior evening, for example. I did this last week. It's actually funny. I told that on Monday, like on Saturday, we had a couple of friends over, so there was drinking. I got a little bit drunk. After this, I was at this creative level drunk, like so not blacked out, but where you feel like I have ideas coming flooding in. But I knew if I don't write down these ideas now, I'm going to forget about them. So I wrote an email to myself. It's like, hey, Dirk. And I said, like, you are drunk right now, so there's a high chance you're going to forget about this. This is what you were thinking about it. So the next day I was waking up, opening my mobile phone. I was like, what the hell? Why did I send an email to myself? And then it kept coming back, oh, yeah, right. I was thinking about this and that.
Dude, that's beautiful. I definitely, okay, so same deal with that, with ideas or trade ideas. I often will sit down. That is something I will do, and I'll sit down and write it out on paper with like, where do I think the euro is? Where's probably the bottoms? Like, where are the tops? What am I thinking about? And then go through that, Aussie dollar, gold, NASDAQ, whatever. Think about the current risk sentiment, high beta, lower beta, go through a sort of process like that. I used to do it a lot more. Now it's been more sporadic. That's mostly, again, because I've been so busy for some time with a bunch of things. And normally I try to do that on the weekend, but I'm so busy through the week, then the weekend becomes like social catch up with people and that kind of thing that we get stumped out. But yeah, I definitely prefer that. And obviously I've made steps to, do more of that once again. And yeah, I can see that. I love that idea of drunk Dirk emailing yourself. Dude, that's hilarious. Honestly, that's beautiful. But I know what you mean as well when you get in that, like, just enough that you're in that creative, like, loosened state where you go, oh, I've got an idea. And then I've done that before as well. Often on the weekends. Same with when I'm trying to code something, we use AI. Like, I have a couple of drinks, I'm like, oh, that's a good idea. And then just, it is really good, honestly. But yeah, so if you guys are not journaling, you should journal stuff. Yeah. Sometimes it feels like you're just doing the thing, but other times once you do it enough, you'll notice like a pattern and that kind of thing. But it is good. Obviously, it can be hard to do it manual. It does take some time, take some effort. I would still recommend that, especially if you're just running
in the beginning. Like always do
a main account. Yeah, especially if you're just starting out. Over time, you're gonna build up more things, more strats, more approaches, that kind of thing. Then maybe do the printout type situation, and then run over it, and go with a pen and highlight certain things, or put X's or asterisks next to this or that, or then you put comments next to it. Maybe print it out, get a book, glue it into the book, and have the page adjacent where you can write comments next to it, something like that.
Good idea, also.
So yeah, you'd be surprised just how much that will improve your trading and everything. You do it for 3 to 6 months, and you'll see massive progress. And then after that, it starts to also get ingrained. You can start to step away from it. But definitely a great recommendation.
It goes down the same line, like when you look at hedge funds, for example, that do directional trading. You will always have, there's normally nobody on the team that decides, like, I'm going to take this trade now. They usually always have somebody that kind of plays the devil's advocate. I think that's the right term for this. Like questioning that trade. You are doing this trade because of that reasoning. Well, is your reasoning validating? What if it's invalidated? What are you going to do then? So there's like a back and forth, Nobody has like the authority of the final decision. There's always this process of, questioning yourself. And in a way, you do that also by journaling, because you probably don't have somebody, sitting beside you who's also a trader who can question and doubt your trading decisions. So you have to do it yourself. And one way of doing that is journaling. Especially in the beginning, manual journaling, because it taps into other resources of your brain than just printing something out or seeing it on a dashboard or something. You can do that later, when you're confident and your flaws and your good and bad habits. Like I said, even after 26 years, there are still things I'm not good at. One of those things is scalping. I'm a terrible scalper. I'm trying to learn it. Guys, but I'm not very good at it. And one of my flaws, like I said earlier, is like taking profit very often too early. But these things I found out because I, dug through my journal in the early days, and I had to realize, well, there's a pattern to things that you do, and it's not a good pattern.
Exactly. That's a very good point, because especially if you're not naturally like a contrarian thinker, which, some people are, the general human experience is not to be, because you want to assimilate and connect with the group and the tribe and society. So a lot of people sort of follow the common thought. And there's other people that are very naturally contrarian. And so if you have that and you're able to sit there and think about your own thinking, great. If not, it's exactly what you said, like a very good process to go down and put that all on paper and then try and test it. Just like, I think we're both very similar on this, and same with the macro type thing. It's like science, where you can go back every day and you come up with a hypothesis, you test it in the market, and then difference in science is obviously you get a scientific result. In the market, you get like a profit or loss. And it always changes, which keeps it very interesting and very dynamic and new and refreshing. But there are certain patterns as well that you can figure out and exploit those. And I think that's a really good way to put stuff through. There was what was the other thing you said earlier? I was going to also mention. I've lost it now. I'll have to think. Give me a second, and then if I come back, because there was another further good point.
Don't ask me what I was talking 10 minutes ago about.
No. That's right. Yeah. Bangladesh was saying use only 2 indicators and it's trading. That's just what we have up on the screen, like what Dirk has now. These are sort of, we both use very similar like base indicators, and then we've got a bunch of other charts with more complex stuff and more deeper outlooks and confluence and that kind of thing. Often we try and just have the basic stuff up on screen so that you guys can actually see what's going on, rather than charts being flooded with all sorts of computations and that kind of stuff. Like I'll be looking at options and futures levels and all sorts of other things in the background. Same with Dirk. But if we have that all up at once, it will just look like a mess overall.
Exactly.
So,
an example, for example, what you see here feeds directly into this, for example. So I try to hard code this as a indicator called KNN pivot nexus that looks into how to put that into plain English, when is a reversal really a reversal and when not, and starts printing. The bigger the arrows are here, the more valid that structure is. Like you said, for example, saw earlier during this session on euro dollar, it said like, well, this structure down here looks like a reversal, and it was a reversal. It just said to a minor degree, it looks like euro dollar is topping out a little bit, and you could potentially catch a trade down here. But if I just show you this, I know already what's going to happen in your mind. It's like, oh wow, this thing is like printing reverses so nicely. I want to have this indicator. But in order to use it, and especially to know when not to enter a trade, you would know what goes into it, which to a large part is what we see here, for example. So I rather show you like my manual short thought process about, when do I enter a trade, don't I enter a trade, than showing you how that whole system looks like in an indicator. That's like, taking a shortcut.
Exactly. What is this about?
I love you too, man.
Hey, if it's love, it's good.
Love at first sight. How can I not love somebody called Abradolf Linkler? As a German.
Got the display pic as well. That's great. That's great. It is. Okay. If you guys want, throw anything at us right now. Again, we're in that same period we've been in for a while. We come through, London opens up, and we get this burst of activity. Then it's a bit of a lull in price action until New York starts. We are coming up to some of the levels that we touched on before to potentially take some kind of a short on Eurodollar up through here at about 116.10 that I was looking at. So I'm keeping an eye on this. If we start returning quicker rather than later on the lower time frames, if we go down to like the 1 minute right now, starting to roll over. So if we get another little bounce and pick up towards 116.05, 07, I might consider a short through here. The next point to tackle would be this 115.95 with the ascending 200 and 100 moving average on the 1 minute. I'd like to see that break if this is going to continue, and then back into this level by these lows, a slightly higher low. So that goes back to that 115.82 to 85 area we're talking about here. If we zoom back out with the higher time frame, so delete that so it doesn't get confusing. We'll go to the 5 minute. So ideally, I'd like to see something like that, right? As this 200 is also rising through here, come back into that level, potentially we get a pickup from there. This is assuming, obviously, all things forgiving, headline stuff going on, that we don't get some negative headline dip through there. If we do, I'd probably still look for any kind of dips to pick up. So if I did get stopped on that, I'd probably still pick up back down here. So if we went down to 115.50 to 60, I'd probably re-enter and go long once again. So see where we are. But this is very close by my potential short area for like a near-term short, bit of a scalp-esque type trade, to then go long from this area down here, about 83 to 85. And that's going to be similar deal across the board for all the majors. Aussie dollar as well. I think this was from earlier that we marked out. That was based on the potential of, I think, when we were talking about NASDAQ for dumping with this further thing with the options price down here. Aussie dollar might run a bit further with that risk-off type aspect. I'd still be looking for buys down there. Right now, I prefer to buy the euro overall. I think it will end up being a bit stronger. The pound, similar deal, a touch higher. We're now starting to roll over with that. So we might have gotten those tops and maybe one more bout in it. If there's not, I might just enter the trade where we are. But again, similar deal, down, right up. Dollar yen, I don't really like a trade entry on dollar yen. Overall, still bearish, but given the current structure, I'm not very favorable to it. So I prefer, right now, probably the euro or potentially the Aussie on the basis of a pullback with the NASDAQ coming down and the options level for today is a bit lower. And then buying up from there into
where are we at? 23,716 or what is that?
Yeah, 23,716.
Okay, interesting.
For today. So a touch lower. So we get something like this down into the 100 moving average and then higher.
But overall, you're more like thinking in terms of general risk on, right?
Yeah, generally risk on, generally buying the dip. I think we're kind of at that point right now. I can't really see. I can't see further escalation pushing price beyond what we've had. I think we're at peak fear, peak risk, peak concern, whatever you want to call it. And there is definitely that hope trade coming in. And even if, obviously, the longer term stuff is how long the Strait will take to open, which will come into inflation impacts and goes into the Fed, that kind of thing. But as far as the actual risk premium, that is starting to unwind.
Yeah.
So the risk portion is unwinding. It doesn't mean we don't still have a problem or concern or issue, but the extreme risk, like the tail risk premium, is being removed. So I prefer to buy the dip coming back into a general standard risk situation, if that makes sense.
That makes a lot of sense, actually. A nice way to put it, actually, like the standard risk situation right now. We are more in a tail risk portion situation, so to say. Yeah, I'm seeing here a couple of message like about the customer support not answering. Give them some time, please. They will definitely answer you. But of course, you're probably not the only one contacting customer support. So be patient, please. I know it's sometimes difficult to be patient when you have a problem, but they will eventually get back to you. We here, as we are streaming, we sadly cannot help you. So we don't have any insights there, but be patient, give them some time, and customer support will 100% get back to you.
Yeah, so there's definitely a backlog. I think Rich was addressing this earlier in the stream. So yeah, there's been a bunch of backlog. That's the main problem right now. Everything is fixed, and now it's a process of going through each and every individual one of you guys' issues, which obviously there's way more of you guys trading than there are people in the office to go through each one. because they have to go through it manually, right? So there's like thousands of you, and there's like tens of people in the office. Okay, so that does imagine you're sitting there and trying to go through each one, and it is a, there's like an audit, like, so people that got in earlier, now there's a big train going along. We are subject to the same stuff. Myself, Dirk, Rich, Will, everyone on stream. So we're in the same boat. I've still got an account waiting for the same stuff. So end of the day is just be patient. I know it's frustrating, can be annoying, that hasn't gotten sorted out. But the thing is, trying to do everything promptly and make sure everything, like everyone gets exactly what is correct. So that does take time to weed through it all that kind of stuff. So yeah, as long as you guys are patient, it'll get there. Don't worry. If you've sent the emails, sent that kind of stuff, just sit in your hands, it'll get done. Right? So unfortunately, I can't give anything more than that. Like Dirk said, we are not in control of it, but it will. It's all being worked through. So people are systematically getting processed through now. So you might just be a little bit further in the queue, and then eventually, once it comes to wherever you are, it'll get done. So yeah, don't worry, don't freak out. It'll just take a bit of time. I know it's annoying. Sorry, guys. But yeah, it was all a bunch of background troubles. I brought up the thing with like Bloomberg, even posted some stuff like UBS had their trading floor down for several days. And these are like massive institutions, like global banks, and they were completely flawed as well. So it's a full background thing for the whole financial system in general. So yeah, 5 is now have to then go through all of that stuff one by one. So it does take some time. So yeah, apologies, but it will get there. Don't worry.
Eventually, don't worry about it. And like LJ said, we are going through the same, like when I have a question, for example, or problem with my account, I also go through customer support. It's not like, that we are directly contacting the CEO or anything, which also would redirect us to customer support, because that's the way it is.
Yeah.
Plus you have actual people, sitting there and working on your problems or trying to answer your problems, and not some kind of AI chatbot that's just going to give you generic answers to your questions that don't really help you.
Yeah.
What is that? Is journaling, like not journaling? I don't understand that one, honestly.
I think instead of journaling,
it's a word play.
Yeah.
Okay.
Play on words. I was just going to say, so
journaling, that's what I do, correct.
For the NASDAQ, Dirk, this is kind of where I'm looking at potentially. So up by these sort of wick highs that we, smashed up through some of that good news and then fell down. And that's also this trend line that we've had sort of capping price recently. So that's my next port of call as this gradually gets there and that further decline. So it's
what price is that up there?
24, call it 24,500.
Yeah, exactly what I'm looking at as well.
400.
Because that's where the 8 weeks moving average is at the moment. So I super would love to see a pullback all the way up there. And then it's decision time. Are we going to, resume into or continue a risk on move, or are we really going to see like a bit of a more bearish structure unfolding?
Yeah.
Richard, welcome back.
Hello.
Welcome back, Rich. How are we doing?
Thank you.
And Wilhelm, welcome back.
Well, hello there.
Welcome, guys. Welcome. I was just going to answer this firstly. LJ, how do you find levels through options and futures? So, futures is another question. I don't have a proper futures platform up right now, but I'll go through the options, at least for stuff like the NASDAQ. What I primarily use is this site. So it's optioncharts.io. You guys can see up here. I can see my screen is slightly lagging a bit on the stream, but that's what you're looking for, optioncharts.io. And if we go to what it looks like on the front of the page, it's basically like this. Scroll down, go to index over here. Then say you can pick, S&P, NASDAQ, whatever you're trading. So we'll go NASDAQ in this case, go over here to option charts. Now you go to expected move, and this gives like a projection curve. The easy one to look at is probability distribution, right? Which will just put in a very simplified sort of bell curve type thing, 23,716. This will shift a little bit coming up to the expiration. Normally at this period, it's pretty firm. So hence I've outlaid that through here, 716. Now this is for the 0 days to expiry options level. So that's for, they become very popular, very heavily traded in recent times since they became available. And it basically produces what's known as like a gamma pull towards that level going into New York. So once New York opens, these trades clear, the options, then the spot will tend to shift either up or down. The big thing is to remember if there's like a news event or headlines or something that can pull price way away from them because you've got a new piece of information into the market. But typically how you want to trade it is if the market is outside of that price, you want to trade down towards it, typically, right? So the same thing like we've seen with here, if you can see that they're very level, you can see this price action ended up being sort of stuck there. And we had this level down here, we traded to there, oscillated through there, through New York, and then we pulled away. Same with this was prior to New York, we pulled back into it, we then went further, same through here, we were down here, pulled back up into it, and that's sort of how you trade it back and forth. So for instance, today, depending on the conditions, depending on what news is coming out, you might look for that to pull back into here, and then this is the question zone, where either you get a push higher or potentially get a push lower. But as far as trading it prior to that New York open, you want to trade it not when, if price was like sitting around here, you wouldn't want to respect it so much because it means you're already at that area and you're going to get a push up or down. But if you're already away from the price, you tend to see, on average, from me doing this for quite some time, end up being about I think it's like a 78% or so probability each time that you meet that price and then either push higher or push lower. So it's a pretty good thing to watch. And then you take in that consideration of what's actually going on, if there's other news or whatnot. The same thing when we dipped down through here, the options level was up here. This was obviously off a headline candle, but we end up meeting that point. So it does tend to coincide with headlines as well. There were more that we had through here, but it was taking up too much on the screen that I've deleted. Otherwise, I'd show you guys that as well. But yeah, that's basically how you use it. And this is the website that I get that from. So I used to have another one that covered other stuff and gamma levels with FX and that sort of thing. But it isn't available anymore, unfortunately. So
that's the real deal. True insider strategy information coming from LJ here. Definitely worth, watching where those levels are. Max Pain always attracts price until expiry. Not only on the Nasdaq, that's true also for FX options. But
do you have a good Max Pain?
Yeah.
Either a site or are you doing it manually?
I do it manually.
Yeah. Because I was going to say I haven't found anywhere else to just.
I scrape it daily, the official data banks have to release on where notionals are and strike levels are, and calculate my own max pain from that.
Yeah, because the CME
you can get that information also from Bloomberg, but that means you need a Bloomberg terminal, which down like $2,000 a month.
Yeah, it used to be on here on the CME, and you'd be able to go select product. We go to FX.
But CME is only just a very tiny fraction of the FX
tiny
market.
portion. Yeah, but they did used to have it on here, but they don't now. So I've seen a number of sites that I used to use that did have it that just don't provide it
because
anymore.
It's valuable data. So instead, they are selling it now, no? And
yeah, I was going to say I don't know if it's because of the cost and selling it instead.
CME also made me offer to charge me like $900 or something for this data per month. So I respectfully declined that offer.
No, thank you.
Jeez. What are they smoking? $900 a month.
Yeah. Worth my money, as it seems.
To be honest, that's relatively cheap as far as most financial data. It goes way higher. Like very expensive.
So, I mean, just because it's relatively cheap doesn't mean it's cheap.
Exactly
it's still expensive. It's a lot of money.
I was looking at option data for cryptocurrencies, especially for Bitcoin and Ethereum, and there is one service that aggregates this data for you. And if you want historic data, so on options, they say we're going to give you this data, but we charge you $500 per month. Means if I want for the past year the data, I have to pay 12 times $500 just for the data, which doesn't guarantee me already. So I started scraping it myself now to build up a database actually.
That's ridiculous.
That's rough.
It's ridiculous, but it's people pay for that, especially if you're a quant company.
Options pricing is a scam. They're making money off of people, not from trading. Scam.
Alrighty, guys. So I'm going to leave you now and have my lunch, and I wish everybody happy Easter. And we're going to see each other, in my case at least, next Wednesday again. Going to take a couple of days off, and then let's see where my gold trade is then. If I'm still in it.
Beautiful. Are you going to take some now then?
Sorry?
Are you going to take a portion, you reckon?
I will take a portion because it would be ridiculous not to do that,
At least take the risk capital and maybe a little bit of profit.
Yeah.
And then keep the rest.
Exactly.
Money.
That's what I'm going to do. And the rest is, going to eventually enable me to further go through with my world domination plans, buying my own Dr. Evil Island, my naked pet, and then I can do stuff like LJ.
Too fast.
I didn't expect you. Sorry, I still have to practice.
Mr. Build the anticipation. Who am I? I am Dirk. Just Dirk.
This is basically Dirk's trade right now, right?
Yeah.
Please pull this right up. This is pretty much it.
That's pretty much it, yeah, exactly.
Yeah. So very good trade. Right by the lows. I think you actually got in a little bit lower than that.
I got in pretty much at the low, yeah.
Yeah.
Lucky me. Yeah.
Right on, pretty much on 4,100 and a touch. So yeah, banger trade.
Banger.
Yeah.
Island buying.
All right, Dirk.
Good. See you guys.
Thank you very much, man.
Take care.
I enjoyed our chats. I think we had a good
I think that was banger, really. Yeah. Nice. I always enjoy it anyway. So, but today especially.
Look forward to seeing you on Monday.
A special one.
Bye.
Enjoy.
See you later, Jack. Have a good one. Take care.
Yo, LJ, did you forget that I mentioned to you that options expiry is at 5 p.m. Eastern Daylight Time? Do you remember
no,
like a week ago or so we were talking about the options expiry time, and it shows the pricing at close 5 p.m. EDT, which is like roughly.
What is EDT? God, I hate all these time.
Okay, so
things.
EDT is Eastern Daylight Time.
Yeah, but I got to translate it into.
So basically, it's end of day trading before rollover. So it ends up being like, I think it's like 10 or 11 o'clock my time, which is rollover on GMT +2. So do you remember you said you were going to go and have a look? Yeah, so if you scroll, if you scroll up, you'll see that it says at close, right underneath it, at close March 31st, 5 p.m. EDT, which is rollover effectively. So you then said that you were going to go back and have a look at whether or not the pricing at rollover was close to or far away from that options expiry.
Yeah, no, yeah. So that's the thing though. This is how it goes. So basically, once you come that close, the trouble is the pricing, because you have like time decay with theta in options. It doesn't shift much. So thus, it's better to go off the open with it overall rather than going to close, because normally like people don't actually hold them all the way to close.
Yeah, fair.
Right of the trade.
Fair enough.
Because then you literally time decay goes like this and goes to 0 and you lose all that. So unless you've got it as like a hedge and you just don't care about it and it rolls off and you've basically just purely like taken the option as like insurance, and then the premium you pay, you're just like whatever. So mostly it'll get closed out before that when it's in the prime positioning. Hence you get that attraction back to that level because stuff is being closed out. The options providers have to then pay that out. You get the spot gamma shift, and then from there, whatever's left is just like the dribs and drabbles. So yeah, it's still better to trade it this way, like because you're not holding options to the full end date typically.
No, I mean fair. I was more alluding to the fact that you were going to go and have a look at it and come back with some information, and then I didn't get to talk to you about it yesterday, and I just thought now that you mentioned, I was like, oh, dude, you were supposed to you had some homework, mate. Let's
so that would basically be the summary, right?
Okay.
Yeah, with that, because after that you get the decay, people exit, which pulls it back to the level, and then obviously people then looking on the next period after that from there. So yeah, that's how you do it. So it basically stays the same as what we're talking about. Market open is the best way to do it.
All right, cool. Thank you for the update.
No worries.
Will
I'll swap over to one of you guys' screens. I'll hang around for another couple minutes or something, and then I'll head off. But just give me a sec to jump up, so I'll come back.
Sweet.
All right, no problem. What's up, Will?
What is good, Rich? How you doing, broski? What's good, my man?
Yeah, not too shabby. Not too shabby. You been in any trades since this morning?
Absolute nada, mate. Nothing whatsoever. Saw that Euro put in that new higher high, failed to break lower, which is quite nice. So it looks like it wants to be bullish, but right as of now, we're currently in another range, which is always great to see. Gotta love it from when it goes from range to range. No, GU's nicer.
Yeah, but I mean, like EU, it's not bad. Wait, actually, maybe I should make it a channel. It's really not that bad. Like initially, we did respect these. The top section of this of the channel, we then broke through, creating the new top of the channel. Effectively, came down, respected this bottom portion, and then it's kind of like just stuck like midpoint, pretty much.
Yeah. Yes, indeed it has.
And then GU.
GU's nicer though. GU is clearly.
Yeah. It has been very nice, like all the way down from here. Okay, well, it's become a little bit sharper now. So I'm going to start from there. Yeah, it's a little bit of a sharper trend. Let's look at the top like this. Yeah, so when it initially started out, there was a little bit of a deeper pullback, and then every subsequent pullback has been a lot less of a pullback. So I mean, we were talking about bullish movement this morning, wanting, or potentially looking for a bit deeper of a pullback, maybe to try and come back down to either the channel itself or to this area of consolidation. But all it ended up being was the highs of yesterday, the highs of the New York session and London session, which was the highs of yesterday, just came back into that area there and then started to react off of that, which is very nice, actually. Pretty good price action.
Yeah. I'm just seeing Abdul Linkler saying, I'm considering trading something else. EU is so slow. To be fair, yeah, it is.
I mean, this section here, yeah. Like, this has been a little bit slowed, but consider we're at 1 o'clock in the... 1 o'clock my time, so it's 11 o'clock GMT, so which makes it 12 o'clock British Standard Time.
Yeah, 20 past 12.
Which is lunchtime. So,
which I was going to say is that really awkward sort of crossover time between London and New York.
Yeah, so it's potentially just a little bit slowed. But once again, Aberdorf Linkler, if you have another pair, another asset that is more in line with your strategy, let's say you're used to only trading EU, but you see something similar on Euro CAD, I don't know, and you have a similar strategy, don't go searching for a trade. Just wait for your trade to align with your strategy.
Just don't trade at all. You know, I haven't traded at all this week because I've found setups that could be nice, but they've just not been my setups, so I've just left them alone. Best thing you can do is something exactly similar to that, you know, exact same. Just if you're not seeing what you want to see, like Abdullah Linkler, if you're only trading EU at the moment, but you're seeing something really nice on S&P, don't go ahead and trade S&P because it's not what you've tested. You know, however, if you've got an array, like if you've got an arsenal of different assets that you trade, go for it. But if you're thinking, oh, I'm going to trade something else because, you know, EU's crap, but that's all I trade is EU, just take the day off, man. Just don't trade.
Yeah. I mean, don't force it. I think at the end of the day, 100%. Just make your trading journey for you as comfortable as you can make it without stepping back on old habits and you know, like not tested strategies. Because if you're going to search for an entry because currently it's slowed according to, you know, your strategy, it's like it's not fast enough. If you're going to go and search for a strategy now or an asset that is as fast as your strategy is required, remember that you did not necessarily backtest it, so you're going into it with half of the information, pretty much. It's like, we were talking about Formula 1 earlier, it's like trying to drive Formula 1, but you've got a rally background, you know? Yes, it's driving. If you're in this bracket, you're still driving a vehicle, but it's completely different conditions, it's completely different rules. Pretty much to that explanation.
Tell that to Max Verstappen. He'll probably do it. You know. Where's Void right now? He'd be like, yeah, no, dude, Max be all over that, dude. This guy, absolute freak. So
go and have him run the 24-hour Le Mans, and then have him drop over into motorcycles for the TT race and Isle of Man, and
then he jumps into
going to. He is going to 24-hour of Le Mans. Same with the Nürburgring. Dude, he drove it 3 times. He's driven it 3 times. So a first run was like half the track, second run like a full track. Third run, he won the entire race. And then that was in the Ferrari 296 GTB, like the race spec version. Came back the next week in the Mercedes AMG GTR, whatever. Won again. They got disqualified because they did 7 tire changes instead of 6 accidentally, which was just a mistake. But dude, this guy, all these people have driven this track hundreds and hundreds of times and are there daily. All he's done is drive it on the sim. Turns up in the car he hasn't driven before. Wins. Does it again in a different car. This guy's a freak, dude. Verstappen is a freak. He is a freak of nature.
Isn't it Verstappen that live streams his sim? Isn't it? I'm sure it's Verstappen.
It is.
Yeah, he live streams his sim.
And his other team driver for it as well has only ever driven sim, and they won. He's never driven the real car, right? So it's the old Gran Turismo, like the Gran Turismo movie, right?
What is the only difference? The G-forces and the wind, the let's call it the environmental conditions that you don't get while in a simulation sphere. But
the
most
sim
of them even
has simulated ones, but it's going to be completely different on the track, and you're in real life, and you're actually it's very different when you're in the sort of HUD mode on the sim, but when you're in real life, like, dude, that's it's totally different. Like,
so this is probably also like the same experience where people that have trained to become a pilot and they've flown with a flight simulator that's as close as it can be to actual conditions. Even those people say that the simulation itself does not do justice what it is that they experience while in the plane. So the turbulence, the G-forces, all of that kind of like stuff that you just don't get from the simulation. However, it's an amazing portion or a platform for you to learn from. So, kind of get the feel of what the track is doing and to that degree, and then go and see if you can play the same variant on a live field, and then realizing that, okay, I did not account for this thing, or maybe this is a little bit more intense than what it was initially like indicated.
Yeah, and it depends what sim setup you have, right? Some of these people have really good sims, and even some of the ones that don't, that are just like home races and win these programs. I think a flight simulator is a bit easier. The only difference is some of the investment into quality of flight simulators is not going to be the same as racing, right? Because racing is a very commercial thing. How many people are buying like home flight simulators? It's not right outside of like the actual flight companies themselves, or like the military that have really high grade stuff. A little bit different there, hence
pretty decent setups, but it's exactly as you explain it now. It's big businesses. It's like actual, like, let's call it Boeing. Boeing has a flight simulation, but it's like a whole room, and it's got literally all of the buttons and the whole cockpit, of argument's sake, a 420 Boeing or whatever you want to,
I was going to say, I'm pretty sure I don't know, maybe let's go with Boeing for example. I'm pretty sure Boeing does actually have a flight simulator where the flight sim is the front section of a plane. Like it takes up an entire warehouse.
It's the cockpit and everything. It lifts up.
Yeah.
It twists. It turns.
Yeah.
Pretty cool.
It's the same thing with the military. When there's no war going on, these guys have to train, and they've got crazy sims, and in actual like dogfights to actually see how they come out, right? And
dude, I'd love to jump in.
These are insane money, though. Insane money.
Oh god, yeah. They're probably like almost double what the actual plane is. But if you think about it, like you can be taken out in a dogfight, and it's not going to cost you like millions.
Yeah, it's reps, and then they build these things.
It's a demo account, mate. It's a demo.
Yeah, divided by.
It literally is.
Yeah, exactly. And
but it's the technology. It's the technology behind the demo account that costs that much. It's the same.
Development.
Idea,
because again, it's not commercial. It's very niche. So that's where the racing thing does have a more commercial aspect, because people are interested in it and they would buy it for their home stuff. So they can develop it beyond just F1 drivers. Obviously, they all do that themselves with like the team sims. And then you have home sims, but that tech bleeds over into home stuff. Hence, they can reduce the overall cost, sell it to people. There's some really cool ones, like the really expensive ones, 20K plus, but there's some very comparable, basically the same ones now from China that are coming out. They're about $3 or $4 grand.
I was about to say
hydraulics and everything. And I've seen some people who have actually bought them and then done reviews, and they're like, yep, same thing. Dude, I'm now considering like, dude, I need to get one of these. I'm going to get one of these, dude. 20K, 25K, like, it's hard. Like, if I had my own place right now, I'd probably buy it. Obviously, still renting at the minute. So it's the like the room, the space that it takes up.
Can you imagine LJ
like
with his 6'4" frame going and sitting in one of those small little cockpits for
I know. I need
an F1 car.
you need
the extra room, leg room extension. You know, that's an extra $2,500. You know, just to. But that is pretty cool, though.
Also, I just wanted to address this. Pavel has been asking for a while for Almonte Industries stock. I have no idea about the exact stock. To be honest, I don't think Dirk would have either. Yeah. I haven't researched these guys in the background.
Almonte stock?
I can jump to my chart if you want. But actually put it back up.
Is it Almonte Industries? It's part of the Nasdaq.
It's on the Nasdaq. Yeah. So, I mean, outside of just like tech analysis, could do that. But as far as typically with stocks, like I wouldn't just do like you can't just do text. You got to do deep research into profit loss, their debt profile, all this kind of stuff. How many outstanding shares, potentially private bonds, etc. They have. So, I'd only be giving like a speculative technical view on this rather than a deeper analysis. Like some other companies, informed on. Almonte, no idea. So if you want like a technical view, sure. Which we have had this dip down to here. We did pause. We've started coming up. That's a higher low from some of the other core portions that we come through. I think if you go down to like a 1 hour.
Dude, Almonte had a very good year, 2025.
Yeah.
2025 was a very good year for Almonte. If you go and have a look on the weekly chart, basically goes all the way back to 2013. And in 2013, it was drifting between 0.1 and like 1.6. And then February 2025, it kicked off. So if you're going to have a look at the stock itself, maybe 2025's earning reports, I don't know, may have looked good.
Yeah, I mean, it's like a mining company.
Is it connected to gold?
No, it's mainly tungsten. They operate in Spain, Portugal, and South Korea. I mean, commodities have been popping off since with that, whether it's iron ore, copper, palladium, platinum, gold, silver, everything. Hence that pickup. I think now, obviously, we did have if I just give the general commodity overview, we saw gold coming off, we saw copper coming off, iron ore, everything because of the short end of the bond market with rates increasing. So the cost, to carry these metals plus potential, demand destruction from consumers, like consumption. That's why we saw commodities collapse, right? So I'd say maybe you could pick this up, but to be honest, I'd be looking to short this from like $17 or $18. I don't think this will quite last. I think the commodity expansion that we've had has probably run its tops. I think we might have another push towards those kind of tops, but I think we're now in the portion of the last legs of this business cycle. And it's just like a question of, does it somehow end of 2026? Is it 2027 or 2028? We've got to go through the next couple of weeks, 2 months, 3 months to see what central banks do, to see how that goes. I don't think they want to end the business cycle. I think they're very intent on keeping that going. We've seen that from the Fed in particular, thankfully. 2027 is another question. There's a lot to go on between now and there. I think we were talking about this back in June to October last year, myself, Dirk, and everyone else on stream. I can see eyes into Q1, Q2, Q3 for 2026. Beyond that, it becomes blurry. And even now, we're into Q1, just passing now Q1 for 2026. Q4 for me is still blurry, even though we're now almost a year closer, right? Like 9 months closer. So I don't know where you're in on it, I would say. Like, I assume, obviously, if you're asking about that, you've got a position or you're potentially looking to buy.
Or you bought and it's now in drawdown and you're looking for confirmation of a next push.
I would be very concerned in general. There will be some degree of demand destruction from this current situation, even though we get back to normality. There will be price increases across the board. Hence, some of those stocks that did rally, even though commodities will come back, they won't come back to the same levels and potentially go further. Like, we had an excess of growth already. Now there's going to be increased input prices. Even if the strait is eventually opened, there'll be high insurance input prices, all that kind of stuff across the board, whether you're transporting oil, nat gas, iron ore, copper, literally anything. Shipping in general will have higher costs. And there will be more input and infrastructure to divert shipping in general to eliminate the strait as a risk. Now, in order to do that, that takes money, which they are going to pass on those costs through those shipping costs down the chain over time to create that. So you still will see a input increase with that. So look, if you were already long, I don't know where you got long. Haven't quite said yet, but any pushes higher, I'd probably look to exit, especially with this kind of a run. Like, that is a big run for commodities.
900% growth in 1 year. 900%.
Yeah. And
that is
commodities, exactly. Commodities tend to do that. Like, this is the same thing in Australia. Like, people talk a lot about we're a very commodity oriented economy. A lot of those stocks are very popular. They have these massive runs, and then it's a massive collapse, just like commodities themselves, where you see iron ore, copper, whatever it is, big runs, then collapse, right? They're very cyclical.
Everybody's selling off. If you've got shares in a company and it reaches a certain point, you're like, yeah, this is great, let me sell shares. There has to be somebody on the other side to take up that share. And usually if it's not another entity, then it's the company itself that needs to buy back its own shares. And those kind of stuff can, like, see prices absolutely tank.
2003, 2004, over to 2009, we had that big commodity cycle through the GFC where China was buying up a bunch of stuff. And that's led to where China is now with that massive growth plan that they had. And Australia benefited massively through that. So in part, we weren't attached to the GFC because our banks operate very differently. Plus, we had the commodity aspect with that. And dude, we got a massive, not headwind. What's the opposite? Boost, backwind, I guess, from that. Like,
backwind, I think is a little bit closer. Yeah.
Yeah. So hence, Aussie dollar typically trades about, I think long-term average is about 66 to 68 cents per the US dollar. At that time, through the GFC, we're above parity, and we went to 110 up to 114. So Aussie dollar was worth more than the US dollar at the time. That was off that commodity spiel. So, yeah, tailwind. Is that?
I think it's tailwind.
Tailwind is that last little drift. That last
that last big push.
Yeah,
it's the push off the back end of something.
But either way, so yeah, I think so the thing is, there will be a commodity bounce in general, especially with this current scenario. I would probably use that as an exit measure, though. That would be my best input. But like I said, I haven't researched the stock individually, So take that with a grain of salt. Not a recommendation, that kind of thing. But as far as commodities in general, where they're moving, there you go.
Yeah.
Sorry, that probably took up way too much time, but yeah.
Nah, dude, doesn't matter. Like, I think the thing that makes stock trading a little bit more different is, or to for argument's sake, to Forex, is that it's that buy and hold as facet of stock trading, and stock trading is very, very, very reliant on that one company's information. Yes, obviously, you're going to have like depreciation and appreciation of a currency is going to make certain companies a little bit more profitable, a little bit less profitable, and whatnot. But in a nutshell, stocks itself is like pretty much an entity in of itself. And I think technical trading, like technical analysis for stock trading, I don't feel is that accurate always. Like the macro side of things is way more important, I think.
It's purely macro and everything. So it's the same thing back, 2012, 2013, when I was trading a bunch of stocks, and there were players like James Hardy and the like, right, which are Australian players. But I took longs on them at the time with that factor that most of their revenue, even though they're a Australian company, is in US dollars. Right, so with the USD, Aussie USD price at that level, they're going to cash that out, and it wasn't fully priced into the stock. So once they take that money home at that kind of level, because it's a no-brainer, this doesn't really happen very often.
Yeah,
their profits are going to be like bazinga, right?
Yep,
and bang, cleaned up on the stock. So it comes into these other things of not just knowing the stock, their operations, like where are they actually have foreign bases, and where are they taking the majority of their profit, overseas, local, etc., etc. They have subsidiaries, that kind of thing. So it becomes more particular like that. You can't trade stocks off of technical analysis, right? There's always this is why I hate this stuff. That works much better in stuff like FX, commodities in general, but stocks, no. You got to take in the company aspect, the macro, the fundamental stuff with that. Otherwise, you're going to get blown out.
Yeah, the technical aspect depreciates when you go from Forex to commodities, maybe crypto, and then all the way down you get to like stocks, where the technicals is like, I don't know.
It's also why I don't like ICT. A lot of it is derived from stock trading and trying to apply analysis to stocks, and then driving it over to FX, and there's this weird amalgamation that just, it's terrible in both areas. So.
Yeah. Whenever somebody says, "Oh, it works in all asset classes, stocks and crypto and everything," then I'm already skeptical, because I know stocks just doesn't perform the same way. It just doesn't. I mean, I myself did stock trading many years ago as well, so I know what to look for when I'm looking at a stock. I'll obviously have to catch up with a bunch of them because I haven't looked at stocks in a long time, but the point still stands. Technical analysis on stock trading is very, very niche, I think. There is maybe one or two stocks that kind of like plays around in that field where you can say, "Oh, look, it works. Look, my head and shoulder pattern worked here." And this is like, yeah, but you're going to get the same information, if not 10 times more, from looking at the information that's released by the company. And then, like you said, where are they based? What extra derivatives do they have? Like, what other companies are invested in them? Like, where's the capital coming from? It's just, it's a different ball game in of itself.
Yeah. Dude, Akram. Like April Fools, right? Go back to your Powered Mohawk name. I see you already gave up. You already changed it. Where's the commitment? Come on.
Joe, one of my favorite
hands, paper hands. That's paper hands. Paper hands, Akram. Paper hands. Yeah, Akram and I were talking about like coding our own duck race, but with like an F1 duck race as well, for certain
Oh
weekends.
man, that'd be sick.
And I was trying to figure out how I could do it, and also have like the background being whatever the local race that week might be.
Did you get
and try and get it to have like little like ducks in the F1 cars to you know yeah.
Would you get like a duck with Mercedes on or something?
Yeah, exactly.
It
could be cool, but can you give me one as a gift?
I love this con. We had this con a couple of weeks ago.
Yeah, Kahoot comes in almost once a week or something.
Every other week.
Yeah,
I'd love to have mine back because mine got stolen. Now I'm back to like a iPhone 11, my backup phone. So the other one got stolen.
When did it get stolen?
About 2 months after I bought it.
Oh, savage! What?
And yeah,
hold on a second. Y'all talking about the crime in South Africa? It's been like really bad. I've had this phone for 8 years. 8 years. LJ, by comparison, had his 2 months and it got ripped from his hands. Australia.
It wasn't ripped from my hands. I just put it down and then it was gone.
Where did you put it down?
Yeah, how does that even happen?
Is that a cafe? And my partner had gone to the bathroom. Yeah.
Dude,
and then I just had it sitting there and I was doing some other stuff, drinking my coffee, whatever, looking around, and then it was just gone.
And somebody walked past and just nicked it off the table.
Brand new phone, I'll have that.
And then tried to track it with find my iPhone thing, and then it went for a bit. We tried to catch up, and then just disappeared. So I think they managed to
into the Australian outback.
Yeah,
we were talking about. It's probably a dingo, bro.
Dingo ate me, baby.
Don't laugh. That's an actual thing. That actually happened. We were talking about false sense of security earlier.
Did it? That's kind of the point. Did it?
I don't know. Well, at least the person said that is what happened. I don't know.
Anyway, it's look. Time has gone far enough that it's.
Are you over it now?
You know, it's enough time, and
we can joke about it, bro. Oh, okay. Yeah. Dust has settled. Angers have subsided.
He's back.
Wrong.
The rocket-powered Mohawk. He's back. Welcome back.
Take him to jail. We were talking about false sense of security earlier, and it's that idea of you living in a country and you're like, oh, we don't have a lot of like crime. I'll just put my phone next to me on a table in a busy high street, and false sense of security, kind of like I'll leave my car door open, leave my keys in the ignition, kind of like stuff. And it's just like, yeah, don't worry. Statistic wise, it's not going to happen. And then it happens and you're like, oh, crap. What bull crap's this?
Fair.
Look, I will say stuff has increased in Australia in recent times. Like I remember when I was young, like we used to leave like the front door open. Very much like, Canada, you just leave home, whatever, who cares. Now people do lock their doors. We've had increase of like knife crime and all sorts of stuff. Nothing crazy, not like the UK, which is cooked. But I think people are more generally aware, and it does happen. But it's nothing. It's very rare. Like it's a 1 in 100 type thing, So yeah.
Whereas, like in the UK, it's like a 1 in 2.
Yeah, it's like a 1 in 3.
It's a 1 in 1.
You're driving a car, you've got your window down, someone steals your watch.
Dude, it's guaranteed to happen. It's going to happen at some point.
Dude, like whenever I go into London, I don't wear a watch. Like even when I go to an event, I probably won't wear my watch. It's really sad, man. I don't wear it. Even so, like, I've stopped taking the underground in London. I used to love the underground. I used to go to an event and I used to be like, oh, I'm gonna, go and ride the underground because it's class. And because we don't have the underground, obviously, in Pembrokeshire, you don't even take a train. If you want to take a train, it's like, wow, what are you doing? You're going out drinking or something. So like to me, like taking the London Underground it's like almost touristy. And even now, I'm like, nope. I leave my watch at home. I make sure to pay for you get like those executive Ubers, like the premium Ubers, because I don't want some like I don't know criminal who isn't actually an Uber because I'm super paranoid driving me from A to B. So I'll actually pay for like a premium Uber, and I'm still paranoid about that.
Dude, you're gonna struggle in South Africa with public transport, mate. I'm telling you that straight up.
Yeah. Dude, I'm super paranoid when it comes to stuff like that. So on all the funded freedom trips, I don't take any watches. I don't take stuff like that. I take minimal cash. I take all my cheapest stuff. Like if I've got like a nice expensive wallet, I'll take my cheap wallet. So I'll pack minimal cards.
Yeah, you're trying to not become a target. Like if anybody sees you, they're like, "Oh, that guy's poor. What's the point?"
Yeah, literally, yeah.
What's the point?
I love police saying this. Like, dude, most likely, actually, you get past the elevator, which has been broken that many times recently. So the main thing is you might get into the elevator, get stuck at the bottom floor in the basement, and you're stuck. And then you can't get out. So it's not the doorman.
You don't have stairway in case of fire from your basement.
Yeah, we do, but only to get out, not to get in. So to get in, you need a special key. Then it will also only go up to your specific level. Right?
Oh, okay.
Yeah.
Fair. So for anybody who was wondering, LJ does live in a penthouse. He's got super security. Biometrics, face scan, retinal scan, fingerprint scan, the whole lot. And his iPhone still gets stolen the moment he goes out.
Yes.
Akasha is saying, as a female Londoner, I find this quite funny. I'm clearly a superwoman since I feel mostly okay.
Well, as a Londoner, I can understand that. Like my brother's from London. He doesn't care. He'll wear his nice watch out. A lot of guys from London that I speak to, they're like, "Will, stop being so dramatic." I am a country bumpkin. I am a lad from the countryside. I'm used to shotguns and sheep. I'm used to countryside Land Rovers and beer and like.
Why do you
country
shotgun the sheep?
Shotguns and sheep. It's like countryside. You're used to farmers.
But you're not shotgunning the sheep. Aren't you meant to keep them to get the wool?
Not shotgunning sheep, shotguns and sheep.
Jesus Christ! I was like, why are you shotgunning the sheep? Like, Jesus,
like sheep with a shotgun.
They're very placid animals. Like, they're not hurting you. Like,
I mean, having said that, the sheep are quite stupid.
Like kangaroos, right? Well, they'll come up and kangaroos will come up and attack you and stuff.
Yeah, but that's only if you're as big as LJ. Yeah. Then they want to beat you up.
Yeah, fair.
Then it's a challenge.
Unless you're only if you're as big as LJ do they actually like want to fight you. Otherwise, they just look sorry for you. They're like, "Oh, look at that puny little human." And then LJ walks out and like, "Oh, right, put him up."
There's a threat.
So if anybody was wondering, this is what Monday's stream is going to be like, because Monday's stream is going to be dead quiet and it's just going to be the three of us just talking absolute horse crap. I was actually having a look at EU and to
what? Because I'm also looking at it right now. So I'm curious. You go first. What are you looking at?
Okay, so the whole day today we have been producing higher lows, and apart from Tokyo session and this little section that we had over here, it was generally slowly trudging its way up higher. This reaction that we had here was a little bit concerning, even though it did not even break into the Tokyo highs, which to me was like, okay, are we going to carry on pushing higher? We did make higher lows, yes. We did have a bit of a attempt to try and push price up again, but kind of like sunk a little bit, but nothing that is like screaming, hey, we're selling off now with vigor. I don't know. I feel like there is this attempt to try and push back above the highs of London, but it's so slow and so malaised. It's just...
Yeah.
I mean, we've got news coming out in about 20 minutes or so. And I kind of feel like this that we're seeing here is pretty much that weight. Because there's nothing else driving it whatsoever. We're not close to any points that I would say, yes, exactly, nice reactions from these, like higher swing points and whatnot. It just feels as though we're like a little bit in the middle of nowhere right now with price. And it's just slowed. So I feel like I want to scalp it. Like, I don't know, less than 5 pips kind of like movements. That's what I feel like I want to do.
Long or short though?
If we don't come back up here and we actually start printing a little bit lower, I might just take a sell to try and push it a little bit lower. See if I can... What is 5 pips here? Let's say I get in there. Yeah, how much is 5 pips
with all
on
of
this?
your CSD account, you're going to try and push it lower.
I mean, that's kind of hoarse. maybe 10 pips. 5 pips. Yeah. I'll look for something like that, like a 5 pip stop loss and a 10 pip take profit if we don't make a new high and then potentially come to see to test these little low swings there. However, if we do break through, above this little section there, I would wait for a little bit of a pullback and then attempt to try and push up with the expectation of trying to get to, say, the highs of, what was this? Wednesday, the 25th. Maybe the highs over here. Something like that.
Because
but as
I'm
it stands
looking at
right
like
now,
a short first, and this is what I was looking for us to come back up to this point. Short first, back down towards I don't know, call it 116 to 115.85. A general range. That's a large range. So no, more 115.95 to 85. Right. So this is what I was mapping out with that. So we might get a slight pause earlier, which would be up through here. Ideally, I'd like to see about 85, and then a push higher after that. So this is now... I'm now looking for shorts. I did pick up one of the pro-growth accounts. I have to set that up, and the 20K pro-growth, like the new account. And then we can trade it on stream. I gotta get it set up to do it on what's it called? Like the internet chart.
Did you take it via CTrader?
No, I got it on MT5. But isn't there like a MT5 web platform as well?
I'm not sure.
I think there is.
I have no idea. Like,
I'll try and set up. I'm 90% sure there is. The only doubt I have now is that you said that, but pretty sure there is. So otherwise, because obviously my platform has my larger screen, which if I try and bring it up, it'll be skewed and rubbish. But if I can bring up the like the web platform, we can watch the trades and just have like a single chart, and then I'll probably still trade it.
It's called Web Trader.
Yeah, there is. Yeah, there you go. Yeah,
Web Trader. Yeah.
So I'll bring that up, and then I'll probably still trade it off my terminal platform, but then you guys can see the chart and the certain trades we're in real time, that kind of stuff. It will just take me a minute to get it set up.
Yeah, you can get Web Terminal. Web Terminal is a MetaTrader 5 based. Yeah, there we go. Rocket powered Mohawk is saying MT5 Web is down. Use mobile or desktop.
Yeah, fair. I didn't know you can get Web Terminal.
Well, so we're not doing it today then.
Kind of like shows what we know. Why didn't you just go for C-Trader, a C-Trader account, or were you just in the mood for MT5?
Fancy.
Yeah,
MT5.
I mean, I've done most stuff on MT5 now, with the fivers at least. I could do C-Trader. I definitely use that every day still, and they do have the web platform. The web platform, similar deal. It doesn't have the same aggregate thing as the core software, so it's still a web platform. So not quite the same, but
yeah.
So it's take your pick. I don't know. I just went with that. The idea was eventually I might copy trade it ultimately, or something. Just in case.
you can hook up some copy traders to it and then trade it live, and then because we want to do that as well. Like for Will and myself's segment, we definitely want to this segment where we are now, the second segment of the day for us. We definitely want to get the live trading thing going again. So myself, I'm not going to be trading my actual strategy live because it does not align with the time. I don't always get an entry, and it's kind of like, ugh, I get most of my entries before I even come onto stream, and then late during New York session, that kind of like thing. So I'm looking at like a completely different strategy to just trade live. So that's what I'm going to be doing.
I'll probably still trade like the same. Obviously, I've got like 3 or 4 or 5 different strats or approaches, but I'll definitely trade my more active trading live.
Yeah,
and then you guys can see it, and that'll be that. So,
yeah, I'm definitely gonna look at more of a scalping strategy.
Yeah, so I'd run the sort of scalp / intercession type situation, right? And then sometimes if there's trades that come through, say into the next period, we can just address that or look at it later, right?
Yeah,
that's fine. But I'll hold on to it. I won't be like, oh, I got to exit this because I'm on stream. No, I'll still, So I'll do both, like on and off stream, and then if there's some that I do take off stream, we can just go over it. What was the reasoning? What was the rationality? That kind of thing.
Makes sense. Yeah, that definitely does make sense. I like that. So when do you want to start, mate? Next week? Tomorrow? Now?
Yeah, probably next week. Now. Since I'd start now if it was up.
There's not much going on either in the market. So
yeah, that's also a fair point. I will look to take a short from here, though. To be honest.
On what, euro? You reckon? I don't know with the euro at the moment. It's just
it's slowed down so much, mate. It's slowed down quite a bit.
It has.
But then again, we are 15 minutes away, 14 minutes away from high impact news. So
high impact. Sorry, for the dollar.
Yeah, for the dollar, and then after that another.
I was gonna say, then we got it again in 15 minutes. Then we got it again like hour half after that. So.
Yeah. So one of the reasons why I was like, I'm going to get myself one of the pro growth accounts as well is because obviously there's no limitation on the news events. And if I'm going to be trading live and there's a news event smack bang in the middle of our session, I may as well just kind of get used to trading that account live, but like obviously really, really show what risk management could be like when trading high volatility news stuff.
Same deal. And you know how I love trading my news events because I do the macro stuff. I'm like, this is rubbish, or like a central bank announcement. Market is positioned off form. I'll just hammer it. So yeah, we can do that. Definitely.
Yeah, we do need the 3 profitable trading days on the pro growth account. So if we get 3 really good days, do it. Yeah, there we go. Do it.
All right. We'll do it.
We're gonna do it.
Good.
So, Will, I know you're heading back to the UK. Does that mean that you are going to, when you're back in the UK, also join the LJ and the RB with the WD trading?
It does indeed. It does indeed. I will definitely be joining that the moment I'm back in the UK. The moment I'm back at my big setup where I can have my multiple screens and have good Wi-Fi and proper concentration with a comfy chair, I will be joining that.
What did that even mean? What?
The LJ with the RB, and WD.
Oh, right, okay. Right. I see. I was like, what are you talking about? I was like, what? Okay,
RBWD.
How to spin LJ out, just abbreviate everything.
Switch onto that,
just
but
abbreviate.
I missed it. My
bad. Your facial expression, you were like,
I was like, what are you talking about, dude?
Are you on drugs or something? What's going on?
Why
are you talking about RB and WD?
Are you good?
Yeah. LJ, it seems as though you're getting that little bit of a response that you were talking about now on EU.
Yes, I did enter that just through here. So this is going to be
that's why you ripped us off screen so that you can enter your trade.
Yeah, I did. So no, I had it up before though as well. So this will be the first trade, and I will potentially enter again. I'm going to use this. What was the first I had? I'm going to go 0.5 with a limit later on. So I'm already in this one.
Nice.
Then I'll scope out a limit order for lower to potentially add to it.
To keep on pushing it lower.
Yeah.
Nice. Yeah. Shane Joyce saying WD-40? No, WD-24.
WD-24. Nice.
Yeah. It's that joke about UB40, the band.
Mm.
And a guy in South Africa was interviewing the singer from UB40, and he basically said, UB40, IB29. You know, that just age thing. Very, very, very dry, sad. I'm going to have a look at this on the 1 minute. I'm just going to remove that as well.
The 1 minute looks good. I will say this is obviously just before news. Like, to be honest,
yeah, I mean,
primary risk. We got 7 minutes.
Yeah. So at least you got in on it before. So.
Yeah, definitely. And I think this is a reasonable position. I think the US data news should be still firm enough. So I might extend the stop loss a little bit more just for that consideration, which I have the room from the entry. But yeah.
I mean, I don't know. The 1 minute is it's so quick. The 1 minute is too fast for me to really trade it. I mean, as of right now, we're getting a little bit of a bounce on this lower portion of the channel. Let me just remove all of... that is not what I wanted to do. I want to delete this. All of the drawings. So far, only this one is applicable as of right now. 15 minutes. Yeah. That and this top section over here. I mean, it is an engulfing, a bearish engulfing candle. And we did just wick into it. So I'm pretty sure that Victor would be very happy with your trade entry.
Nice.
It does look nice, but I don't know. It's all just a bit too... I don't know. I don't think I like it that much right now.
Doesn't it 116.085?
You're in at 116.085 right there. Stop loss?
So stop loss was at 116.17. I'm now going to pull that back though to, given the news, 116.14.
And what are you aiming for?
Aiming for 115.85.5.
855.
Yep.
There we go.
So we'll see how that goes.
I rate that. I do really like that, and I want to be selling. I really want to be selling the euro right now. I just don't think it's ready for me. I'd need to see a break and close under that previous low on the 5.
We'll see how this goes. We got news in 4 minutes, so
yeah.
Any guys trading high stakes, obviously you've got 2 minutes to either exit or enter something. I'll probably say don't enter stuff if you didn't have something set up before, like this.
Dude, people are looking at your trade, being like, "LJ's now in a trade."
LJ is a nut.
You have literally just told them they've got 2 minutes to full margin euro right now.
Well, don't don't do that. If it doesn't match up with how you trade, don't do it. Okay, I could be wrong.
Yeah,
I could be right and then wrong, right, or wrong and then right. Right, in the sense we could wake up, get stopped out, and then we still do go that way. So this is the point where I decide whether to increase the stop overall for that flux or sit with it.
What is your? Are you taking this on a prop account or a personal account?
These are both on prop. So I haven't taken this on a personal. These are both on prop.
Okay, and what is your risk for this trade currently?
Not both, or just on prop, whatever. So risking 0.7% overall.
0.7.
0.5, but I've got a lower entry at 116 flat to keep going lower, which will be another 0.4. So it'll be 0.9% overall. But I got to wait until the 2 minutes after. On the high stakes, on the pro-growth one, I've got that locked in. So if that gets tapped, and it's the same TP.
So same TP, and then your stop loss on this, is it also going to be like roughly around 5 or so? 5.5?
So that'll be just above that. So it'll be basically 1 point above the original entry. So it's about 116.04. I've got it at. 116.10.04. So right by the wick sort of highs. Yeah.
Okay, so right there. Okay, so this is LJ's first trade.
And potential second trade.
Entered, and this one. This one is LJ trade limit order. All right. Let's see. How about we do this? We have what is it? How many minutes have we got? We've got like 2 minutes to go. 3 minutes. All right. We've got 3 minutes to go. How about we do this in chat very quickly? Give us your predictions of what you think LJ's first trade is going to do. Is LJ's first trade going to go straight to stop loss, or is it going to start pushing down to take profit? Quickly, you have 1 minute to drop in your prediction. Lock it in.
I think it's less than 1 minute. Is it? God damn it! My taskbar has stopped working.
I think we've all got a good idea
all the time. It's so annoying.
Gamza is saying win.
selling my last kidney. I hope you didn't, sincerely.
I think.
All right.
Rob clearly thinks that it's going to be a profitable trade for LJ.
Kamza, win. Louis, win. Shiny yellow metal, profit. Ghost, up. Going up, okay? Abradolf Linkler, win. Danny, win. Snobby, good entry. Dax still up.
Dude, we almost have too many dubs that, like, if you guys all took this trade and we lose, like, we're all cooked, you know?
Okay. So the news should be out now.
The news has literally just come out now.
It's still showing.
It's delayed? Still showing. I think it's delayed.
Yeah. I think it's delayed.
I still don't have a... Okay, 62. Yep, positive. Yep, there we go. Okay, boom. There you go. US positive. Mate, I'm on my macro stuff right there. There you go. Good. Bosh.
Look at LJ LJ just doing this. I'm a top man.
Yeah, LJ's well done, me.
Top of the morning to you. There we go.
62K well done, guys. Versus a forecast of 41K, which is interesting. So far, LJ is still sitting in the profits. We'll see.
Everyone that took the W's, congrats. We did a good job. Well done. Well done, team.
Buying kidney. PM your price. Oh, dude, I love that.
Good to know my macro form is still good.
LJ has some insider info.
Bro, honestly, the shiny yellow melt, I say this all the time. It's almost to the point where it's not funny anymore. I'm 90% sure LJ is inside the trading. Just I'm putting it out there.
So
blues for the boys. Yes,
you have after this candle, you can enter your next position.
I'm entering it now, to be honest. Yeah, I'm in now.
2 minutes before and 2 minutes after Redfall the news.
LJ, show me your text history.
Yeah, that's literally what I was waiting for, like 2 minutes after.
Yeah, it's going to be 30 seconds, and then you can enter your trade, mate.
Yeah. No, it's not. It's already 17 past.
Yeah, it's from the time you added 2 minutes. So when you tick over to 18 minutes, then you can enter. You're still in the 17th minute.
No, it's 2 minutes plus. It's just 2 minutes, right? Isn't it? Is it not?
Yeah,
that's
but
what I've always done.
No, it has to be end
15. So 15 to 16, 16 to 17. But like you can probably at the 17 counter enter, but I think it's smarter to just kind of like wait until the 18th.
17. We're already at 17. So.
All right. Okay.
I'm only wait. Okay.
Well, I mean, it's 18.
Can you still hear me? By the way.
Yeah, I can hear you. Will just freaked out.
Yeah.
Okay. Yeah, I'm going to say my EVMux is completely frozen.
Your camera is frozen as well, mate.
Yeah.
All right. I might have to restart. I think everything just crashed. So I'll be back, and we can keep updating on this trade. But give me a sec, guys. I'll be back. Okay.
I'm gonna keep it on screen for you, mate. So
cool.
So that people can see what you're doing.
Let me just reset. Yeah. So I'm a bit. Yeah. I think I can still see your. Oh wait, it's normalized.
Yeah, it's back. Mm-hmm. Back.
Oh, it's back.
Yeah, you're back.
Okay. We're good.
It's back.
We're good. I don't have to restart. Okay, cool.
Nice.
EVMux does this sometimes. Dude, my computer hates
EVMux.
I gotta say.
My PC doesn't like it. My laptop doesn't like it, but I think it may be a Wi-Fi issue.
So this trade of LJ is now a entered.
Yeah, no. So I think I got in. What was the other level? Hang on. Yeah, so it's right on 116. Like literally 116.00000. Yeah.
Yeah. Nice.
But yeah. Well, sorry, hang on.
Let's LJ just quickly.
Dying, mate.
Sorry, guys, I was dying for a second.
Yeah. Sorry for having me dying inconvenience you.
Yeah.
Yeah. Can you just die quietly, like? Come on.
Yeah. Sorry, my bad. We'll see how this goes. I think this is good. Good first trades for the account. You know.
So are you just trading it straight from the terminal now, not doing the web-based one? Okay, cool.
No, I got to figure out the web-based one and with the charts. So I think I'll try and figure out the web-based one to get the chart, like the individual charts up, and then I'll still trade it from my terminal, but then I can show it as like alongside TradingView, that kind of stuff at the same time. And
you can do that.
It should bring up the like P&L, running trades, that kind of stuff.
Yeah, you can have a. Do you have multiple screens?
Yeah.
Okay, just have the one screen then be your shared screen. Then you share the whole screen.
I also have like even mux on the front screen as well.
Move it to the side.
I have very big, wide screens. Yeah, so it'd be showing everything else.
Segments. You want segments.
Yeah, no, I know. I know.
Right.
Yeah. Unless you like share the tab
application. Yeah.
Yeah, because that's why you go on.
Hence, I just do the tab, which is the Chrome tab. So if I get it on the web view for MT5, that'll be fine.
I think you can share the application though. So like with MT, because that's what I do at home. Because obviously I've got the big 49-inch curve monitor, so I just divide the screen into two, and then I have EV on one side, and then I'll have MT on the other. And then I'll have a separate one up above.
But I'll have to tab between that and the like trading view on the browser.
Oh, okay, fair.
Right, when we talk about other assets like macro stuff, where I go to EJ,
you can bring it up,
natural gas, whatever. So
you can bring it up like what Anastasia usually does is she has the two as well. One I think is also web-based, the other one's terminal-based, and then she'll just let me just bring that one up, share a different screen, bring that one up. You can allude to the information on the live trade every now and then bring it up, talk about it, and then take it off again, and then something.
I could do that. I think the only thing is like obviously with the MT5, I'd prefer not to have to like resize it every time. Like I've got it set up. So if I brought up the terminal itself, I'd have to resize everything between my actual trading and the process.
No, I mean fair.
Yeah, so I think it's just easier that way. And plus, adding a different screen, this, that, like you were saying, you can do, but I think that's the better way.
Yeah, I just wanted to get to.
I'll play around with it.
Yeah.
So
do that. Gold Guppa saying, "Can I place a trade right now, or should I refrain from trading due to ongoing news events?" Personally, I would say wait until all of the news events have played out. However,
unless you're LJ,
unless you have a strategy that does not rely on news events, that doesn't care about news events, dude, go ahead, you do you. I would always advocate don't poke a sleeping bear kind of like thing. So don't go and force a trade that's not according to your strategy just because you're seeing movement. But I can't stop you from taking a trade. So long as you just make sure 2 minutes before and 2 minutes after. We are currently after the 4-minute, let's call it restriction on the high stakes accounts. So you don't need to worry about that. And then there was a question here from Mr. Where is it? There we go. Mr. Yota PT saying, is there any pro on the new account versus the high stakes? It's got less drawdown, it's got similar target, but less leverage. So the biggest difference between the two is essentially the news trading restriction. Okay, so
no, I think you might be talking about the high stakes itself, like the 10% versus the 8%.
No. The 13. It's 13% versus 15% for the two phases. Because it's 8 and 3 for 13, the original one, and then the updated one is 10 and 5, which is 15.
Oh, the Hypergrowth Pro, because obviously the high stakes has the two, like where it's the 10% and the 8%, and you pay less for the 10% target on the high stakes. But I see.
Yes. The for those ones. But if you're looking at the Pro Growth, the new one that we've released now yesterday, The pro from that one is the fact that it's a one-step. Yes, it's 10%, but if you go and compare it to a two-step, the other one's 10% and 5% for the new accounts on high stakes as well. You can get the classic one, which is 8% and 5%, but it's slightly more expensive. The thing about the pro one is the fact that you have no limitations on news trading, which if you are somebody that always felt like the high stakes was annoying because of that, you can go to the pro growth one. It's a one phase versus a two phase, so there's always that benefit. You do have the same scaling between the two. It is cheaper than the high stakes equivalent right now, being at 30% off as well. And you get a profit split the moment you pass the account. So, but you will stay within that 50-50 profit split for up until you pass 20K if you had a 5K. But if you started at 20K, your first payout will be half, and then everyone after that will be 75%, and so on and so forth as it starts scaling up higher. It's the news trading mainly. That's the only thing that I would say is like the big change, and then the fact that it's a one phase. It's a cheaper version of the hypergrowth. The hypergrowth is also a one phase. It's got a more aggressive scaling because you're doubling your equity every time you reach profit of like 10% scaling profit, where this one, the new one, the pro growth, is more like a high stakes account. But it's a high stakes account of which it's only one phase and news trading is allowed.
Yep.
Yep.
How do I bring up the web platform?
On which?
I have no idea.
Well, MT5. That's what I'm trying to figure out.
Probably go to MQL5, the web services.
You used to be able to bring up through the hub. I don't know if you can now.
Pooley saying, just trying to buy a pro growth rich, but can't see it in checkout. Okay, so if you, I'm not going to bring it up right now on mine. There's a little switch on the left. So if it's going to show you phase 1, phase 2, phase 3. If you're on phase 1, if you just go look slightly below the top portion of phase 1 where you select the 5K, the 10K, the 20K, you'll see that there's a little selector. If you, it's going to say, I think, classic.
Here you go. I'll do it. I'll risk it.
Yeah. You'll risk it?
Yeah, I'll risk it. I think we can. So you go through. Oh, that's not my current screen. Hang on. Let me
try again. Oh, as LJ does that, he disconnects. No. LJ's thing bombed out. Anyway, Pooley, you'll see that you have the right one when you look at the bottom, and it shows you that it has a daily stop out rather than a daily pause. And you'll also see at the bottom the pricing is going to have a price and then a parentheses price. The one in the parentheses is the original price. The price just before that, in front of that, is the discounted price at 30%. That's where you see that. It is there. It is already ready. Do you want to put your screen up now, LJ? Oh, LJ's not back yet. There we go.
Yeah, well, hang on. Yeah, sorry. As soon as I did that, my screen just
EVMux crashed.
Yeah, it full crashed.
There we go.
Standard procedure.
So here's the so when you go to hypergrowth, you click this, and it goes between there's this little tab up here. It's a bit secretive. I think potentially they could do the UI UX like a little bit bigger. It's the same thing with the high stakes where you go to classic over here. You guys can see in this corner classic, which is versus the other one. So the 8 versus the 10.
The 8 is the classic.
Hypergrowth though. Yeah, so hypergrowth, you click this and it'll go to flip between them. So if we go to 20K, hypergrowth, that one.
You've already purchased one, so
yeah.
You've already got one.
Wait, hang on.
You can have one of each, LJ. You can have a 5, a 10, and a 20.
But can you get the new one plus the 20K regular hypergrowth?
No.
This is basically saying you can't.
Yeah.
Okay.
But go to the 10K.
So you can get the 10.
You can get the 10 in in whichever.
I guess because I've already got the others.
So you have to choose. Do you want the original or do you want the new one? It's the same with the high stakes as well. You can have the classic or you can have the new updated one. You can't have both.
Okay.
So that is a limitation, yes. But this one is a lot cheaper and it's 30% off.
Yeah.
Which I think is really good. So
so this right now it's 189 instead of 270. You guys will see this is kind of grayed out because, like I said, I already picked it up before. I'm going to trade it on stream when I can figure out how to get the web trader thing up. There you go. That's how you do it. You just click this little button up in the corner, and there you go.
Yeah. So Pooley, go and have a look there. You should be able to see it, my friend.
Get rid of that so I don't dox myself somehow.
Yeah, accidentally
release. I made sure that I think we're good. So, but yeah, hang on. Give me 1 sec. My PC's still freaking out a bit, so I might have to reconnect once more. I'll come back.
Right, the news has just come out as well, so I'm waiting 2 minutes. If we can get a pullback in these 2 minutes, I am going to be entering sell on euro.
They do look good. They do look good,
but it's whether or not we'll get the pullback.
So, Mr. Yota saying stake 2-step is 13%, but with higher leverage and drawdown, so you can risk more. Effectively, I want to sneeze. And it's gone. So effectively, you can. However, I would always just rather not. It's personal preference. Let's put it like that. Just personal preference. What happens if a TP gets triggered during news? Will it also not count? My Euro USD TP is about to hit TP and I can't close it manually now anymore. Okay, so if you have read the T's and C's, you will realize that it says that it's only for new, freshly opened trades during the news event. So you have a 2 minutes before and 2 minutes after the news event. So imagine my face is the news event. 2 minutes before, 2 minutes after. If you have an existing trade and it goes to TP while the news event is playing out, it's a normal TP. If it goes to stop loss, that is a problem. Okay, you're gonna lose that trade, no problem. But if you're entering a trade while it's in that 2 minutes before, 2 minute after section, if you have a win during that portion, when you've entered a new trade, as the news is coming out, that profits will not count. But the stop loss, if you hit a stop loss during that segment, it will count. So your stop losses always count. But if you take TP for a trade that you entered before the news event, is a normal TP. It counts as a normal TP, no issues. But if you've opened up a new trade during that window, during that 2 minute window, and it hits TP, it's not going to count. Okay, so that's the differences.
Right, I'm in on a euro sell.
Nice.
Yars.
What indices or which indices are available with the 5? Is it's just the 6 or so listed on the site, or is there some code like ASX 200 that isn't ASX 200? So the ones that you see on the... I'll bring it up here. So if you click on the symbols button, which is Control U, and you go to indices, it'll give you these 6. These are the 6 that the Fivers offers via the Forex CFD section. So if you go to the futures channel, the futures side also has its own numberings and whatnot in MQ, NMQ, and that stuff like. But for the CFD side, it is these ones that you get. So DAX, US 30, Japan 225, UK 100, the S&P 500, and the NAS. So You don't have to be too concerned with the extra ones. These are the ones that we offer. Can we close a trade manually which is entered before news during the 2-minute window? Yes, you can. You can close it manually. It's completely up to you. You have full control to close and open, but the restriction for the high stakes is not opening up new trades. So you closing a trade that you opened up before the news, that is going to be a regular trade. Like, it's not going to be any different than any other trade. So no, the new account, the pro growth one, does not double the equity. It shares the high stakes' scaling plan. So every 10% that you make, you will go onto a new scaling amount. Here's a good question. Shab is asking you, LJ, what was the reason you took this Euro USD short?
Hang on, I'm still just trying to see if I can get the web thing to work. If not,
still trying to work out the web too.
Yeah, all right.
Okay.
I'll have to try to figure it out later. It's fine.
What was your reason for taking
so
the trade?
The reason I took that, so if I go over to my screen quickly. So I was talking about this with Dirk. So we had this...
You're not sharing your screen, mate.
Sorry.
Bollocks.
I had to reconnect before. Yeah, my bad. Okay, here we are. Should be there. Okay, we got a bunch of scrap on here. Ignore a bunch of this, but basically the point is we had this trend line going up through here. We've had a number of assets following the same situation. Where were the others? We had... So euro dollar with this. We had gold following very similar. This is another longer term trend line, and this was the top target areas on gold. We also had that. What else were we looking at? I was talking to Dirk. I forget. Anyway, we'll just go back to euro. Sorry, I'm been trying to figure this out. We had these. So this is the key level with that underside where we had this X that we actually put through yesterday, and I wrote this direction going higher to meet this. So that was basically the top side resistance plus to trading, which is clearly indicated like a resistance point through here. So I've been looking for that to potentially short for a pullback and then eventually go up, go to that next high level, which is about 116.30 or so, and then see if we can actually push beyond that from there. But it comes back to this a standpoint through here with some of the candle closes and like a time series analysis of where we kept getting capped, had multiple attempts right through, but couldn't close and actually port above that. And then we came back lower every single time. So, sorry, I probably explained that really terribly. I was very distracted trying to figure this out on the side screen. So sorry if that was terrible, but that's basically it. So that was this was our first point of call, this point of resistance, that one there, and then that was next, and we've got this 116.30 above that. So hence we did push through there, but I think for now, given how Trump goes as well, we have all that good news. Eventually we get some kind of downside, or even from this much of a push from down here from 114.50, we're now at 116.10. That's quite a big push. We've definitely got a de-escalation going on, but we're not out of the woods entirely. So it makes sense from there, once we hit those topside resistance levels, to actually have some kind of pullback before established moves higher. And the next point is, once we do get that pullback, that's the test point to see if this actually holds, and then we go higher again overall. So it's basically just the left of the chart, wicks, candle closes, points of resistance where we couldn't make it through, or we had a struggle to make it through. That's basically what it was. There you go.
Nice. Hello, Victor. How are you?
Hi. I came in silently. Didn't want to interrupt LJ at all.
Hey, you had a big doorbell. I wasn't silent.
Well, it wasn't completely silent.
It wasn't silent. Came in like a bat out of hell.
But yeah, it was kind of silent. Let's leave it at that. How is everyone doing? We got news coming. Just came in. Market is reacting, still bullish on EU. Did I hear you correctly, William? That you are still, or not still, that you are starting to short EU already, and that expectation of a pullback.
I am now in a sell on EU. Yes, I was about $150 up, but we've wicked now, so back to break even. So we'll see how it goes. If it's, I'm only risking about $460 on it, so 0.5%. Trying to target the Asia lows. I don't know if we'll make it that far. If we do, it'll be about 2%, which it'll be about a 5-ish hour trade. Or because I'm risking just under half an hour, it'll be just under a 5-hour trade.
Nice. I like that. And what's the idea behind shorting it? I mean, I can see reasons to short it, but what are your ideas? What are your reasons?
Yeah, so we came up to that high. You know, we started to push lower, and then we slowly pulled on back up. And like I said to the guys, you know, we were starting to form into that bit of a range. Price did slow on the 5-minute when we wicked up, equal those highs. And then I wanted to see a drop and a break and close below the prior low to signify some form of shift in structure and in sort of order flow to the downside. We got it just after the news, about 2 or 3 candles after quarter past. And then, you know, we had the main, half past news come out. It pushed price up. We whipped a bit, pushed price up again. Back up into the area that I wanted to be trading it from, and then I manually executed on a sell order.
I like that. How about you, LJ? Are you looking for a short as well, or?
Yeah. So those are my trades right now that Rich has got up. That I'm in. So entered the first portion, then added to it after the news. I've been trying to figure out how to get the web terminal up. I got one of the new pro growth accounts. I'm going to trade this on stream, which I just took it on. It won't let me log in.
Yeah, it seems like there's a annoyance with the web-based one.
Yeah, so I can't. I don't know. I'm going to have to look into it more.
What if you need to log out of the terminal in order to log into the web-based one?
Surely not.
No, I don't think that.
I'm just asking. Maybe there's an issue there where it sees both like credentials simultaneously, and it's like, whoa.
I could try. I'll try it when I jump off and try and get this to work, and then we can do it on stream. But yeah, so basically we came up to some of these. There's like a cluster of resistance areas through here, but around 115.85 we passed through that. We had a soft resistance at 115.70. We've now come up to 116.10, basically hit roughly there, and then I've got 116.30 above there. So from the massive pull that we've had, about from 114.50, 170 pips or so, I'd expect a bit of a dip first before we potentially keep going on, if we assume that this is the current situation is going to hold. Now, obviously, the thing with Trump and the whole escalation geopolitics going on right now, we get good news, then bad news. So that's why I'm happy to lean on some of these high resistance levels, even though I do believe ultimately in further upside. But for now, you tend to get that good news into potential bad news, or at least a dilapidation right now of the current form, pullback, and then we go higher after that. So we've come up to some of these resistance areas through there. So
Yeah, I can see probably we're looking at the same structures, just looking at through different lenses. But I have areas as well that we are now
Stopped out.
starting to looking. Actually, we just had a massive movement.
Yeah, I was going to say just stopped out right there.
Yeah, I just got stopped out as well for Euro.
What was this headline for? We're getting everything moving.
Is there any news? What is this?
Yeah, that's some hella bullish movement as well. That's not organic.
No, we had everything move on that, so that's minus 1% overall right now.
Whoa! Even even the indices is making some.
Yeah. Dude, that's nuts.
That must be some. I guess some geopolitical news coming out, right?
Most probably.
Yeah.
Not yet, anyway. We'll see in a minute or two whether or not any news events. Who's got Trump's Truth Social?
PMI?
Can't be.
So we did have the US PMI coming out.
No, but I mean the PMI was 6 minutes ago.
PMI is now.
Yeah. It was. No, it wasn't.
Wait, no, that's an hour. It's an hour from now.
Yeah, that's an hour time.
No, it's an hour from now.
We don't have any news. We had retail sales, but that was like 15, 16 minutes ago. That wasn't it.
That was a while ago, yeah.
Yeah.
So it must be something. Go ahead.
No, sorry. I was just going to say we're going to have to wait and see for the news outlets to update with whatever was released. Unless anybody in chat already knows. Oh, Hum Mohammed is saying Trump, Iran's new regime president, has just asked the United States of America for a ceasefire. We will reconsider when Hormuz Strait is open.
That'll be it.
Yeah. There.
Open the homepage of Forex Factory. All right. Thank you. That makes a lot of sense.
Yeah, it does.
Why we had a move.
That's a huge move. Stopped out a lot of people, I'm pretty sure, because it's very obvious. It's very believable that the market is ripe for some kind of retracement, and we are getting into these supply era. I was just actually talking about them. So it makes a lot of sense that people are starting to position themselves for a possible retracement. And then you have this, what was this, about 20 pips in 2 minutes, or actually in 1 minute already reached like almost 16 pips and went on to go to another 5 minutes, pips afterwards. So it's a quite nice, well, it depends on which side of the market you are, but I like that move.
What if you were looking for buys?
Yeah, well, exactly. That's I don't think looking at order blocks and quasi, I don't think the market is positioned itself ready yet for a reversal, or at least even a retracement. I don't see it yet. So I think, even though I don't know, but to me it looks like we're gonna push some more before we retrace in any significant way.
Yeah.
Let's see.
Okay, so while everybody is here, William, LJ, Victor, and Samir. Hello, Samir.
Hi, guys.
Hello.
Yo, Samir, what's going on?
I want to. Sorry, Samir. You were asking?
No, I was like, how are you guys doing today? I was taking some trades, so that's why I was focused.
Smart man. Be focused on the trades.
Yeah, that's.
Before we head out, I would like to bring something up, and this is straight from the Discord, okay? So you guys know that this month is the Discord community month. So there is going to be a lot of very cool things that we're going to be doing in the Discord, and you need to be like in the Discord in order to get this information. So I'm going to share it right here, right now, in front of all of you that are not in the Discord already, so that you can potentially find yourself purchasing an account, coming into the Discord, so that you can participate in a whole month, the whole month of April, starting from today until the very end of April. We will have community events like this. So it's the 10-year anniversary of the Fivers, and the 10-year anniversary of the Fivers is not just the live stream or extra accounts and stuff like that. It's also the community. The community that has carried the Fivers over the last 10 years. Yes, it started off small, but it's grown exponentially in time. So this is an example of one of the community events that we're going to be having this month. This one is going to open up in 2 days' time on Friday, the 3rd. You would have a registration link that's going to be posted in the Discord. So this is a Discord exclusive. Just for anybody that's asking for the link, it's going to be a Discord exclusive. But here's the thing. It's a limited participation event. So it is literally first come, first serve. Only 1,000 participants is allowed for this specific competition. And if you happen to win this competition, you get a high stakes, 50k high stakes challenge for free, plus the community champion and MP Feed Discord role, which has got some added benefits to that role as well. And then there's going to be additional winners all the way down to 20th place. So first place, 50k high stakes. Second place, 20k high stakes. Third place, 10k high stakes. And then from 4th to 10th, it's a 5k high stakes. And then a 10th to 20th place is a 20k bootcamp challenge. In this case, it's for free. You don't have an entry cost or anything like that. All you have to do is have previously purchased an account with the Fivers. You get lifetime access to the Discord. Or if you haven't done that, you go and get yourself one of our accounts. The Pro Growth is on 30% off, guys, by the way. You can get yourself one of those accounts. Or even the size of the account doesn't matter. You can get the cheapest account. The 2.5k high stakes account is like, what, $22? You can get that one. And it will give you access to the Discord. So this is what's happening this month, and we're going to have stuff like this every single week. LJ has his own segment where he's going to be hosting some calls. Victor has his own segment, and he's also going to be hosting some calls. We're blowing the Discord up. We're trying to get the Discord to, I don't know, like a New Year's party level stuff where there's fireworks and all of that kind. That's what we're going to be doing this month. So this month is community month. Get yourself in there, guys. I'm going to be doing stuff like this, posting stuff like this every single day coming this month. So if you're going to be annoyed now, you're going to be annoyed for the rest of the month, because I'm going to keep doing this. I'm going to sales pitch the crap out of this. So there we go.
I think it is. It's so nowadays we know at least that's my understanding. Nowadays we know the value of communities, right? Before that wasn't such the case, but even while we have come to the collective realization that being part of a community is important and has many benefits to it, I think it's still underrated. The value that you get, the camaraderie, what difference it makes for especially trading, which is something you do quite lonely. It's not a group activity. The value, the difference it makes for you between making it and just struggling your way through it until you tap out, what community will the difference the community brings into that equation is gigantic. I think we cannot stress that enough. It may seem like only social or entertainment, and there is a bit of that, but it's way more than that.
Agreed. I mean, community is something that a lot of people don't find until very much late into their trading career. Or they happen to find a community very early on, and it ends up being either a toxic community or not a community that's really built on the fundamentals of trying to actually help people. In this case, the Fivers community is exactly that. It is a space for everybody that is a part of the Fivers ecosystem, where you can share ideas, you can participate, you can find friends, you can find your own little group within the Discord, and you can grow with that group together. I think it's just awesome, just really, really awesome.
Yeah, it's and it's completely free. That's the beauty of it. I see
we're gonna have
Go ahead.
I was just going to say, so yeah, through this month, we're going to have a bunch of extras, a bunch of bonuses for you guys through each of the calls, whether it's myself and Akram, aka Void, if you guys don't know, or Victor, Rich, all the Discord calls, all that kind of stuff. We're going to have a bunch of extras, a bunch of ways you guys can interact, that kind of stuff. Potentially some also extra hub credits and giveaways and that kind of thing going through the whole month. So definitely turn up. It's going to be a bunch of fun. That's also part of the point as well. You guys to engage, come in with all of us and find that, and also give back to you guys in that way. So we'll have a bunch of interactions, not just from us, but also with you guys in the community and joining us together and make it a lot of fun. So that's obviously we're now into this month for April. April is community month. So join in. It's going to be a bunch of fun. For sure.
Yeah. All right. With that then being said, we'll let the community carry on with Victor and Samir. I am going to say adios. I am going to see you guys tomorrow again. I'm going to go and grab myself something to eat. Will, LJ, Victor, Samir, guys, have a great day further. I'll see all of you. Everybody in chat, if you haven't already, please drop us a like, please drop us a subscribe. We really appreciate your participation here today. And go get yourself a pro growth account or any of the other accounts and get yourself into the Discord. All right, guys, I'm out. Cheers.
Nice one, Legend. See you later, Rich.
Bye, Rich.
Take care.
Take care.
Same as that, guys. It is now 5 to 9, and because we're an hour earlier than usual due to daylight savings, it's amazing because I can actually go out and eat outside and go to a restaurant nice. So, guys, I'm off to a restaurant to go eat because I'm starving, and I shall see you all tomorrow. So, yeah, thank you very much, guys, and for now, peace.
Take care. I like your shirt, by the way, Will, if you're still listening in the background. Nice shirt.
Yeah. I can't quite go out to a restaurant at this point because for me it's now 11 p.m. even though myself and Will are in roughly the same time frame, him in Hong Kong, but things also close very early here in Australia at the same time. Plus I'm 2 hours behind. So I'm going to go make some food myself rather than going to a restaurant. But yeah, I will see you guys tomorrow. Thank you again. See you guys tomorrow. I'll leave you guys in good hands. So see you guys.
Incredible, LJ. Thank you.
Thank you, LJ. Take care. Okay, so
Samir, how is the day? You ready for another 2K profit day as you did yesterday?
Yesterday, before we was ending the stream, I was talking about the long on US30 around, if we see that pattern. So I took a long here, and that was a beautiful day. I closed around like 1.2 hour, like after the stream. So amazing day for me. Secured a very nice profit. Yeah, after the stream,
after you had the what was it, the 2% win?
Yeah, it was not 2%. It was around 1.2%, maybe 1.5%, something like this.
But that's the second one. But the first one was already.
Yeah, the first one was around 2,000, which is which on 150K is.
Oh, okay.
Let me do a math here.
That is 1.7, I think.
Yeah, 1.7. Yeah. So 1.7, and then I saw this beautiful trend line, something like this. I took another buy here, and my stop loss was somewhere around here below this low, and I was aiming for this trend line that I was talking about, which was not triggered yet, and the bias was bullish already. We was consolidating, but I didn't saw that impulsive break. So that was beautiful move captured yesterday. Now I think I'm up around like $10,000. So I don't need to trade now, to be honest. I do have other accounts I'm trading, and I'm short on gold, by the way, on my futures account, and I have one CFD account also. Let me explain you why I took this short. First of all, observe this 4-hour high, which was some kind of liquidity here, and we broke that. This is the first thing. Now second thing is, look at the 15-minute nature. I don't see impulsiveness in this, so to me this breakout may be a false breakout. I was seeing some RSI here and there. RSI was also showing some divergence, so just the another confluence for me. So now we have three confluences right now. If you go to the 4-hour time frame, and this was also some kind of support and resistance area for me. So this is the, I think, fourth or fifth confluence for me. And we are also having this trend line coming something like this, sixth confluence. Now I need some pattern breakout, as my I enter from on the basis of some patterns. So we already had like this channel, and I saw this some kind of rising wedge. We broke this. I shorted it here. My stop loss is a little bit above this, so I'm expecting a downward momentum at least to this area, which is another 4-hour area. As you can see, there is some rejections happening around here. I don't trade gold, but this liquidity setup is looking way too clean, so I am taking my shot on gold today. And US 30, my bias was bearish, but we are not the NVAS is not there yet, so I'm just taking my shot on gold today. Let's see what I get on gold.
Beautiful.
So amazing day. I'm not gonna lie, in when I was catching this momentum right here on my futures account, I took a stop loss here because I was holding the trade on futures account, right? I closed the trade on CFD account somewhere around here, and when it pulled back, I took a stop loss here. And because of the end of the day drawdown and all these things, so I tried to buy here, but my position size was heavy, so I breached that account here because of the end of the day type of thing. So I'm again new to the futures. I have to make my trading plan in that way so that I can survive in this market, in futures market. So CFD side, it is you have a pro there that even if you hit the stop loss, still your drawdown is there. That is the plus point in CFD, which I like. So futures, I blew the account. I might can buy the account. So let's see. Gold wise, I wanted to see a breakout of this trend line, but we are respecting this. And one thing more I forgot to mention, the 200 EMA on the 15-minute is way too away right now from the current price action. So I have mentioned this couple of times, when we are away from the 200 period EMA. So I do like to play some counter trend trades. So let's see what gold gives me today. Yesterday was, I did secure some profit on my main account, but I blew my futures account because of the end of the day drawdown and all these things. So let's see how it's gonna go now.
Yes, it's it actually, I think it's very helpful for everyone watching, because it's easy to share when you are winning and share your profits, your winning trades, because it's easy. I mean, who doesn't want to share that with anyone and everyone? But to me, I think the one of the best service that we can give to the audience is to show them both sides. The rawness of trading, which is we lose, we have losing streaks, things go wrong,
Yeah.
We have drawdowns, we lose accounts. It's not like because you have earned a certain kind of money that you're immune to these things. You're never immune to these things. We're also still learning. There's a lot of things that I'm working on that I need to improve, and so is Samir. So is everyone. It's a lifelong journey of improving, and in there's gonna be hiccups. There are hiccups, and you trip and fall sometimes, and that's fine. That's actually part of the process, as long as you're taking notes and you're asking yourself the right question. Why did it happen? What can I do to prevent it from happening again? And what did I learn from it? And as long as you're doing that, it doesn't really matter how good or how bad things will go. You will end up improving, and eventually it will be better. I mean, if it's good, you will become better. If it's not, if you're having a really bad time. It will get better step by step. But you have to be deliberate about everything you do, right? So it's not only about screen time, spending time in front of the chart just to say I traded, my session or the whole day. It's about deliberate practice and learning, consciously, what did I learn from my mistake? Or even when there wasn't a mistake, what can I improve? There's always things you can improve. Even if you're having a good day, there are things you can do better tomorrow.
Yeah, exactly. I believe there is always room for improvement, no matter if you had some good monetary gains or this that. But when it comes to improvement, definitely you can always find something which you can improve. And trading is especially, that field where you have to look behind and see what you have done wrong or what you could have done better, so that you can perform well in probably next month or next week or whatever your plan is. So
Yes.
yeah.
So this is US 30. You're looking for the open to happen,
US
and
30 is a
then
way too clean setup, to be honest. If it was NYSE open,
Mhm.
I don't even mind to risk. I am planning to not trade on my main account, which is up very decent amount. So, but if it was NYSE, I don't mind to risk like $500 to $1,000 in this kind of setup, because it is way too clean. Like, we have level, we have price, squeezing to the upside. It means the nature is telling me that momentum is fading, and EMA is away right now. The daily is already pushed way too high. It has already taken the liquidity of these wicks here. And going to the 2 hour, we have couple of fair value gaps here which is unfilled. This leg is impulsive, so it is way too clean setup actually. But again, as my trading plan is, I don't trade US 30 if there is if NYSE is not there, which is my normal time window. But gold wise, I do like this setup now. Let's see how this 15-minute close. If it closed below this, then it's okay. If it didn't, then I'll just close the trade. I'll just take a break even or small loss, or let's see. But it also looks clean. The nature is telling me that the momentum is fading somewhere, so let's see.
Yes, I'm gonna be breaking down EU because I think that is where the action is. That is probably where everyone, well, not everyone, but a lot of traders are either already in a trade similar or in that asset. Let me switch to mine. Let's double check. Yes. So on the higher time frames, we talked about this yesterday. Yesterday was the last day of the month, meaning the monthly candle closed yesterday. Let's clean up our screen a little bit. Yesterday we had the close of the monthly, and as we kind of assumed and expected, it closed. The bullish push that we've been seeing the last couple of days was not in time to close and save this order block. That means that this order block is officially invalidated. That's a huge announcement or sign of the sellers. They're breaking bullish structure. That's a bearish sign. Doesn't mean that today, right away, or this week, or even this month, it's going to go down. But in this time frame, likely that's adds to the pressure for prices to go lower in the next couple of, maybe this candle, likely this candle, for the next couple of candles, likely to be retesting lower levels, and who knows how low that's going to be because of that break of the bearish order block that was created by a outside bar. So quite significant, I think. And if you go to the weekly, yes, we do have a bullish order block right there that we did test, and we did end up going higher. We broke again out of this, so that looks promising for the next couple of bars. That prices are likely may or may not come back to this order block, but likely going to be retesting higher levels. likely this daily order block and perhaps even higher before the monthly kicks in again, which we just discussed. On the daily time frame, you can see that yesterday was a very nice big affirmative candle telling us that yes, we did have and that goes fits in with the weekly structure that we just talked about, but we did have this order block that was created and we came back to retest it. We had an immediate retest, went away, and a second, a much deeper, which yesterday we got the conclusion of, right? That's the close, creating a new order block, confirming the first one that was being retested, and off you go. Whenever we have these moments, you know, this is the moment you hold on to your intraday trades because the daily are lining up. If you were in a long, your daily are lining up, and these are the moments you can hold them for much longer, probably after you've taken some partials, and you look for from one daily structure to the next one we have. If you look to the left, there isn't anything here, right? So you have to go a little bit more to the left. Yes, there is an order block here, but that has been retested already. It's not fresh. So automatically that means that you're going to be looking at another structure, which is a bit higher. All right, that's the daily. Let me go back to the lower time frames, and we have the in between, right? You have to understand the you know, each time frame has its own story, and you want to be trading when they aligned. However, in between, the same way as you have a trend, and in the trend you may have smaller counter trends that are perfectly tradable on a smaller time frame. Same thing happens here. The market is quite impulsive. You can see by the size of the candles, the bodies, and the fact that it's, you know, overly bullish. You know, the number of candles, the sequence, the streak, how many consecutive bullish candles before you get a bearish one. All of that tells you that it's a one-sided market, right? The buyers are very much so in control. That's something you want to take into account. However, we are getting into areas, and this is the area that I'm talking about. We do have a quasi, which this being the head, the left shoulder, the neckline, and we broke it before, and we are now retesting two structures, which both of them, they're very tied to each other. They're not exactly the same area. Let me show you guys what I'm talking about. You can see there's one below, which is this. Actually, it's an overlap between these two. Let me show you guys that. It's this one. But since we already touched the second one, you can actually go ahead and accept this as the area where you need to be looking for what price does as it is interacting with it. This is the area. If price is going to reverse, or at least for a little retracement, that's the area you want to be watching. Why? Because it has, on multiple time frames, it has it's a supply area, right? So on the H4, H2, the market is still pushing forward and doesn't seem right. Price action is telling us that buyers are in control, and as long as that is the case, it will continue. It will break these supply areas. It will continue higher, but you want to be ready for that possible reaction we might find today. A couple of things we can consider. One is the ATR. Let's look at the ATR for today, or the range of the daily. That's 71. The ATR on the daily time frame, let's bring it up. It's below here. You can read it in red to the left lower corner. It says 84. So basically we have, on average, about 13 pips still to go. And we just had not long ago, we had the headline about a ceasefire. I'll bring it onto the chart so those who are wondering about, we talked about a little bit. It was half an hour ago, a little less than half an hour ago, where, you know, let me make this smaller, right? It's not very visible, right? Well, anyways, the thing is that the market is, this is not a normal day. That's my whole point. Market can be, you know, they can get exuberant and continue to go over 100% because of that news. I mean, that's a huge news. If indeed more signals come out, more postures maneuvering from both sides, indicating that a ceasefire is really within the cards, within the next couple of days, and that's a huge relief for everyone. And you will feel it. You will not feel it. You will see it in the market. The market will have a relief rally, right? In the equities, in all the currencies as well, commodities, and you can actually, well, with oil, you will see oil going lower. But I mean, the other commodities, you will probably see a nice reaction coming off of that news. So point being is that we cannot trust the 84 ATR as being, a good indicator of what the high of today will be. But even if we just mark the 84, let's do that. 84, that puts us at 1636, 9 on EU. Let's do that. So, and if we go to the lower time frames, that gives you an idea that the market just on 100% ATR is able to reach these levels. So the fact that it reaches it doesn't mean it will necessarily invalidate these levels easily, or I mean automatically. It can still use them because it's an H4 structure, H2, so that means it has a full 4 hours to go squeeze, and then we can assess whether or not this is going to be kind of a top or not. So it is quite, if you look at the hourlies, you can see that the market is, there's nothing here telling us that the market is getting ready for a reversal. This actually, we can take this off already. That's no longer the area that we're looking for. It is the one, the overlap of these two between the yellow lines, the one that I indicated before. But you want to be, you want to wait and read price action, right? It's not because there is a level there, an area from the left, that is going to reverse there. Not necessarily, not at all. It's price action that needs to be read. So on the 5 minute, where do we stand? This would be the head right here, and that makes this automatically the neckline. That's where you want to be watching for price to break, to indicate that we have a possible retracement on our hands. Not happening right now, and before as well, it wasn't happening. You can see that was the previous neckline when this was the presumed head. Didn't break it, and that's why I wasn't going short yet. And actually, I'm not ready to go short at all until I see this quasi being broken and price sets up, favorably for us to take that possible short. In the meantime, to me, this market is just going to continue go higher. You can see it as well. This is the candle that after the news, that's a huge candle, and it hasn't been negated. It hasn't been invalidated. If anything, price came back to that order block, actually both of them, and it's just confirming that was just a retrace and prices continue to go higher. I can see this going on and on for a couple of hours more. That means that we're likely to just continue and reach, I think 20 pips from here is well within the cards. At least 25 is, I think, even more plausible, at least. That's my take on EU. Let's take a look at gold, perhaps. All right. See, we have the U.S. Market open in 11 minutes. Samir is on the lookout for us to tell us if there's any opportunity there. We have broken on gold. We talked about that. Gold has been, after touching that weekly, from that moment on, gold has been positioning itself, having a very bullish, not very, but I would say solidly bullish posture. And yesterday we had that breakout that now it has a continuation move. There isn't really anything here on the daily for me. On the H4, we finally broke and created a quasi. So that means that if the market comes back, right, that's the established downtrend. If the market already indicated by taking out this high that the quasi is activated, it may reverse before, it may just continue without reversing or reverse from a higher level. We don't know that. It doesn't, the fact that there's a quasi there doesn't mean the market is going to go down. But if it does come down, it will give us a lot of opportunity. And let's measure it right now. We do have a, let me mark that. We do have a fresh order block here. Not fresh, an entry order block on H4. That could be something for the future. Let me for the future. Let's see that. That's one entry and a second one here. Those are the only two areas that I'm gonna be looking for longs if market retraces into them, because that's how the market reverses. The market, well, sometimes it goes in a V shape, and that's fine. Well, those I won't catch. But a lot of the times, price will have this kind of a movement, and it may not always be that beautiful, that textbook of a quasi. It might be something like this, that, you know, one side is much longer. Let me give you an idea. It may not be as symmetrical, but it doesn't make it less of a quasi. Something like that. That's what I'm seeing, right? The elongated in terms of time on the right side, but it's still doing the same thing. It is still breaking the neckline. And if it comes back soon, that would be a great area to be buying. And then either putting your stop below that area, the structure of the left that it bounced off, or either the head, whichever, you know, suits your risk profile better. But these are the two areas that I would be looking for. Not this one, because now those are regular, ordinary order blocks, but the entry order blocks on the quasis. And we're not there yet, so there isn't a lot to talk about there. We do have a fresh structure here, and if price comes back within a number of candles, then that's also a nice area to be going long from. Not on the 2. The 2 already made its move. You can see that to the left. We not on the 1 either, so it will have to be something new. It will have to be a new structure that is, you know, to be formed, hasn't been formed yet, that we could be trading. But this is the area that I'm going to be looking for in the next couple of candles. You know, this is the first candle after the creation, so a couple up to 10 can be looked at and looked for that possible reversal in gold. Let's take a look at some other pair. What is everyone in the chat doing? We have someone asking Samir some questions. Yes, Samir is a very good trader. I don't know if he's hearing me right now, but he is a very good trader. I can attest to that. I'm just playing there. You seem to be frozen, Samir. All right, I think we lost Samir right there. That was great timing on my part. All right. Don't forget, guys, if you want us to look at any pair, any particular pair, just let us know in the chat, and I'll gladly take a look at it. This month is a community focused a month where we're going to be focusing on the community, Discord community, that is. And if you haven't or you haven't been experienced our community, you know, give it a go. From your dashboard, check it out, and you will see on the left side there's the Discord icon. You click on it, you get your entrance, and, you know, spend some time there and see if it's something for you. I'm pretty sure you're gonna enjoy it, having you know, spending time with people just like yourself that are working every day to become better. Some are, very progressed. They're very already very far in their progression in as a trader, and others are just starting out. So there's, for everyone, there's someone there for a conversation, to learn from each other and to become better. All right, so we have pound Aussie, someone asking pound dollar, Aussie, dollar yen. We'll take a look at, let's take a look at the cable. All right, so on the higher time frames, we do have a, isn't this just beautiful? Look at that. Look at how the market comes and touches that order block and then comes back. That is just beautiful, beautiful reaction. What I'm talking about is that thing there, the fact that that reversal happened after reaching that weekly order block. That's not a coincidence. That's the order block at work right there. Okay, so on the higher time frame, very quickly, we don't have anything. The market created and reacted nicely from a monthly. That to me tells me that it needs something, maybe this order block, maybe a weekly, to bounce back, or a newly to be formed structure. So that means it looks bearish on the monthly time frame. The weekly, in the meantime, as it has a different tone to it. You can see the quasi right here. Let's take a look where the quasi is. To me, this is the quasi. There. That's the neckline, was broken, comes back, and retest. This is one structure it had to retest on. Did not at all react to it. And then went on to the second one. Right there, and bingo. You can see that reaction. That alone, that reaction on its own is enough to profit. That's 148 pip. I mean, you might not get the downtick, so to speak, but that's plenty to be had there. And the move isn't over yet. Okay, so we can move this to the side because that's no longer relevant. We do have a fresh order block and a reaction of the entry order block, so we can go to the lower time frames. And if the market is going to have a push, right? If the market is going to have a push from here on, then what we should see is that in the next step, in terms of the time frame, we should have you should see quasis, not all the time, but more often than not, you will see the market break the structure. You will see coming back for that possible right shoulder. It may or may not be valid to be traded in my book, but it's still a quasi, it's still a reversal pattern, and reading it will help you position yourself in the right direction to begin with. So one of the things you can see is that the daily order block, this is the presumed head, left shoulder, that makes this the quasi line on the daily. It is scary to trade with the situation in Iran. I agree, my friend. But it depends on whether you are, what kind of trader are you? Are you a swing trader or are you a scalper? And it also depends on how much you are risking per trade. If you're risking, on the low end of the spectrum, you can more easily accommodate, the heightened volatility. If you're really pushing it already from the get-go without volatility, you're already pushing, max risk. Then of course it can get scary, as you described. So there are a couple of things you can do. One of the thing is, for example, you can let the expansion of the daily ATR be your guide as to your volume that you're trading. Meaning, if let's say a month ago, right? If a month ago you're trading and the ATR is, let's say, 50 pips of any asset, let's say it's EU, 50 pips a month ago or 2 months ago, and you're trading you're risking, I don't know, you're risking 0.5%, or maybe you're risking 1%. If the expansion, if the daily ATR is now, instead of 50, it's over 100, that gives you a very good indication that the market is moving differently, moving more, making bigger leaps, bigger steps. So one of the things you could do is, the higher the ATR is, the more conservative you become with your risk. The lower it is, the more risk you can take, right? That's just one idea, just overarching over the whole risk management. The other thing is, by basing your stops, basing it on the chart. I'm not having fixed, like, nothing against it, but if you have a fixed stop loss, let's say 20 pips all the time, guess what? If the volatility goes up, that 20 pips is likely not going to be enough anymore. While it was before, you might need 30 now, right? So if you have a fixed number of pips, you might let that as well, use multiply by a factor, the same factor of growth that you see on the daily ATR difference, right? So let's say the daily ATR went from 50 to 100. That's a factor 2. That means that if you have a fixed stop loss, you should also go from 20 to 40, right? But because if you don't, then in comparison, your stop loss is going to be very easy to be hit. So expansion, not only the risk management, the profile, how conservative or aggressive you are, but also the actual stop loss can be adjusted based on an ATR. And that's one thing. And lastly, the other thing you can do is you can make sure that, let's say, before, like in my case, what I use for stop loss are actual structures in the market, price action, meaning some people use a swing low, I use order blocks, right? So my stop loss are always based on, order blocks that will defend me. And if they fail, then I stopped out. My trade is stopped out. What you can do is bump the time frame of your stop out or your stop loss time frame one notch up. Meaning, if you're on maybe the hourly, you go to the 4-hourly. It's a big jump, but it's a safer jump, right? The market, the trade will last longer. It will affect your risk reward ratio, but you're gonna be safer if you think, a lot of things are happening, big news coming out. You wanna switch that higher time frame where things will, for your stops, because it will be safer for you. Basically, the H4 is not as likely to be taken out compared to an H1. So all these are the things that you can do that make it less scary, Abrado, dull flincher. So yeah. All right, let's continue with the GU. We have, by the way, the market just opened 3 minutes ago. Let's take a look at, we'll come back to GU, but let's take a few minutes to look at the NQ and see where the market is. We have the daily order block. There isn't the daily time frame. There is an order block right here. Not relevant right now, but that's something we can use. We understand that the market left an order block behind and has the tendency to go look for the next one. So in the coming days, you can expect price to be retesting or at least approximating this order block, this bearish one that we see here. On H4, we don't have anything here. There is an order block. There's actually a nice quasi that price did not come back to retest it. That's the entry order block on the quasi right here. This is the neckline left shoulder head. And there's also another one here that coincides with the daily order block. So that's a very nice area for price to come back and bounce off, right? Maybe later, maybe after hitting this, who knows, come back to bounce off of that. You can catch these big move. If there's going to be a nice retrace for continuation later, it might use these structure, although they look very extreme now. But things happen, things do change very quickly geopolitically, and from one week to another, and even a few days to another, and the sentiment can switch completely. And this may not seem likely now, but maybe next week that price could be there because whatever happened in the market. Okay, so that's higher time frames on the H2. Let's take a look. Do we have the same quasi? 1, 2, 3. Yeah, so that means that we have actually a couple of areas that we can look at and trade them with confidence because we can refine them. This would become an H2 as well. And this is all preparation, of course, for if and when price comes back. So we're not going to be able to use them right here, right now. All right, so these are the areas, and you want to be trading the overlap. So instead of trading the whole H4, you trade the overlap of the H4 and the H2 or H1, whichever looks better. I like the that outside bar. You get that a lot with the open. Nice bouncing off of that, breaking and then break and retest of the 200 EMA on the 1 hour. This is the 200. That's the 50. All right, so what do we have? What do we have currently? Do we have something here we can trade? We do have price just went in and retested that structure. That is a 2 hour right there. Let's take a look at the hourly. Coming back to retest that. Nice, very nice on the 50 EMA on the 15 minutes. See that, how it plays along with it. That's the open. This is the opening bar. So this is the opening range so far. You can use this to indicate in about 9 minutes. You will see where the opening range is. This is kind of tricky because there is a little quasi here. But on the backdrop of positive news, right? So this is on the 15 minutes. That tells you something. And this would be the head, the left shoulder. That tells you that this is the sell area. Although the sentiment is, bullish, the opening range looks bullish. It's expanding to the upside. So you want to be, this area is kind of important, not kind of, it is important. That's the area that needs to be broken for the buy area or the buy setup to be effectuated. Right, so you have the 3, the 2, the 1. I don't see anything to the left. This is the news that came out when Trump said, of a ceasefire. This looks very, very bullish. I don't see a reason to short from here, even though there's a 15-minute there. I don't see it. So I would be hesitant. There is on the 5, but the 5 is even larger. That makes it weaker. So we'll have to see how it goes in about 7 minutes. In the meantime, we can go back to GU. All right. You do 1/4 to 0.5%, which is, well, it depends on your strategy, but it looks conservative. That looks good. Yes, you should adapt your stop loss. If you are if you are getting that feedback from yourself that you think you feel it is scary, if you're experiencing that means it's either you're oversizing, it's getting too often too close to your stop loss. There's something that makes you say what you said before, that it's scary, and you should listen to yourself, right? That's why very important to have these journal entries where you talk, you look at your performance, but also how you feel and what you think and what you could do better. And if this is the feedback you're getting from yourself, you should definitely do something with it. Do something to lower your risk, not necessarily stop trading, but lower your risk, because there will be more times where in the future. There'll always be time in the future where it looks scary, but there's still plenty of opportunity. You just have to adapt to it in order to be able to use it. Cartoon, I don't know if you're asking the same questions. You mean our prop firm, if our prop firm is genuine? Yes, it is. I mean, there's a lot of traders who can confirm that. On Trustpilot, we have thousands and thousands of reviews. We have been the last year. I think for the last 2 years, we've been called out to won awards on prop firm match as the best prop firm, the most we had like 3 or 4 awards for different kinds of aspects of our prop firm. So it's an award-winning prop firm, the leader of the industry. So yes, trustworthy. Take an account and test out the possibilities. Okay, that's nice. It looks quite nice. I mean, this looks like it wants to continue. You have that 50 EMA on the 15. Yes, there is a little quasi here, but if you go dig deeper, you see that there isn't a lot for price to bang on. Only on the 15-minute and on the 30, it hasn't really broken any structures. There's that outside bar. You have that a lot of the time. And that will trick people into thinking we're going to go lower. But the fact is that we made a higher low. That tells us that the market is getting ready, likely to continue higher. It's looking positive, and it's likely to continue going higher. So we'll see. Let's see, what else do we have? Okay, so that's perfect. On GU, we still have about 90 minutes to go. On GU, we were looking at on the daily. There is a quasi. The market hasn't reversed yet on the daily time frame, but it has used a very clean area, which is this, for its reversal, and that's very interesting to look at. While we have that, there are 2 entry order blocks on the short that you need to be aware of. I don't say, this is quite strong and it can just continue without pausing, without retracing. But whenever you have these order blocks, you will see that market will at least react to them. Maybe it'll be a reaction of a 1 candle on the H4, maybe a few. And even though it may not be a complete reversal, that can still, if you're not aware of them, that can still be quite a big move, and you can profit from them. And if you are in a long position, you're swinging, taking profits of partial profits right at these levels is not a bad idea at all. All right. Right, so that's the H4. We do have some supply area coming in soon, but not really something that I can trade. This is a fresh order block, and these entry order blocks are, we need to reach them first, and then we can start building the case for a possible retracement, a possible continuation of this trend, maybe into lower levels, or maybe just coming back to some entry order block on a smaller time frame within this area. But that's it. To me, there's nothing here for me to do. I need the H4 to be lining up, and the H4, I would be going long from this area, and I would be looking for a possible short or taking profits here at this area. Those are the 2 areas which haven't been tested right now, so there isn't anything I can do about it. I don't go to lower time frames once I know that, whatever is, whenever the market is telling me that we are in the middle of 2 big areas, I will typically just wait for the market to give me more information, more data, then I can either, it goes to either one of them, and I get a trade from there, or it will create some other structures in the middle, and I can use that. But in here, I want to abstain from trading in the middle of any of two big areas. Let's take a look at gold. We have someone asking, Own Brands asking if the bull run on gold today is valid. Yes, I think so. Why? Because it is doing it at the right place, right? If it was doing it just randomly, then I would put my I would have my doubts. But it did do it on look at on the higher time frame, on the 50 EMA of the weekly. That was where the market reversed. Not only that, we have a order block on the weekly as well that the market reacted upon. It wasn't very fresh, but it is, in absence of other indication, that's a great area and a good indication that the market is actually reacting of demand zones and not just reacting randomly. And that's a good thing. I mean, that's how you can recognize that a move is likely to continue, because it has higher time frame backing, just like we just indicated on the weekly. The daily order block, what I do like about it is that, this move is a retracement. The current move is a retracement of the previous move we had, right? So, and in between, there isn't anything to the left that I say, is enough for us to expect, market to continue going lower. I don't see anything here until we get to this area, which is much, much higher. It's about 5,100. You could argue this is the next level, but on the daily time frame, it's not even visible as a level, right? The level is a bit higher. It's actually the order block we have here on the daily. So to me, yes, it's very valid. We do have the possibility. There is a reversal pattern that we could do, could come back to retrace from, but that doesn't, take away the fact that this daily, has all the signs that the move is something that can last much longer than just one day. Okay. Let's see. That's gold on the lower time frame. I would wait for the market to come back to these levels to go long, based on the quasi and based on the fresh order block. I would be looking for price to come back, and if I'm going to take a trade, that's where I would be looking for a long. Right here, it is, breaking out of a previous high. Not my kind of a trade, but that's just me. Let's see. Penny, someone in the chat saying, yes, I'm not part of the support team, so I will not be able to help you. But yes, support is the right people you want to be talking to. You can get them on the website, in live chat, as well as with through the email help@thefivers.com. On the Discord community as well, there is a section for support. So there are, a plethora of ways to get in touch with us and, clear those difficulties you're having, and get things going, get your foot in the in the door of the trading the markets, and getting closer to your financial goals. All right, let's see, on EU, do we have anything new? The 5-minute level is still holding. Did we create a higher high? All right, so does that change anything? Yes, to me that changes. Let's measure this, the high. They're equal high, they're perfect equal high. That means that this becomes the neckline, and that becomes the left shoulder head. Even though if they're equal, this will then is now the neckline. So this is what I want to be taken out. We can actually put an alert there. If it happens while we're talking, it will alert us. Let's take a look at the other pairs. I think it was pound Aussie and dollar yen that were requested. Let's take a look. Monthly. Let's switch back to NQ very quickly. So this is the opening range on the 15-minute. It is also on the 13, of course, because it hasn't broken. This is the area you want to be, you want to be going, looking for that. That could be an indication of where the market breaking this range would be, a fair indication of where price is likely to be continuing to go for some time, right? If it breaks this, it's likely to continue with or without the retests for the rest of the day, or at least good part of the day. So that range on the 15 or in the 30-minute and eventually on the hour can give you a good indication where the market wants to go and how you should position frame your setup. Very popular and very effective. It's not all the time, but I mean, it's one of those things that can help you increase your probability if you're aware of what the opening range is and what it has done, how it has reacted, to it. Let's go back to the pound as we were looking at that before. Not EU, pound Aussie, the monthly. Quickly, there isn't anything here. Nope. The weekly, we broke a bearish structure and we actually retested that. See that here, broke it, retested. That's a nice move. That's a quite nice bullish area. I like that. That looks us. Oh yes, I do. Oh, look at that. Oh, look at that. Look at this. Bingo. That's a nice bearish structure. We broke it, came back and retested. That's a very nice looking setup right there to go long. That is. We do have these entry order blocks, which are much lower. These are the extremes. These are based on the entry order blocks of the quasi. But this is a nice break and retest looking candle. That tells us that the chances of this continue higher is quite good. And if it does that, do we have a target? We have the next target, which is, they're not fresh anymore. But I mean, in absence of any other structure, you can use them. They're not very significant, but as I said, in absence of anything else, they can be quite handy. All right, so I'm going to have them on because this is the daily. Let's take a look on the H4. What do we have here for a H4? I like that. A fresh order block here. That tells me that I can take that long on the lower time frames as well. I like this. I really, really like this. H4. We came back for the immediate retest. H2. Nothing here. Nothing. Oh, I like that. Look at this. You see these order blocks being retested. See that? You have an H4 based on the daily. You have an hourly. That's where you want to be. It already happened, I know, but I didn't see it before. This is the area you want to be looking for your entry. So many opportunities all the time in the market. This is where it's created. You had 1-2 hours of price coming back and giving you opportunity for that long. And if you go, that's enough information to go to the 5-minute for me. And if we go to the 5-minute, you would see that this is the neckline. here it is. That's the neckline. Let me double check. Yes, on the 5-minute. And the market breaks it. So after the break, that's where you start looking. And let me change that. All right, so only interested in the 50% retracement. And you go back and look for these entries. That's 1 on the 5-minute. 2, and that has overlap. So basically you have 2 entry order blocks. 1 did get a reaction. Eventually it was it was broken. All right, that's 1. And the second one wasn't actually retested, it wasn't reached. But depending on the spread on this pair, that could be enough to trigger your entry. Right? Because you have to take into account with EU, I don't have to do this because EU is, at least on the 5 has a 0 spread. So, it needs to actually go there and touch it. In the case, this is a less than a pip, and I think, or could be a pip. I think the spread on pound. Actually, I can check it, of course. Our spread on pound Aussie is 2.1, which is very sharp, very tight. So that means that this is you can consider this to be has reached the area. Okay, so that means that this isn't actually a nice area to. If you see price reacting, you when this is either broken or before, you can use them. Put your stop below, and either target the structure high or something on a bigger time frame, which would be this to begin with. And that's on the 5-minute, but you could have had it on a different time frame as well, which on the 3-minute it was also visible. We have enough. 1, 2, 3. Well, it's actually this one. You can see it on the 3-minute how the market came and reacted upon it. There it did touch it, even though there's that spread of 2 pips, because this is a cross pair, of course. All right. Yeah, that's a very nice trade. I don't know if you're in it. Who was it? It was Matthew. But I would definitely. Actually, I think this is more than just an intraday trade. So if I'm in this trade, I would target the next daily structure. Since there isn't any, I would target this. Well, there is one here, but there isn't anything between now and this high, so this would be my TP. Oh, it would be there. That would be my TP. A part of I will close a portion today, maybe overnight, and then leave the rest to run for this target. Same thing, same. If you got in, let's say you got in somewhere like there, something like that, I would target the target that I mentioned before, which is this, right? Which doesn't seem like too much, right? Something like that. And the rest of the trade, I would let it run for this target for a almost 10R because it's, if you take half off, it's going to be 5R, right, on the whole trade eventually. But that's how I would use this. Nice one. Actually, we have come to the end, so let's wrap things up. Let's go back to EU a little bit and see if there's any signs of a break of structure. There isn't. It looks very strong still. I have no reasons to believe that the market cannot continue to go a little bit higher. I think it will. We'll have to see. Maybe it will break structure and from now on starts going south, but doesn't look like that's in the cards, at least not yet. And Q is still in that opening range, so you'll have to see and wait whether the market holds the range and continues to go higher, which I think, based on the sentiment and the news of the ceasefire, is more likely to happen. But hey, we have seen the headlines how one party says one thing, the other party comes in, denies it, and we're left with a bunch of fluff, not being sure, if what is the reality and who is saying, describing things accurately. I would like to invite everyone for our community. Remember, this month is Community Month at the Five, where we're celebrating 10-year anniversary of the greatest prop firm, and we want to celebrate it with you. So come in our community, take a look at what we have to offer, what great value community can bring to your trading career. Join us. It's completely free. Just buy an account with us and you will get it for free. It's in the Discord, in the platform, in the dashboard. That's where you get the Discord platform. Click it, get your entry, and start enjoying all of these perks of being part of the Fiverse family, all for your benefit. All right, that's it for myself. I hope to see all of you tomorrow again, same place, same time. Take care. Bye bye.